Good morning and welcome to an amazing Wednesday. Getting started a little bit later, so the market's already open, but it is one heck of an opening already. Just picking up right when we left off yesterday, so looking really good. Just a quick update on a couple of things that I have noticed already this morning. So Express, they set their earnings really early this morning. It was what 7:30 Eastern. 6:30 here Central Time. So super early there. But they beat expectations. They did really well on their earnings. I mean, losing money, but still overall looked good. And oh man, look, my my numbers here are not updated. I am in a maybe it's because I'm in paper money right now and not because I'm in live trading. That could be the reason why. None of my percentages are up right now. Well, it looks like I might have to change my account. So give me 1 second. All right, guys, it's loading up. Give me 1 sec. I'm not sure what wasn't working there on that screen, but I'm getting the new screen loaded and I will bring it right back up. Sorry for the delay. Looks like I got one person that has logged in watching. Good morning. If you are the person that is logged in watching, if you are, why don't you please give me a like and drop a comment with letting me know you're here. That's all you gotta do. That's all I'm asking for. I need some comments and likes. Just say hi. Say good morning. All right, let's see. Here we are. We are back. Boom. There you go. All right, we are back live. This is the chart that everyone's used to seeing. All right, let me see what we got here. Let me zoom in here on Express. I've got it in the bottom right. It peaked up at 465 early this morning and it's dropped down a little bit since and still at 27%. T triple Q had a huge opening right there. Or was that last night? When did it open? No, it actually opened, well, it opened up, but then it's been going down since. So that's a bummer. Only up 2% right now. GameStop, let's see what it's done since opening. It's gone up since opening. Look at that, 281, 13% up. AMC, I think, is going to be the big one to watch today. That's why I've got it here on the big screen. Had a huge day yesterday, and I think we'll have another huge day today. It opened right around 11 after closing at I think 10:50 last night, and it is now at 10 or 11:47, up 9%. So it is up a full point from its close yesterday at nearly 10%. Tesla I've got over here in the corner. It was up above 700 for a moment this morning, went back down, and now it's going back up again. So pretty good. Let's turn the news on and see what we're watching. Quarantine stocks.
Yeah, and I think the one thing that I think it's interesting when you
DraftKings
talk about
may have.
addressable market, maybe some analysts right
I
now,
think
because
if there's one
DraftKings
that is
actually
sort of
isn't in every
getting in
state
super early on
where
this
gambling
pandemic,
online is
it's
legal.
the
So
DraftKings.
maybe when right now
And
analysts are
rather
trying to look at
DraftKings, I
addressable
do
market is
a little
if
bit
they
of
can
regret
get
not doing so.
into every state where online gambling is currently
So
legal,
looking like a
then
good
you know
stock. And
more people out here, and maybe
look
some
at
people
AMC,
now are
guys.
starting to
It's
talk, okay, well,
just
let's not just do
it's
that.
good.
You
I
know,
knew
let's maybe
today
put in
might be the
a
day
two or
after the
three
last
step
couple of days
growth
just
model
really pulled
here.
that
The
momentum.
first phase being,
There
you
it
know, they
goes up
get into every
17,
state where it's currently legal, and then
7.6.
the third phase getting
We
into, all
might
right,
see it
well,
get over
you know,
12 here soon. I've got
starting to
my
spread their
nearest
country more
seller,
market
I
share.
think at
You know, you're kind of slowly but
14.99.
surely building up,
Yep,
you know,
14.99,
higher
46
sort of
shares. I'll be
runway for
selling
this
if it gets
company
that
of
high.
getting into states
Don't
where
know
currently
if it
legal,
will, but if it does, that'd be
seeing
amazing.
more states expand, you know, into that legal
Express, my
territory,
seller
more
grid,
people
again with
being
Express, my seller
actually, you
grid
know, going in there and
740.
capturing
Still
market
a
share.
long ways
I
away,
think a
even though
differentiated
it's had a good
model, that's how
opening
you
so
do
far.
that.
T
All
triple
right,
Q
Cruiser, let's
is on
switch
its way
gears here.
back up.
Let's talk a little
That's
General
really awesome.
Electric.
Let's look at the
All right,
overall
GE's got a pretty interesting story out. The
market
stock's
here.
down 4% though,
Let's see what we
as
got.
there's a $30 billion deal with AirCap.
I'm going
So
to turn
this
their
is
volume down just a little
pretty
bit.
bizarre. There's a
Let's
lot
see.
of things here that also involve
NASDAQ up another 1%. Dow
this
opens up at about 1%
stock split
Dow.
too.
I don't know.
Let's
To me, I don't doubt it's going to hit another
Well,
high
one,
today.
they tightened up
That would be
guidance. They reduced
awesome.
their guidance a couple times
NASDAQ
today.
still a
First,
long ways to go
they
before its high. Still about
reiterated
1,000
the
points off, but
15 to 20
still,
basis for
still
September
really, really good
earnings
opening.
season
S&P up
guidance or earnings per
0.75%.
share.
It's open, so not bad.
Right, markets certainly aren't going to like that. I think maybe
See if we
initially
got any
people
others
were
on the
kind of
watch list that
hesitant
are doing really well
going
so
in the
far
direction of,
this morning.
you know, using the sale to
Apple
you know,
actually opened down, which is a little odd.
increase their liquidity
Bumble
position.
has opened down.
I think right now the
Bumble's
market
earnings
was
are
kind
also
of
coming out
either liking
this
or
afternoon.
selling off.
It's very
And
interesting that they're going to have their
the
first
US
earnings report so
utility
soon
energy
after
unit
uh, they went
increased
public. They went
prices
public just on
relative
the
to the
11th of last
gas
month,
business unit.
almost
That
exactly
was
one
the
month ago,
business that really didn't
and
perform
they're
well.
already having their first
Something
earnings
like the
report.
industrial
So it'll be
business
interesting to see
out of
they
those
what they do. I'm a little surprised
is
that
what
like
the
most
industrial
IPOs,
sort of
they surge at the
you know
beginning and then they fade.
basis.
Surprised it
And
hasn't gone
selling off
back
the
since it faded.
electronics unit, I think maybe
Uh,
that is
I
a
do have
little bit too
a
much
few shares of
leverage
that.
finance,
Nothing
especially for
crazy, but
industrials.
I think it's a
Sort of
pretty good
enables the
stock
business
overall, in my
to
opinion.
monetize on that
Um,
business as well.
so what else do I have?
I
Cost.
think
Cost up. Ooh, cost is up
I think this is where
36% this
maybe
morning.
investors,
Man,
you know, at first like the injection of
for no
capital,
reason at
you
all.
know, the balance
But
sheet
that's
is
amazing.
what
I still
brings
have
them to
decent
pay down debt. But
costs.
now, you know, they don't have the
Naked,
long-term prospects of what they mean. I think
it's
there's
up
still a
1%,
lot of
but
value
nothing crazy.
in there
Riot Blockchain up
because
another
the
10.
Yeah, okay.
MicroStrategy
All
up
right, so
3.
GE,
So pretty good
you
opening
hadn't
for a
got to
lot
see
of
this in a while with
big
a 5%
high growth
selling.
stocks.
Doesn't really register on the
Oil
charts so
went
much.
up and then
It's
has
holding such a
dropped
nice
here just in the
little
last few
trend here.
minutes.
There's a
Nothing
little
crazy.
pullback today.
Let's
Looks
see.
more like the
Bitcoin's back up
excess
to
of the trend
56.
lately. Pretty amazing
56 for
that
Bitcoin.
that is now the case for
Yeah,
General Electric.
or
John, thanks
56,000, I should
for the
say.
rundown here on what is this
10-year
morning.
Treasury. Let's see what
Some
that's
earnings
looking
chat,
like. It is
some
actually
news,
down.
contributor on the
That
team there today.
explains again why
Still have stocks
we
low.
are seeing
Nasdaq is up.
the
Has lost a little
some
bit,
of
but
these
no
stocks
sign of its momentum.
going up.
Still a percent
So
top.
I hope
Indices
that
are
Treasury yield
right in line with
continues to go down.
expectations.
We're
Still
seeing
leading the
a
Russell,
very big
now making
swing
a
in
stand in a flip-flop of
finances and
early leadership.
options.
The small caps
I
up
think the
1.9%.
bet is
The now
interest rate,
reopening trades
the
were moving
market
lower as
between
relative stocks
restrictions being
have the
lifted
same reopening.
and
Gold
the
is about the same here. At the top of the list today, we've got
the
some
health and safety
real estate and
protocols
energy names as
changing
well as a few tech
with the
stocks.
vaccines and
Okay, when we come back, let's do some
going into
trading.
the
We're going
fall,
to get a few
summer, the
homes
spring of the summer.
forecast and
I think the
find
bet
some
is
examples
a
of
lot more
marks in
homes
the
will be
market.
listed and then a lot more homes will be listed. That will see imbalance of refinances. And so uh, they'll still be safe with the number of sales and loans, even with those going up. I don't know if we're quite there yet. I think we're going to see a little bit more of a squeeze with home prices here, probably through the end of the summer, would be my guess. Anyway, while I'm rambling, AMC is surging, which is way more to me. It peaked here at 12. It is now at 12.1. So look at AMC surging. Look at some of these. Look at some of these buy order. Tons and tons of which is awesome. None are super, super high to 3,000. Nothing super insane. If we start seeing that, we see tons of green over here with high numbers in the money, then you could see this stock going just super, super back to the moon. Awesome. GameStop doing well, 290. Yeah, it's 100 or well $90 above the price I sold stock at 2 days ago. So good for all of you guys that are still in it. Express going back up. Look at Express. Finally, it dipped because probably some people saw the earnings report and sold. Now it's going to go back up. That's a great day. I would love to see it get to $5 or $6 a share. Let's see what's CNBC on these days. It's just not on. Let's hit play. Maybe that's the problem. No. All right. Looks like we're watching TD Ameritrade. I don't know what's going on. Futures now. Never watch futures now. All right. Ameritrade it is. They are pretty good. Problem is they just have a lot of what? No broadcast. I was just watching it. Ay, what's going on? All right, CNBC is a commercial break. Of course they are. They always are. And then TD Ameritrade, I get. All right, here we go. We're back. All right,
Just keep on your radar following the opening bell. The U.S. is planning to buy 100 million additional doses of Johnson & Johnson's COVID vaccine, according to NBC News. President Joe Biden is expected to announce these plans today during a White House meeting with Johnson & Johnson and Merck. J&J's current deal with the U.S. government is to provide 100 million doses by the end of June. The U.S. has already shipped roughly 3.9 million doses, with plans to send more than 16 million by the end of the month. Tilray is higher after receiving approval from New Zealand's Ministry of Health and Medical Cannabis Agency to launch its medical cannabis products. The cannabis company is the first to be approved for medical distribution in New Zealand, and its products will be available only with a prescription. The other cannabis stocks, Aurora Cannabis, Canopy Growth, Afria, and Kronos, are also higher on the day. And Roblox will go public through a direct listing today for $45 a share under ticker symbol RBLX. The company nearly tripled its payouts to developers last year, with revenue just shy of doubling. More than 1,200 developers made at least $10,000 last year through virtual sales in their Roblox games. After postponing its IPO plans from 2020 until now, the company is sitting on roughly $30 billion valuation.
All right, guys, Roblox. Can't say that I know enough about the company. Other than it seems like it has a lot of demand. It's going to start listing today at 45. I mean, if I get in there at 45, but yeah, I might put in an order at 40, 47, 48, something like that. And I don't know. We'll see. We'll see what happens here. I think there is a fantastic opportunity to make some money on Roblox. I really do. But I'm not saying that it's a long-term thing. It might just be an IPO surge, which of course happens. So we're gonna get in, know that there's a decent chance that next week it's gonna go way down. So again, that's just what I'm doing. It's not necessarily advice for.
They need to return to that, and I think they will. Again, these are longer term turnaround issues, not like in the next quarter or two. But if you're a patient investor, we think Intel is going to win in the long run. Oh, and the final thing is they're making much cheaper chips than NVIDIA that can sort of do the same thing. And I think whenever, especially autonomous driving systems are rolled out, price matters. And I think Intel has a shot in that marketplace.
What do you want to see for Intel? What are the milestones that we need to set up to check on a company that was, as you point out here, missing a lot of those milestones as far as production timelines go in the past? Like, what should we expect to see by the summer from Intel? Any announcements about products, a pickup in sales? What to you is going to be kind of like the aha moment that this company's back on track?
Sure. Well, I think a focus on yield, and that is, or product margins, I think that is extremely important in, just going forward, especially to investors. We're here to buy companies that make money, and by gum, they have to make money. Now, they need to invest and get their engineering correct. And I think announcements about that, about the plan forward, are key, and a timeline. And I think this new CEO knows he's going to be held to that timeline because of the prior slips of other CEOs that went before him.
So Intel at $64 and change right now. It is getting pretty interesting just from a kind of a layman's technical perspective. We're at a level that we have seen over the past year. Intel's high for the last couple of years around $69. Kim, what do we think is a reasonable kind of place to view this company as going when, there's been so much back and forth in this stock now? I mean, even before we broke $60 back to 2018, it was basically between 58 and 45. Are we really going to have like this big breakout moment for Intel, or where do you think we could go?
Well, I think the whole constrained nature of semiconductors is going to push this company well above the $70 mark. The car manufacturers are kind of the poster child for bad inventory, but I think that has highlighted how constrained semiconductors are. So I think prices of the product go up. That will drive earnings, and that will drive the stock price.
Okay. Hang with us because you got another pick in a very different area I want to talk about. Let's bring in Tom and let's trade Intel first. So, Tom, all right, at least so far, when the market is down, Intel has gone the other way, and now we're pushing up at the highest we've been throughout this recovery, and that goes all the way back for Intel's 1-year 52-week high. So how do you want to trade it?
Yeah, if you take a look at it, it has failed at about 63, 64. Over the last few months with that high 52-week high about 65. So how do you play it? Using the option market where you're putting less capital to work for maybe a bullish stance in here. I just went out to the April 23rd weekly series, Oliver, and why did I pick that? Well, they've got earnings that week on the 22nd of April. So if you expect maybe Intel to run up into that, I'll look at buying a slightly in the money call vertical here where I'm going to buy the 63 strike call, and then against it, to reduce my initial cost on this, sell the 70 strike call against it, creating this bullish call vertical to the upside. Pay roughly about $2.30 debit. It might be a little bit more because the stock has moved higher after the open. But if you pay $2.30, that's going to be your risk on this entire trade, right? And you're risking that $2.30 to make a potential $4.70 on this $7 wide bullish call vertical. And to Kim's point, if you think it's going to go up to 70 into that earnings event, this might be the way to play it because you've got a good risk-reward ratio on this, and you're defining your risk on this type of trade, bullish move to the upside here over the next 44 days.
Okay. All right. So $65, making money for just about every cent beyond where we are right now. Looking for upside. Let's, Tom, we're going to come back to you. Let's go back to Kim and let's talk about a retail play that you like. Apparel, Kim, VF Corp. I mean, I'm looking at right now all these retail and back to normal companies ripping. VF Corp is just like sliding from the highs of 2 months ago. What's the deal?
Yep. Well, they had kind of a disappointing holiday season, and there's many reasons for that. But again, we have long-term confidence in this company. By the way, one of the reasons why I really like them is I saw them many, many years ago, and they are masters of the supply chain, and they use technology within their walls extremely well. So that's kind of a real fundamental reason why I like them, that they are focused on growth. They know how to grow their brands that they have. Now, keep in mind, these are Vans, the North Face, Timberland, and then a handful of other ones that are probably more popular in Asia or Europe. But those are their strengths. They had a couple of rough quarters because people weren't buying clothes, but I don't know about you. I have spring fever in a big bad way, and I want to get out in the outdoors. They have a lot of clothing that is geared towards making you dry and warm as you explore the outdoors. And that's why, and look good doing it. And I think people are going to want to get themselves outdoors. And it's kind of safe in the world of COVID, right? We're told, that the sunlight kills any of the virus. So that's why I'm making the call on VF today.
All right. We missed the ski season, though. So the North Face brand, we missed the hot season for them. But as we're looking at the B-roll now, they got other brands here, to your point, Dickies, boots, etc. All right, I like it, Kim. Thank you. Appreciate the picks. We're going to do another trade here on VFC. Kim from Boca Capital Partners. Let's go back to our own Tom White. Okay, Tom, so a little bit of a laggard in the retail space. Kim says it shouldn't be that way. Let's trade VFC.
Yeah, and if you look at this, how do you play this one to the upside? You can buy the shares, right? It's got a pretty good dividend yield. But the strategy that I looked at is actually defining your risk, right? But you're going to buy an in-the-money call against this. So it's going to act like a stock replacement, allowing you to put less capital at risk to take that bullish stance. And I went out to the May monthly series. So you're giving yourself about 72 days till expiration. Buying the May 75 strike call. This is nearly a 70 delta, Oliver, which means the higher the delta towards 100, that means it's going to react the way that the stock does. Buying the 75 strike call, average debit of about $7.60 is your risk on this, so $760. But you can see there from the risk profile, above that 82.60 level over the next 72 days is all profitability on this. So by buying an in-the-money call, say the stock goes up to 83, 84, and this thing expands from 760 up to maybe $10 or $11. That's when if you buy a 10 lot of calls, maybe you start selling 2 lots, selling 5 lots, start parsing your position because you're taking winners off the table. But if your longer term view over the next 72 days is that it continues to move higher, you can hold on to those also. So there's some trade management skills in there, buying the stock replacement like that. But what you want this to do is expand in price over the next 2 months. And if you look at that break even, it's only about 3% above the current share price. So you do not need that big of a move over those next 2 months. So this might be the way to play it as opposed to buying the shares. You buy the stock replacement deep in the money call.
All right. This one a little bit more straight out bullish from here. Stock replacement, right? So you're getting very similar experience to holding the equity, Tom, but using options to try and get a little bit more exposure to it and relative to buying all those shares, as you like to point out. Another way to do it. Thank you, Tom. Thanks, Kim, as well. Hour 2 Morning Trade Live is ahead. We are closely watching the U.S. Treasury market to see if we hold the gains from this morning as we've watched equities pinned to bonds. That's our focus. But in the meantime, lots of other companies to talk about, including earnings coming up from a giant who is getting ready to gear up for a return to normal in the office workplace. But in the meantime, investors are becoming a little bit more confident about their competition with Amazon, Google, and every other cloud company out there. Oracle's return to form is a subject coming up.
If you have questions about retirement planning, then you don't want to miss Investor Education Day hosted by TD Ameritrade. It's a full day of free insights from TD Ameritrade education coaches and experts who can tell you all about honing your retirement strategies. And the best part, it's all online. So technically, you can enjoy the webcast from the comfort of your retirement pants, also known as sweatpants. Register for Investor Education Day at tdameritrade.com/education day.
Technical traders, the Chartmaster is in the building. Trends, support and resistance, key patterns, and technical indicators. The Chartmaster has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, Let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full options for volatility course and a whole lot more.
Welcome back to Morning Trade Live. We're in hour 2 of the show. 30 minutes into trading, stocks still well bid, slightly off of the morning highs. Bonds basically flat. We're going to be talking earnings ahead of Oracle here in a moment. We're also going to be looking at digital health and the trends from COVID that have helped turn around a stock. Dario Health, we've got the CEO join us. We're going to hear the short case from Ben Axler on 2 companies that he hasn't even put out yet, so I can't say what they are. And we're going to find out. So you're going to be with me as we hear the latest bear cases here on a couple companies. So Ben's coming up. Always an interesting conversation. And then for the chart master, we're going to be looking at some analyst moves, and Expedia and Uber in particular I'm interested in as 2 reopening trades that have done very well. Right now, let's check in with Ben. He's got his eyes on the U.S. dollar. Good old greenback. Mr. George Washington. Okay, Ben, what are we looking at here for the dollar today?
Well, actually today, Oliver, I'm looking at the dollar being the dog, but the tail seems to be wagging it right now. We oftentimes talk about how some of the other foreign currencies can actually be the major mover behind the dollar, and ultimately the dollar impacts some of the other products that we watch, such as commodities. I think that's what's playing out here today. First and foremost, we just heard from the Bank of Canada, Oliver. They left rates unchanged as expected. And here you can see the Canadian dollar selling off a little bit, going from positive territory to negative. The Bank of Canada said we remain committed to holding the policy interest rate at the effective lower bound until economic slack is absorbed, so that the 2% inflation target is sustainably achieved. Now, if you remember, the Bank of Japan's January projection shows that this isn't going to happen until 2023. There's some talk about, well, how the U.S. stimulus makes the Bank of Canada a little bit more confident. If you remember, they cut 50 basis points right around this time last year, the last time they actually did make a change to their rate. I do want to point out, Oliver, if we move away from the intraday look, here's a look at the daily time frame. You can see how the Canadian dollar has been trending higher. This weighs on the U.S. dollar, recently up and through that 80 even level, and another step back from that daily time frame. Take a look at the weekly here, Oliver. You can see again, much like some of the other products we've been talking about, still some hurdles to get up above, but you can see the strength and that momentum off the pandemic lows that we saw, where things stand right now. And well, they've got, again, a couple of areas, 8,200, 8,300 to get up above. But one thing that we talk about in terms of the Canadian dollar, Oliver, is the tie to crude oil. And here you can see the trajectory to the upside, the well-defined correlation here. And, you know, there's some discussion about how they might hint at tapering, Oliver, and we will get a broader assessment in April, but certainly something to keep an eye on. Canada's expansion at a pace of 5.4% versus 4% the Bank of Canada had projected back in January. So something to keep an eye on here. Obviously, we'll be watching here market reaction too as well.
So as the Canadian dollar slips a little bit, the dollar gets a little bit of a bounce off the lows, watching to see what happens after that break above 92. Now we're flirting with the level again. So we're just kind of, maybe it seems, Ben, after we broke out from that dollar previous high in February, that we kind of maybe need to test, right? This dollar doesn't have a habit of picking up bullish momentum for a sustained period of time. This past month has really been an exception, of course, to the past year. So in terms of levels, when you look at that dollar, the 91.5 was our high from February. I mean, do we kind of consider the new possible range forming up here, or do we need a little bit more evidence?
Yeah, Oliver, we do need some more evidence at this point. I mean, right now what we're doing, and we talked about this yesterday, we're testing an upper extreme, the extreme of the upper extreme of the range that we've been in. As you can see, basically going back to when we broke down below the 92 handle, we're talking back to the end of November, beginning of December. Since then, it's been, well, above 89, below 92 this week, recently back up above it, but I'm not getting too excited about this or too concerned in terms of some of that bearish sentiment that still remains. You can see the well-defined trend environment to the downside that's been playing out since those pandemic highs up around 104. Again, right now, this is the area to keep an eye on, but I think as long as we remain below 93, the 94 area, this still is a trend which is intact to the downside. Now, I do want to point out, Oliver, potential catalysts here. We got CPI today, kind of limited in terms of market reaction to. You've got the PPI on Friday, but don't forget, in between now and then, you had the ECB meeting that started today. It wasn't just the Bank of Canada. ECB meeting started today. We'll get the announcement tomorrow. Here I'm looking at the euro currency, and the reason I bring this to your attention is because they are going to update their forecasts. We expect that last year's inflation forecast is going to move up, and we also expect them to share near-term growth expectations as well. So keep in mind, Oliver, with the Fed committed to $120 billion in terms of purchases, the ECB is not committed. So a little bit of a different dynamic here, but certainly, again, these are the tails, as I was saying, that could wag the dog here, the dog being that dollar, and these products oftentimes are the catalyst. Last but not least, while we still have some time to wait for the Bank of Japan, again, as mentioned, the Bank of Canada today, the ECB tomorrow, we have the FOMC tomorrow, but keep in mind the Japanese yen has been selling off at a rapid rate as well, and well, here you can see, again, flat on the day right now, but a nice move lower, so weakness in the yen and the other foreign currencies, ultimately, Oliver, is where we've been seeing some of that strength come into play in the U.S. dollar, in addition to rates to the upside.
All right. Okay, appreciate it, Ben. I'd like to look at some of the other currencies here for context on what's driving that dollar. It's a basket after all, the way most people look at it. Thanks, Ben. Host of Futures and Midday Movers. Let's bring in Alex Coffey, co-host of Fast Market. He's looking at tech and Oracle specifically. We've got earnings coming up. Alex, the shares are literally unchanged as we speak right now, but they have been on a great run and standing out, especially in the context of a NASDAQ off the highs. Oracle is making highs.
Yeah, and that could be a couple different things going on right now, Oliver. One is a rotation out of some of those big high-tech growth companies, which, although Oracle is one of these more legacy players, it's kind of been more of a recovery story for Oracle in a transition into a new tech world of the cloud, and it's starting to accelerate a little bit into that world. Barclays, we talked about last week, with a pretty glowing upgrade on the company, kind of set the stock higher here, going from equal weight to overweight, price target up to 80, better IT environment for spending, better cloud mix for Oracle, some of its legacy products that have been a drag being a little bit offset here. So going forward, so that's kind of the build up here into this report, Oliver. The stock's up about 14% year to date, but about 13 of that 14% has been taking place over the last 2 weeks. For this particular report, we're looking at fiscal quarter, the third quarter of 2021, looking for about 14.4% year-over-year revenue growth, or earnings growth rather, or $1.11 in EPS. For revenue, they're looking for $10.06 billion, which is about a little bit under 3% year-over-year. So this is a name that a lot of its bottom line growth, Oliver, has been generated from share buybacks and market performance, as opposed to true quality earnings increases. But when you look at the story going forward, there is certainly confidence that you mentioned this in the earlier segment leading into this. There's a focus on, are they going to be able to challenge Microsoft, Amazon, Alphabet, Google in terms of the cloud? I think there's a little bit more confidence that that's the case going forward. For this particular report, I would put a particular focus on the guidance for the next quarter. Fiscal quarter 4 typically is one of their bigger quarters, and so there's going to be some emphasis on that going forward as well. About a 4.5% move being priced in, looking at the market maker move on the Thinkorswim platform, which is taking into account current at-the-money options to calculate that.
It's pretty interesting to see how Oracle differs in the market's expectations for it compared to a lot of other big growth tech companies. I mean, they did roughly 2% growth last time, and that's going to be closer to 4, it seems, this time. But that incremental increase kind of moving in the right direction seems to be the focus here of not a turnaround. I mean, it's Oracle. It's not like they were ever at threat of going away. It's just they were struggling to kind of keep up in terms of growth, and things were flat for a little bit. So some sentiment change here, and then some strong outperformance, the relative strength of Oracle next to the NASDAQ near the highs of the past year. As we've seen that favoritism shift. Alex, thanks for the report here ahead of the earnings. Going to be an interesting one as Oracle trades apart from just about everything else in big tech right now. Let's go to Scott Bauer for a little trading analysis. He's the CEO of Prosper Trading Academy. Scott, what do you think about Oracle? Is it exciting to you, this 4% growth possibility?
That's kind of my reaction to Oracle right now is, I agree with Alex that maybe there's been a shift over into the sector a little bit. Maybe that's why we've seen some a nice pop in the stock recently. I'm very hesitant coming into the earnings print here. Longer run, I'm probably modestly bullish on the earnings print here. I just think that the climate that we're in right now, given the recent history of some of these earnings prints and what companies have said about guidance or lack of guidance, I think that one may hit Oracle here. So I'm actually pretty bearish on the print, just on the print. Longer term, modestly bullish. So I'm looking to buy a put spread on the print going out to next week. So I'm buying the 72.69 put spread, $3 wide, pay about 80 cents for that. That's next week's expiration. Listen, if this thing skyrockets or if this thing just, goes up a little, I know what I can lose here. I can lose 80 cents. But again, I just don't like the climate of these earnings reports recently. So it's almost as if I'm throwing technicals out the window here, Oliver, which I don't like to do, and kind of just going along with a little bit of the momentum of what we've seen recently.
So, okay, looking for a little bit of a fade then from this momentum, the put spread. Walk me through how you're choosing the parts of this trade, Scott,
Sure.
strikes, and if there's any particular technical areas you think we should be watching for.
Yeah, Alex touched on what the market maker expected move is, and going out to next week for next week's expiration, it's about $4 to $5. So again, that's why I'm kind of targeting that 69 area to the downside, where this thing would max out. And then I'm just making it a $3 wide spread. I start making money kind of right away if this thing fades off at all, because I'm long the 72 put. Anything below 69 next week, this thing would max out. But that's really the reason why I'm choosing those strikes, is what Alex touched upon. That's really very close to what the market maker expected move is.
Okay. All right, 69 puts and then buying. Another one slightly higher and looking for Oracle to slip and lose some of this momentum. All right, Scott, interesting trade. Appreciate it, Mr. Bauer, as always,
Thanks,
for the
Oliver.
transparency here. CEO of Prosper Trading Academy. When we return, let's talk health. Let's talk digital medical devices and the role of remote health monitoring during this crisis. We've got the CEO of Dario Health up next, stock that have been trending lower for multiple years and then turned around and has been surging over the past 52 weeks.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
On Express going up a little bit over here. 466. Yeah, I still love to see that thing at $5, $6, $7 today. I don't know if it will, but with the momentum from, I think it just sums up momentum from all of those Reddit stocks, Reddit stocks, meme stocks, whatever they are. And I think they might have a chance to go to 6 or 7 today. So it's on a little bit of a run here right now. AMC is actually down slightly from its high. That's still pretty good. Still up 13%. Express up now 39%. So good day for Express. GameStop up another 18%. It's just slowly grinding up. It's just man, good for everyone who still has a stake in GameStop. I didn't get in when it was 400. You got in back when it was under 100. Good for you. I'm super proud of you guys.
A medical device like a glucose monitor, a blood pressure monitor, and the MSK solution into one integrated platform. We are combining together software, hardware, and coaching in order to support the user 24/7 on chronic conditions. We have 163,000 active paying users on the platform that improving their clinical outcomes day by day.
Now, is that revenue coming from the a membership, a constant stream? I know that these devices anywhere from $25 to $100 from what I can see. Is that the primary part of the revenue breakdown? Walk me through where the money comes from.
Yeah, so 5 quarters ago, we announced that we are going through multiple transformation. The first one was the transformation of the business into the SaaS model, membership program where we are selling monthly membership. The second one was the expansion into multi-chronic condition, and the third one is the transformation into B2B2C. Around 35 to 40% of our revenue is coming from the SaaS model, and we expect that by the end of the year, the majority of the revenue will come from a monthly membership where we're going to enjoy margins of eventually above 70% because the majority of the revenue is going to come from the software.
Now, when you say software, Erez, explain to me how that works. So I've got a device, let's say I have diabetes and I use this to monitor my health and my status. Is my data then put onto a program I can go and monitor? Is it for me to send to my doctor? What's the software that I'm using?
Yeah, the software is running on a cloud and is supporting the users through an application. We help users maintain everything that related to their day-to-day, that related to lifestyle, clinical aspect, nutrition, food, medication, everything. The market is always looking into telemedicine, and we have seen companies like Teladoc acquiring Livongo because of the digital health. It means that in between the doctor visits, you need to see, the user need to get the support 24/7 in order to improve clinical outcomes. So in general, people with chronic condition need to manage their daily routine. When they are waking up in the morning, a reminder for the medication. When they're driving to work,
Guys, it looks like we have a total of 4 people viewing right now. First of all, thank you for viewing. Can I ask you guys, just drop me a like, drop me a comment so I know you're here. Rather just, with so few viewers, I just want to see who all's here. I mean, with 4 people, I'm glad you guys are watching. Hopefully, just like me, just want to watch the market all day. That's what we're here for.
Times, Erez, they've had some pretty big sales growth, and obviously they're not the entire market, but I imagine that means you have to spend on marketing, you have to spend on sales. Is that a big component of what you're going to be doing over the coming year, or are you already seeing that your sales force and the amount that you're spending is bringing in enough customers?
Yes, absolutely. That's a very good point. When we built this company in the last few years, we started as a direct-to-consumer, and we collected billions of data points that prove that we have one of the best solutions in the market. If you're going to go out there to the App Store, search for Dario, you're going to see that we have like 15,000 reviews with 4.9 stars in a scale of 1 to 5. So the user experience is key, and that's what all the companies like Dario, Livongo, and others are trying to achieve. And we have one of the best products in the market. So once we managed to start the transformation into the B2B, and we were growing our sales team in the US from like 6 employees to almost 30 employees by now, and with a very strong balance sheet with more than $90 million in the bank account, we are pushing now very strongly into scaling it up through health plans, employers, and providers. And with this cash position and no debt, we feel very comfortable that we have the cash into 2023 in order to push the sales and scale it up. And we think that we have a very competitive solution. And one of the key points that I mentioned yesterday on our earnings is that we managed already to win few employers over the competition in RFIs, Fortune 500 companies, and we already started the implementation in Q1. We see amazing results in terms of the enrollment rate and in terms of our ability to get the user to engage with the platform and to help the company generate the SaaS revenue that we are talking about. And further than that, post the acquisition that we did and through with the B2B transformation, we felt and we already see that the revenue that we are seeing in Q1 is going to increase by 2-digit in terms of percentage comparing to Q4.
Okay.
So we already start to see the fruits of this investment in the sales that we're going to see in 2021 that is going to be much higher than what we did in 2020.
Rez, how come the 2020 period didn't see a bigger jump in revenues? I see that you did for the year about $7.5 million, which is roughly in line with what you did the year before, in a period where there were a lot of changes to how folks interacted with their doctors, the hospitals. If you didn't get a big pop here for sales, then why does it increase going forward? Do you have new users as those sales are going to pick up? Where's the growth case if it didn't happen here over the past 12 months?
Yeah, so we were a B2C company. We sold direct to consumer. The whole healthcare industry is about seeing a very consumer-centric solutions that providing a very good user experience. And this is what we did in many years. We were selling direct to consumer. A year ago, we managed to start that. We announced that we are moving into B2B. 2020 was a foundational year when we put all the infrastructure, we built the team, we restructured the offering in order to make it applicable for health plans and for employers. And we knew that this year is going to be tough in terms of getting the top line up. We knew that the sales cycle with employers and health plans is going to take a few quarters. And now we are in a position that we want them. And we see that everything that we were seeing in the last 4 quarters is going to bear fruit in Q1 and moving forward into the rest of the year. And one of the things that I stated yesterday on the call is that there are multi-parameters that are changing now because of the movement from B2C to B2B, because we are moving into multi-conditions. All of the key KPIs of our financial profile are going to change because of these kind of changes. And I think that we're going to see a kind of exponential change in our financial profile and also in our ability to grow the top line in 2021.
Okay. I appreciate it, Rez, and sounds like a lot of transition happening in the business. We will certainly be watching that development. Appreciate you joining us here on Morning Trade Live.
Thank you so much.
Thank you. Rez Raphael is the CEO at Dario Health, ticker DRIO, up 200% over the past year. Certainly some big plans ahead. The revenue in the last 12 months roughly in line with the year prior. When we come back, let's talk a couple short picks. We've got Spruce Point's Ben Axler joining us, 2 companies that just moved in reaction to his release for the Sell Opinions. We'll be right back. A couple overlooked, little unknown stocks, but they're moving in response to it. Let's hear the case.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
What do you look for when you trade?
I want free access to research.
Yep, TD Ameritrade's got that.
Free access to every platform.
Yeah, that too.
I don't want any trade minimums.
Yeah, I totally agree. They don't have any of those.
I want to know what I'm paying up front.
Yes, absolutely.
Do you just say yes to everything?
Well, I say no to kale. Yeah, they say if you blanch it, it's better, but that seems like a lot of work.
Now offering 0 commissions on online trades. We charge you less, so you have more to invest.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Welcome back to Morning Trade Live. Let's talk the latest short picks from Ben Axler, the founder and chief investment officer at Spruce Point Capital Management. Ben, you just published 2 new sell recommendations, strong sell reports on American Battery Metals, ticker ABML, and Comstock Mining, ticker LODE. So both these responding to your report as they've slipped a little here this morning. Let's start with LODE, Comstock Mining. Now, I think both these are a little overlooked. Smaller stocks. I mean, this one's very small. American Battery Metals a little bit bigger. So let's actually start there. Let's start with American Battery Metals, all right? This is one of these companies that it purports to have a big addressable market cap ahead of it because of all the batteries, electric vehicles are going to need recycling, et cetera. How come you don't like it?
Well, we don't like it for a number of reasons. Number one, the management team has a track record of capital destruction. And if you look at their biographies, they obscure a lot of their past failures and linkages to SEC charge fraud. So let's look at, number one, the people behind it. They don't have any institutional investors. The one that we did find, Tizdaco Partners, we linked to a FINRA banned broker. The company has rapidly escalating the number of consultants and paid promoters it has. It's a retail-driven stock, and you have to look at the people. If this were really a business that had $1.5 billion market value with $300 million of revenue potential, don't you think there would be institutional investors here lining up? Management's put no money in the company. They're granting themselves stock because they have no cash. They have a going concern. And this is going to be a classic scheme where by the time investors realize this company will never hit its lofty revenue and profit projections, that insiders will have cashed out and the stock will be back to 10 cents, which is exactly where the CEO is selling before the big run-up.
I don't know about institutional investors, Ben. I can't answer for them, but I will say that the U.S. Department of Energy Advanced Manufacturing Office has selected them for a $4.5 million grant. So is there a lack of due diligence going on by the government?
Yeah, big deal. Actually, we have a slide on that in our report. If you look carefully at that press release, there was another company that also got a co-partner on that award as well. And why didn't ABML put that in the press release? They made it sound like they're getting all the credit when in fact it's a co-award. So again, you need to look carefully at what the company's saying and doing. They've put out press releases before about raising capital, particularly one we noted in the report from an entity in Fiji. Fiji, of all places. Again, if this were a company with a great domestic progress, why can't they raise local capital from people in the community? Ultimately, that Fiji entity reneged on the capital, and that CEO, his company went dark, and now he's involved with Comstock Mining. So these companies are intricately linked by people that have a very speculative track record.
Okay, so when you say that, you got to back it up, Ben. When you say a track record that you think here is not good, and the connection between leadership at ABML and this other stock, Comstock, what's the linkage and what's the evidence that anyone here has a checkered past?
Well, there's a clear linkage, which just blows my mind. If you look carefully, the chief resource officer, Mr. Scott Jolkover at ABML, he is also a consultant to Comstock Mining, okay? Is this a conflict of interest or am I nuts? Comstock Mining also announced its intention to get into the recycling of EV batteries. They formed an entity called Linico. So why is one individual consulting and working for two companies in the same business? Now, we did an extensive background check on Mr. Jolkover. We believe he's related to Jeff Jolkover, who pled guilty to securities fraud, money laundering, and wire fraud. In addition, Mr. Jolkover, seems to have other side businesses. We've again done a deep dive on him. He owns a brothel in Nevada. Well, that's fine. It's perfectly legal business there. But this is a company talking about an uplisting to a major exchange like the New York Stock Exchange or the NASDAQ. How's it going to look when they have an executive who has an interest in a brothel?
Okay, so one executive has a business that someone may or may not be a fan of, but the actual history of real wrongdoing is possibly a relative, right? I mean, this is, Ben, I see the point here that you're drawing, but what's the actual evidence that these two companies, because that's the important part here as you look at Comstock's connection to American Battery. Are you alleging that they are doing something that is inflating the numbers, that are acting as some sort of either fraud or a real kind of demonstrable connection, or is it just you don't think this guy is a good executive and he's involved in both companies?
Well, let's be clear, they have no real numbers. These are very speculative businesses. Management's tossing out big numbers of their ability to claim revenues in a nascent industry that we believe is immature. Okay, so let's talk about recycling of EV batteries. Okay, there is no national infrastructure set up so that this company can get enough batteries to meet its revenue potential. The company hasn't even disclosed who its customers are. It doesn't have a permit. There's no it doesn't have environmental permits yet in Nevada. The land isn't even entitled yet. So there's so much business risk here, and yet management is making claims, very aggressive claims, that they're almost done their permitting process. We did a FOIA with the city of Fernley, Nevada, and we show investors point blank that they're nowhere near getting their permits. So again, this is a trust me story, okay, of two companies in a nascent industry that is yet to be proven commercially viable, okay, where insiders have put no money up. They partner with a lot of people with checkered past, and they'll have the opportunity to sell stock well before investors learn that this business never lives up to its potential.
Ben, we reached out to companies, no comment yet. Just to be clear, obviously you're short. That's what you do. You are a short investor. Can you just give me an idea, sort of the plan you have here? I mean, is there a price target for ABML in particular? I mean, Load is such a small company. I mean, we're talking, $4, $2 for both of these. But is there a clear exit point or a strategy that you have you think ABML is worth?
Yeah, I think it's worth probably 5 or 10 cents. I mean, again, that's if you look at where the CEO was selling stock prior to the investor, run up and enthusiasm for EV batteries, that's where he's selling stock. I mean, even if you take its numbers at face value, let's assume that they can hit $200 million of revenue. And you look at what a multiple, of a business in the battery supply chain would be. That would be 2.5 times revenue. I mean, best case, you still have 75% downside. The company hasn't articulated how it's going to fund this project. They have an open shelf. They're going to need to dilute investors, particularly if they want an uplisting. They have negative net worth. That means to get positive net worth, they're going to need to raise capital. And so I wouldn't want to own the stock with so many uncertainties, with a management team that has destroyed tremendous amount of value in the past, that hasn't fully disclosed it on its biography. To me, I'm all about investing in transparent management team with a winning track record. I don't see that at either Load or AVML.
Okay. Ben, thanks for the update here and breaking the news. I appreciate always the insight into what you're looking at. Always very interesting. Thank you, Ben Axler.
Thank you.
Joining us from Spruce Point, of course, short, and we haven't heard back from the company. He's the founder and chief investment officer at Spruce Point Capital Management. When we come back, the chart master will be looking at two stocks tied into reopening, Expedia and Uber. Today, as the NASDAQ starts to pull back a little bit, it's actually a better session for some of these reopening trades now. Expedia up 2.5%. Uber is up 4%.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
Well, our great crappy mid-morning here, an hour in. Looks like the TQQQ is now in the red, which is a huge, huge bummer. Let's see. Let me look at the overall markets and see where we're at. See, Nasdaq is just flirting with it. It's showing up 0.01. It's probably going to go red here any second now. Dow is still up. S&P is still up. Everything's on downward swing, which is a huge bummer. So hopefully that's just a temporary mid-morning. You're seeing Express go down from 495 peak down to just in not much time, which is a bummer as well. It's up 22% for the day, so not bad. Game's not up 16%. It's going down. AMC up 8%, but it's on its way down. So hopefully we'll get something going. Looks like Roblox has not officially hit the market yet. Usually those will start trading, these IPOs start trading at like 11 or so Central Time, so 12:01 usually Wall Street time. So Tesla's down. Tesla started great this morning and it's now down 0.13%, back into the sixes. So I'm not yet sure if this is one of those days where it's going to flip-flop after a big surge in the morning, or if it's just a mid-morning bull and then it's going to turn back around and head north in the afternoon. I'm really hoping that's the case. I don't see any massive news that should show that it's not the market should go through a turn. No, Fed's not saying anything, nothing new or life changing with this new stimulus package that's coming out. They decided to just cancel all that. And so to me, I think this is just a mid morning lull in the market, and hopefully everything will just turn back around and go north as we go through the last week.
reinforcing that. Up above mid-range, still rising, suggesting that in the near term, there's a little bit of bullishness. And if this candle closes towards the top of the candle, I think you may see that longer term line start to flatten out here a little bit as well.
It's interesting, the longer term, which is the dashed line there on that bottom panel, market sentiment, that longer term sentiment basically peaked at the previous high, which was kind of an interesting tell that when we hit that high around earnings, that maybe there was still a little bit of selling. We're basically right now at the price level in Uber at where that long-term sentiment dash line peaked. So it seems like that one here is a pretty important thing to keep in mind, where if you do get a break above, we head through $60, then maybe some of the short term is able to pull up that long term and we continue the trend higher.
Yeah, absolutely. But you've also got to remember there are some overhangs here. Number one, you know, there is a lot of pent-up demand and that's driving revenues, but at the same time, you may see revenues decline on the Uber Eats side of the equation. And number two, you've got lots of labor issue overhangs that are out there, not just AB5 Prop 22 in California, but nationwide. We just saw the pro-labor amendment pass through the House, and so that could be a challenge to Uber as well as all of the gig type economy stocks.
Okay. All right, so Uber, definitely an interesting kind of potential for a bounce and a continuation higher, but we'll wait to see if we can breach that $60 level, as there was a good bit of selling, a kind of chop on the way down from the last high of about $65. Now for Expedia, Ben, and sorry, by the way, on Uber, the analyst move this morning was the price target hike at Deutsche Bank. So let's go over to Expedia. As I mentioned, also a bullish note here. Stocks up 2.2%. Piper Sandler's got a price target on it that they had to raise, but it's basically just in line. They were at 138, so they're having to push it up to 159. Not exactly the most bullish upgrade, but the stock is doing well on a day where the reopened companies actually kind of jumped to the front and cyclical stocks are doing really well.
Yeah, absolutely. And I think you've got to look at where Expedia is in that kind of chain of supply chain for those reopening demands, right? Because this is a booking company, and so you've got to book things early, you've got to book tickets early, you've got to do research, and I think that's what's driving, you know, this consistency of trend here. This has been a long-term uptrend. We saw a little bit of churn at what was a previous all-time high right around that 161 just after the earnings announcement. I've got that labeled there. And then we saw the little bit of a breakout retest yesterday and the bounce today on this gap up rally, now testing up around that 173 mark or so, coming off that just a little bit here in the last few minutes or so. But there's that price target hike. The dashed line that I have there just under the dotted line at the all-time high, that's in the rearview mirror. And I think if this can hold this support right around this 165 area or so, the top of that little churning area, you could see that as a lever for a higher move. Long-term sentiment rising, up and overbought. Intermediate term sentiment, and I think this is significant, started to break this slight bearish divergence. It's rising and overbought, kind of hooking back down here in the moment as we've seen this back off just a little bit, but I think still breaking out of that bearish divergence in the short term here, Oliver.
All right. So a little bit of a break and some momentum continuing, elevated sentiment. Man, Expedia just looks like it is really taking off here. I mean, compared to the Uber sentiment readings we were looking at, right? It just seems very stable, elevated, not a lot of volatility around some of the crazy market swings this past week, and an optimistic message about reopening, it seems. Thank you, Ben. Good stuff, Chartmaster, on those two companies today. Let's take a short break, come back, and get our panel in here. NASDAQ kind of falls on its face. Huge pop in the open, and we just went red.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate tdameritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today. Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
I'm Maria Schrader. Here are a few stocks moving this hour. Disney's former CEO and current executive chairman Bob Iger will be stepping away from the company in December. Iger, who was CEO from 2005 to 2020, says he is leaving with a strong sense of pride and a deep sense of appreciation. He added that current CEO Bob Chapek and upper management will adhere to the same principles he did while leading Disney. Disney Plus reported reaching 100 million subscribers yesterday. Shares are up around 1% today. American Airlines reportedly is increasing its bond and loan sales to $10 billion. On Monday, the company announced it would offer $5 billion in bonds and seek a $2.5 billion term loan to pay back federal loans and other debt. It will back the loan through its frequent flyer program. American Airlines' total debt at the end of 2020 was $41 billion. Shares are down slightly today. Scotiabank downgraded Chevron to sector perform from outperform and raised its price target to $115 from $110. The analyst said that while the market won't be pleasantly surprised by Chevron's higher than expected production growth target, it is not enough to change the overall view. Truist kept its buy rating and raised Chevron's price target to $130 from $105, citing strong free cash flow, sustainable dividend, and leverage. Chevron is up over 1% today. This has been your TD Ameritrade Network Market Update. Now back to Morning Trade Live with Oliver Rennick.
Welcome back to Morning Trade Live. It's time for the market meetup panel. The NASDAQ falling flat a little bit after a huge start post-CPI. Stephanie Lewicki and Michael McCurr are with me this morning. Steph's Senior Manager of Trader Education, Mike's Senior Strategist of Institutional Trading and TD Ameritrade. Okay, Mike, let's start with your chart. From what I understand, you have the chart of the NASDAQ composite. What are you? I didn't know you were a baby boomer. Who's looking at the composite nowadays, Mike?
Only the boomers. Can't you see all the gray hair I've had over the pandemic? So this is one that's not going to be as focused as the NASDAQ 100 would be, looking at the 100 biggest companies. And the NASDAQ, the composite is going to be a much more broader measure, give a little bit better gauge of sentiment, which was going on in the NASDAQ. So right now, the NASDAQ composite, the short story is that it's still swimming against the current despite these impressive reversals that we've had. So it continues to hold right around the neckline of that head and shoulders pattern that's typically considered a top or a reversal lower, which we really did break through on the downside pretty significantly, got around the 61% measured target there. But we're getting a good squeeze. We're starting to see near-term breath momentum get back to flat after being at the most washed out level since March of 2020 last year. Just take into consideration that for the last 7 consecutive sessions, we've moved up or down 1.5% in the NASDAQ composite by the end of the day. That's something we've only seen in the tech bubble, great financial crisis, and last March. So while we haven't moved all that much from the highs, just around 10%, the volatility recently has been pretty extraordinarily by historical measures. So the levels that I'm watching on the NASDAQ are going to be that downward trending resistance, as well as the 50-day moving average, which is right around about 2 or 3% higher from where we are right now. Like I said, swimming against the current. That means it's sort of a Sisyphean rally, pushing that boulder up a hill only to come back down. So if we get above those levels, I would expect the bulls to now have the upper hand. Right now, we're sort of at the 50-yard line where bears and bulls do not have an upper hand here.
Okay, so and I like this, that it's still kind of an even match. I will say, Steph, I don't have the technical expertise that Mr. McCurr does, but I think that if there's a fade today of that big pop we got, it's hard not to have a little bit of an icky feeling in your gut if you're a bull.
Yeah, I think that icky feeling, like you said, if we do fade, the NASDAQ right now is jumping up and, the flat line. It just went negative for a minute. So closely watching that. We'll talk EIA number because it came in. It was a build again, a large build, 13.8 million. Last prior was 21.6. But crude doesn't seem to care on this inventory number. Again, the gasolines, we had a pretty decent sized draw, 11.9 million versus 13.6 last, and then distillates was a draw of 5.5 million. So crude is basically unchanged around this number. We saw crude have that big rally last week up to 67 and then came off. You know what I find interesting is that CPI number. Supposedly there's still no inflation, and the market rallies on that, and the dollar sells off, but now the dollar is back to where it is. So kind of some interesting dynamic. My eyes will be on the 10-year note auction, $38 billion going off at noon today. The 3-year went off without a hitch yesterday. So I think this is a big focus for rates in the 10-year after that hiccup we saw with the 7-year a couple weeks ago and that flash spike up to 1.61. So next on my radar is the 10-year auction today.
Okay, darn right it is. By the way, the crude stuff on the EIA is just wild, the way we do this crazy V like every time, no matter what the number is. But the auction's the big one today. No question about it. Yeah, there's that little spike in crude. The auction coming up. And you know what, Mike? Last time around, it didn't go so well with the 7-year, but we had some shorter-term bonds that were issued this week, and they seem to have gone well. We had a really strong bid to cover for the 3-year note, but isn't that like closer to the part of the market that the Fed has control of? What should we be looking for the 10-year?
Yeah, so I think you're going to see a lot of tourism in the fixed income space over the next 2 days.
What does that mean?
10-year and that means that people are going to be opining that aren't fixed income experts. I think the most important thing, and look, I'm not one either,
right,
but it's going to have an impact on the overall market. I think the most important thing is going to be the level of indirect bidders, something that the 10-year was lacking on. An indirect bidder is a foreign buyer, typically a foreign central bank. Is there going to be demand from someone on the international level rather than the dealers in the United States taking it down? That's why we saw that market stop through on the 7-year note, and that's why you saw bonds tank that Thursday 2 weeks ago. So I would actually expect, given what we saw today in the 3s, the weakness in the 7s, that you would probably see some strength in the 10s and 30s given where they are, the backup in yields. So if you see a strong indirect demand, the auction's likely to go well.
Okay. So I like being a tourist. I got my fanny pack and I got my camera and I'm ready to take pictures of the carnage because it seems to me pretty clear if this thing doesn't go well. To Mike's point about the foreign buyers, we heard yesterday from Mark Dow the case that this yield curve expansion is enough to kind of bring some of those traders back in who are able to use currency hedges and all these things and get a more affordable deal than they would have in the past. So, Steph, I'll give you the last thought here. If we don't get a nice move on this, are we in trouble?
Well, if we see again what we saw a couple weeks ago, then we possibly could in trouble. But to Mike's point, it is supposed to go off well. It is important. It's a longer dated paper today and tomorrow. But again, if it's something out of the ordinary, sure, I think we could be in trouble. And then we're watching rates. It's really the pace of rates, how quickly they're going to rise. And if the market is comfortable around this 1.5 level, rotating back into these big mega cap NASDAQ names.
Okay. Thank you, guys. Good stuff. NASDAQ 100, not the composite. Composite? Come on. All right. Appreciate it. Thanks, Mike and Steph. Let's check in with Kev ahead of Fast Market. What are you guys trading, Kev? Do not say the composite.
With earnings today and tomorrow morning is Oracle and JD.com. A lot of news going on in JD.com about their IPO that they canceled. And then Likefolio will do a presentation on Netflix today. And we'll trade all three today on Fast Market, Oliver.
Sounds great. Kevin Hanks and Alex Coffey coming up next. Thank you, Mr. H. Thank you for joining Morning Trade Live. I will see you this afternoon. Lunchtime auction, keep your eyes on the 10-year, and we'll talk about it later.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Feel that? That's the beat of global markets, the rhythm of the world. But to us, it's the pace of tomorrow. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
Good morning and welcome to Fast Market. It's Wednesday, March 10th. I'm Alex Coffey. Let's take a quick look at where things sit 90 minutes into this morning's trading session. Right now, you got some green across the board in the equity markets, with the S&Ps up about half a percentage point. That's 20 points to the upside, 38.96. So we push towards 3,900. The NASDAQ 100 bouncing back as well, although it is the laggard of the group. It is up about 1/6 of 1%. It is up 12,811. The Russell 2000 and the Dow out in front. Once again, the Russell 2000 up 1.8%. The Dow Jones up 1% to 32,170. To help me break down this action and more, I want to welcome in the co-host of Fast Market, Kevin Hinks. Good morning to you, Kevin. And joining us here on Fast Market on this Wednesday is Anthony Panzica, Senior Specialist on TD Ameritrade's Margin Risk Team, as well as the co-host of TD Ameritrade on Twitch, which airs on Wednesday afternoon. And Anthony, I'll give you the first kind of go at it here. Still a little bit of earnings trickling in, but really over the past couple of weeks, the macro narrative has kind of taken over, primarily a focus on rates and the increase of said rates.
Yeah, I feel like this market, especially in the last maybe month or so, has been a tug of war between two things. one, it's inflation fears. Two, it's fear of missing out. So you're kind of getting a lot of this volatility. We're seeing the Dow is at all-time highs. I don't know if we noticed that. A lot of that is due to a few components such as Boeing that have been that were basically decimated during COVID and now are coming back. But I really think that's what we're seeing here, Alex. And that's the sentiment that I'm getting from a lot of investors on the desk. There's a lot of people that are just afraid out there of what might be to come from higher interest rates, maybe hurting the housing market, the stock market, the job market. But at the same time, you have some of these names that are, that are just taking off, and people are just, afraid to miss out on some of those things. So we're seeing a lot of upward to sideways trade.
In some ways, that seems like an oversimplification, Kevin, but at the same time, it makes a ton of sense to me. Over the past decade, really since the great financial crisis, dips have been buying opportunities. And when you see names like Tesla that have been absolutely rocket ships to the upside over the last year, sell off $30, or $300, let's say, from the highs, a pretty substantial portion. Maybe, you're seeing that and you're saying, is this a gift? Is that how you see it? It's a kind of a tug of war of fear of missing out alongside some real concerns out there that are going to make threading this recovery needle a little bit more difficult.
You want simple, Alex? I'll even make it more simple for you. 2 points. Climbing the wall of worry is what this market is doing. It's rallying despite all these things out there that could derail the market that really aren't happening. And number 2, quiet bonds equals positive stocks, right? Today's CPI number did what it was supposed to do. It quieted bonds down, very little movement, a little bit drift lower, about 1.539 or 1.54 on the 10-year. Did I get it? Yeah, 154 on the 10-year means rates are not spiking anymore like we thought they were, and stocks are resuming their upward momentum. Because let's face it, guys, you've got $1.9 trillion of stimulus, or a portion of that, about to hit the U.S. consumers' pockets. And that has always been a good place for it to be, guys.
Kevin, I want to get your thoughts on the CPI print, because the 1.7, maybe it's not jumping off the page yet, but it's the highest in several months. We're seeing a clear trend of increasing inflation, at least from prior prints, as we mount this recovery. But also, you look at certain items like gasoline and food prices, which we know are a higher, burden on lower income families. They're pretty extreme. I mean, you're talking 3-4% in some cases in the case of food. And that's been, kind of a trend that's been there for a while. A lot of this seems like it's being offset maybe by things like transportation or rent prices. Is that really being passed on to the lower income household that we know has struggled, in an outsized way in this recovery?
Well, the bonds reacted favorably, Alex, for 2 reasons. Number 1, the number came in as expected, and the ex-transportation number came in a little bit, the ex-food and energy, I should say, came in a little light, 0.1 and 1.3 year over year. And you break down the numbers, the big jump in prices are kind of where you thought it would be. It's in the energy component. Energy commodities up 6.6%, gasoline up 6.4%, fuel oil up 9.9%. Big numbers there. But then there's lower prices in used vehicles and trucks, apparel, medical care. So other things have come down, and the net number, even though we're seeing a lot of prices higher, the net number is relatively muted, guys.
Yeah, and we'll see where that trend goes from here. You see kind of the beginnings of it, Kevin, but it doesn't seem to actually turn into anything on that headline print. So we'll see going forward. I know there was some disruptions in some of the data collection as well, with some of the weather events that took place over the last month as well in the southern part of the country. But Anthony, I want to get your thoughts on something. So before the show, I built out a comparison between the NASDAQ and gold over the last 20 days. And what's been interesting is Kevin and I have really been talking about gold a lot lately, because it's been on a pretty crazy move to the downside. But it's supposed to be a risk-off asset. So we've seen NASDAQ lower. We've also heard in gold as an inflation hedge. Well, maybe we're not quite seeing it, but we're certainly seeing more inflation than we were. Gold's still moving lower. So I've actually made a comparison over the last 20 days of the NASDAQ and gold, which has really been kind of our period of volatility. And what I've found is these two assets are moving in lockstep. So how can something be a risk-off asset and move in lockstep with kind of the greatest speculative risk of the equity market in terms of the NASDAQ?
Yeah, and gold has always been an inflationary hedge, right? Because that's the only thing that you can't make more of, right? You could try to mine it, but you can't make more of it. And I almost feel like, if you look at really what people have kind of been fleeing to is a lot of cryptocurrency. I almost feel like Bitcoin is becoming the new inflationary hedge of the future. Honestly, the gold trade has just been puzzling to me, right? I mean, if we're going to print off, $1 or $2 trillion of stimulus, that's got to come from somewhere. That's going to dilute the dollar. And if we're diluting dollars, then commodities should offset and go up, right? But that we're not seeing that being the case in terms of gold. And, and again, I almost feel like, and if you look at and we compare, we compare maybe gold to Bitcoin, and you're going to maybe see an inverse relationship here. So I don't know. I mean, it could be that, there is kind of like a turn here that investors are basically taking, where instead of putting their money into gold, they're putting it into cryptocurrency because they feel that there's more upside there and it's more of an inflationary hedge. So the gold trade has been interesting and very puzzling to me, guys.
Kev, I have the comparison now of Bitcoin versus gold. Now, I will say that I do see obviously a clear divergence where Bitcoin's up 20% over this 20-day period and gold's down over 6%. But, the one thing you're going to notice is that Bitcoin's just all over the board. It's just a very volatile asset still. Sure. In terms of that inverse relationship, however, you can look at the dollar index futures, which we talk about quite frequently, a little bit more of a stable, currency than, let's say, Bitcoin. But we do see that divergence, really, which is what we'd expect to see. We talk about this quite frequently, which is as the dollar steadily increases, that does put pressure on gold, even though, Kevin, to Anthony's point, is it what we should expect to see an increasing dollar in the environment that we're in? I guess the dollar bulls, if you could be bullish on the dollar, would say economic recovery, higher rates makes the U.S. dollar more attractive versus its peers. But we know inflation can have an inverse effect as well. So this, to me, is the chart, though, outside the NASDAQ and the gold chart that we really should focus on when you're talking gold.
Absolutely. And you and I pound that drum a lot on this show, Alex. And the relationship between the U.S. dollar, dollar futures, and gold, and now, albeit it's an inverse relationship, right? Higher dollar, lower gold, lower dollar, higher gold. That relationship is strong and powerful, and it is a key metric for trading gold. Inflation, well, I'll let you know when inflation comes back, if it ever comes back. But right now, the main way to trade gold, the trigger, the look that you take on gold should be based off the movement of the U.S. dollar, Alex.
Yeah, it's still interesting to watch this NASDAQ gold chart, but we know that the NASDAQ has ties to the dollar as well. And of course, rates have been weighing on that, as well as the NASDAQ just had an incredible run for not only a year, but really the last decade. Kev, let's do some quick trade management here. Let's talk some Dick's Sporting Goods. We looked at this one yesterday on the program. And Kevin, we did the double calendar, and you're seeing this is moving pretty nicely towards our strike. We said we'd come back to this, remember? It's hanging out there, and we're still seeing more and more of this coming into the portfolio. Is it time yet to consider taking this one off?
Well, I mean, that is based on, you've got 2 more days, so you've still got nice data numbers on this trade, but that is based on your risk tolerance. If you want to move the money somewhere else, but it's moving towards your short strike. It's the calendar spread is expanding, and you've got nice levels of theta going on. So there's really no reason to touch it other than, okay, I've seen enough. Let's move on to the next trade, and you want to close it off. But so far, the movement is towards your strike, getting closer and closer to expiration and closer towards that peak in the profit graph. So depending on if you have strong hands or weak hands, or if you've seen enough, Alex.
And that theta numbers remained fairly elevated, still at 55 for our 5 lots, so over 10 for each 1 lot of this trade. So things are still trending in direction of favorable for our position if it hangs out here. Let's talk some Campbell's Soup as well. Similar position, Kevin, but we don't quite have the move yet. And we even talked about this too yesterday with these consumer staples and looking at this double calendar spread. We considered maybe you just buy an at the money calendar and you kind of just play the volatility game a little bit. And it looks like in hindsight, that was the initial move that we were looking for that strategy. But there is still some time left here, Kevin. We're long the strangle for next week. And we do still have that short strangle with a little bit of premium left for the rest of this week. And seeing where that's trading right now, the 45.49, 13 cents. Remember, this was a very, very low entry point in terms of capital for this particular trade.
Yeah, exactly. And just because it hasn't moved yet doesn't mean it won't, right? You've got 2.5 days of trading to go. And the other thing is you'll have those stems, those next week's strangle on your sheets or on your computer to deal with next year. But you're right, Alex, from a learning perspective, remember, your target for where you want the stock to go is defined by your short strike on your calendar spread. And if you did the at the money calendar spread, the neutral trade, that might have been the best way to play Campbell's Soup, it turns out.
At least so far. There's still some time left. We'll see where things go. And then the final one we looked at yesterday was Sonos. And with this one, we are actually seeing a decent profit starting to show here as the stock has moved higher by $1. But Kevin, remember, this was a little bit longer term of a trade. So we have the kind of true calendar spread month over month. So our short options are next Fridays, the March 19th, and our long options go out to April. And so it's trending towards 45, which is where our long call is. But of course, it's not there yet. We're up a little bit over, let's say, 25 cents for each one of these trades. And this is one where I think it comes down to what is your outlook for Sonos? And if it's still positive, this position can continue to benefit if we get an upside move. If you think that it's done all that it's going to do, maybe you take your 25, 30 cents and you run.
Yeah, this is one that, remember something, they had a really good investor day yesterday. They came out with a new speaker, and you've got another whole week of theta and movement. So you've got time on your side of the spread. Yeah, sure. The stock's up $1 today. It's moving towards our strike, but not there yet. But you can certainly be patient on this name because you've got 9 more days of your short option. So your theta hasn't even hit the high levels yet of that last week level of theta. So this one is definitely a hold and wait and see, Alex.
Yeah, about 35, there are about 37 cents left in those short options. So you can see that that's kind of what you're hoping for is that accelerates into expiration, yet our longer term April options hold majority of that value. Guys, let's continue the earnings conversation. Let's talk a company that's going to report here in the next 24 hours, and that is Oracle. Anthony, I'll pass it to you here. This is a company that's really, kind of gained the spotlight as of late. Talks of its cloud acceleration here, as well as it becomes a bigger player in that space. The legacy software company is trying to kind of transform itself into the new world. And it's really had a strong last couple of weeks, up 12, 13% over the last 10 days. Earnings report, though, can kind of continue this run, or it could lose some momentum here. Talk to us about trading a name that is at all-time highs, fading a little bit in the session.
Yeah, this is a name from my old school days on the floor. It was always Cisco, Oracle, and those two kind of going back and forth. And Oracle here has climbed to quietly for me to all-time highs here, trading at about 72. So obviously they're doing really extremely well. And if you look at that 52-week chart the stock is clearly broken out above the 65 level and now sitting at around 72 at all-time highs. So there's a couple different ways you could kind of look at this. I mean, you could kind of look at it and say, okay, Oracle's on a big run. It could continue to go higher. Or, you know, other investors might look at this and say, you know, okay, they've had a big run, and, you know, maybe it's time to possibly take some money off the table. What's really cool, though, in the Analyze tab, if you go to earnings, one pattern that I did see is that when it tends to rally into earnings, it has a little bit of a drop-off. That happened in the first quarter of 2020 and the second quarter as well, and in the fourth quarter as well. So we see kind of a rally going into the earnings, and then it kind of peels off here. So, I mean, really, I'm really kind of just picking a direction and an example trade based off what I'm seeing there. But yeah, we're going to look at, I adjusted the strikes a little bit, Alex. I hope that's okay for this trade. Want me to go through those?
Of course it's okay. Let us know what you're looking at here. We'll build it out and we'll talk through it. We'll talk some risk reward, and we'll lay out the thought process, because let's be fair, this is a stock that's had an incredible run. If it's time to fade it, it's time to fade it.
Yeah, and I'm not saying that it will or won't, but if you're one of those investors that thinks that, hey, maybe it's had a good run and we're going to see some profit taking after earnings, this might be a good trade for you. So it's going to be a broken butterfly expiring this week. So what we're going to do is just adjusted the strikes a little bit here, Alex, because the stock is down a little bit since this morning. We're going to buy 2 of this week's 72 puts. And then
all right, let's get a little update here on the market, where we're at. It's a little after 10:15 Central Time, so 11:15, probably coming up on the noon lunch hour there at Eastern Time. You see some of the volumes are going down, as you probably would expect for this part of the morning. GameStop still just slowly tipping up. It's nearing 300. It's like peaked over 300 very briefly early on in the game right there. It's zooming a little bit. So it's just trucking on at 300. Good for it. Good for that stuff. I'm not sure. It's not just exponentially hockey sticking up like we saw on a couple of the days back in January, but it's just slowly moving up 10, 15, 20, 25% a day at a time. So, and it's just proven to be a somewhat relentless stock, so it's fantastic. AMC, decent start to the day, of course, then it went down, and then now it's slowly making its way back. Same with Express. After the earnings report, it spiked at the beginning of the day, then it went down, and now it's slowly coming back up. As I expected, about 30 minutes ago, there was a little bit of a lull in the market. All the major indexes dipped. NASDAQ looked red for a brief, not too long. And then everything else has turned around and is slowly pumping up. So it's kind of what I was expecting when that dip happened mid-morning. Also seeing a much larger surge in crypto again. Bitcoin's back up to 56,345. So not a bad morning overall. Hopefully we can continue to ride this wave up into the afternoon, and hopefully you all will be watching as well.
Easy. When you're buying something, oftentimes the debit spent on the trade is the risk, and in this
relatively few social games saw big growth, but then Facebook sort of messed things up for them. Now, with Apple's App Store, similar thing. Remember Flappy Bird and all that stuff? And then there was a certain volume on that platform, and it got harder for others to enter. What does Roblox have to do, you think, in terms of community management, developer relations, to keep this momentum going?
I think that they're already doing it. David Baszucki said himself that he sees, I'm not sure if David Baszucki said it or if it was the keynote, that they are seeing themselves not in competition with, but comparative to Disney, Netflix. They want to be an all-over entertainment platform. Right now, they just have a lot of games. But in the past couple months, I have done video collaborations with Lil Nas X and the band Why Don't We? Because Roblox is coming into more of a social aspect. They want to bring people together into their metaverse. They want to be able to do everything on Roblox. So, for example, they have concerts, events, and they are keeping people extremely engaged. And I think that that's really important. They're also not just like leaving it up to the creators. They're taking things into their own hands. Often they are transforming their platforms into accessible ways. Not really sure how to word that, but they've just added like automatic translations to make the platform more acceptable. More accessible to other countries around the world.
So I'm optimistic about Roblox. I'm watching it here as it goes public today. I don't know a ton about the company, but just knowing what I do know about what the technology is and what it can hopefully be in the future, I think it's a good innovation stock that could have a good move after its IPO. I think like many IPOs, it's going to spike and then dip over the next couple of weeks and possibly find some traction in the future. But again, like a lot of IPOs, it's a uh, risky stock right at the beginning. So,
venture capital to create games. So we have people wanting to utilize the Roblox platform, like coming from creating mobile apps and coming from Steam to Roblox because of the mass viewer base that they have. So.
Megan, I was just talking to my brother who has two sons, 5 and 8 years old, and he says that they've sort of left Roblox behind and they're all in on Fortnite. So I wonder, do kids and developers, do they eventually move on to other platforms like Fortnite that have their own metaverse and virtual concerts and things like that?
I think that I just had an answer in my head. It just escaped me. I do think that as people grow older, maybe they come into different interests. But Fortnite, for example, it just has one game loop or maybe like 2 game loops, depending on what game mode you play. Whereas Roblox has millions of different experiences, and they are doing a really great job bringing back that older audience. I, for example, just read a Twitter thread of a mom of 3 who is just playing Roblox. We get tons of messages from adults playing Roblox with their kids. It's a really great way to connect with their kids. And yes, as kids get older, maybe they'll find different interests, but I think that Roblox will always hold a very nostalgic place in their heart.
Right, and I don't think we've seen the last of the business model expanding into places like education and more will be an interesting next leg of growth for the company. Megan, thanks so much for being with us.
Yeah, thanks for having me. I appreciate it.
Keep your eye on Apple today. Webbush Dan Ives adds it to the best ideas list. Says 250 million iPhone sales could potentially be in the cards for the year. Price target 175. Shares giving back a little bit today. Back in a minute.
Welcome back. I'm Rahel Solomon, and here is your CNBC News update at this hour. In Hawaii, flood warnings remain in effect through tonight. Unprecedented rain there causing damage across the state, but especially on the islands of Maui and Oahu. Russia announcing that it has slowed down Twitter service in the country over the company's failure to remove banned content. Officials point to posts on child suicide and pornography, but authorities have also criticized the use of social media to organize protests, calling for the release of opposition leader Alexei Navalny. British newspapers going all out on Buckingham Palace, breaking its silence on Prince Harry and Meghan Markle's allegations of racism. Many focusing on the statement that recollections may vary of the specific events. Some also criticizing the royal family, saying that they have failed to quiet the controversy. And also in Britain, a police officer has been arrested as a murder suspect over the disappearance of 33-year-old Sarah Everard. Everard was last seen a week ago in London. And you are now up to date. That is our CNBC News update for this hour. More Squawk Alley right after this.
Welcome back. Experience management software company Qualtrics posting fiscal fourth quarter results that topped analyst forecasts. The stock currently up fractionally for the day. Qualtrics founder and executive chairman Ryan Smith joins us now alongside CEO Zig Serafin. Guys, good morning. Zig, I want to start off talking about the momentum that you guys noted in the quarter, particularly when it comes to large customers. Give me a sense of the enterprise customer base. 132 customers added in the quarter with annual spend above $100,000. That's big spend.
Yeah, well, good morning, John, Carl, Theodore. Thanks for having us on. We appreciate it. Well, Q4 was an outstanding quarter for Qualtrics. It caps off a record year for the company. You know, in fact, we brought on over 2,000 customers obviously in what was a pretty amazing and frankly precarious year for a lot of people. And so we had 72% growth also in $1 million plus customers as well. So it's been a record year and also a record quarter. And if anything, it's showing just the leadership of what we're doing in the experience management category. And in fact, what we're seeing is experience management is becoming as critical to business success as any CRM or HR system. And the data that we're enabling companies to be able to use is becoming the most valuable data set within an organization. The ability to be able to understand the feelings, the emotions of your customers and your employees towards how you run your business and towards how that affects your brand is just golden. So this is just how customers want to stay relevant and far more competitive in their industries.
And Ryan, tell me, it seems to me that in a year like the one that we just had, experience management potentially matters more than ever because people's experience is so much different than it's been in the past. It's not as predictable. You need fresh data. How has the customer ask, therefore, shifted for Qualtrics over the past year?
Yeah, look, there's not a CEO that we talk to who isn't going, hey, I don't have a playbook right now. And going and looking at the data that they did in the past just isn't a solution. I'll never forget, this last quarter having a cruise line call us and say, hey, like we want to upgrade our Qualtrics license because we need to figure out when to cruise, where to cruise, how much to charge, what emotion is it going to take for not only our employees, but our customers to actually feel safe. And that's the world we're in. And then if you also put on top of that disruption's happening for companies within their experience gaps, which is really where the experience is not well. So if you want to be competitive, you have to understand the emotion, the feeling, the sentiment, and you have to do it in real time of the customer base, your employee base, or if you're launching new products and brands. And we're the only platform in the world that brings that all together in one holistic view to enable an organization. And so I think this is something we've been working on for a long time. I mean, I'm going into my 20th year, and it's playing out.
Good morning, Ryan and Zig. It's Deirdre here. I have a question around privacy. As big tech looks to overhaul their own privacy policies and protections, I wonder how you're thinking of the way that Qualtrics collects all of your data. In your S1, the listening engine was described as easy-to-use tools to listen to both solicited and unsolicited customer, employee, product, and brand sentiment across any channel. So are you worried that some of your access on platforms like WhatsApp and Facebook, that they could become limited, or that customers and employees could push back in that sense as privacy is sort of rethought? Zig, I'll pose that to you.
That's a great question, Deirdre. So look, I mean, one of the metrics that we've looked at is just the massive shift in how people are standardizing on our platform. I mean, like I mentioned, we have a 72% growth in $1 million plus customers in the enterprise. And the reason why is customers understanding the importance of bringing together all of the different forms of data around people's emotions, perceptions, their preferences. That data comes from social media channels. It comes from solicited channels, any form of ambient listening that you might want to be able to use to be able to pay attention to so you can serve your customers and engage your employees more effectively. And this is becoming central to how businesses are running. Part of the Qualtrics platform benefit is the security and the governance capabilities that have been built into the platform. It runs globally. It's treated differently depending upon the country that you're in. And so this is becoming a priority, and it's part of one of several reasons why enterprises are standardizing on our platform.
Yeah, I would just add that they're also protecting themselves by coming onto the Qualtrics platform and looking at their whole organization holistically and saying, hey, where are we exposed if we put everything onto one single vendor, one single secure platform? We're actually becoming way more compliant.
I guess I understand how that serves your Qualtrics customers, but your customers' users is sort of what I'm talking about. Do they want that much data collected anymore? And also, when you look at sort of what Apple and Google are doing in terms of protections and third-party cookies, does that limit your access?
Well, part of the thing about our platform is we help our customers do a great job in helping their customers to decide what data they want provided and how they want to be understood so that their customers can, they can do a better job with their own customers. So, what preferences, what are the things that matter to you when you're doing your online shopping experience, for example, and what do you want that business to understand about you based upon your terms? And so our platform ends up enabling that, and then customers can do a better job in how they end up delivering products and services to them.
Ryan, tell us how you're strategizing around talent, particularly coming out of SAP. I mean, Zig's got quite a background at SAP and Microsoft. You seem to, have been an add-on for them, but now they're an add-on for you in a way. And I'm particularly interested in this, kind of following on to a conversation we recently had with Frank Slootman over at Snowflake, who was talking about cloud scale and the importance of being able to take advantage of that and push talent in the right direction.
Yeah, so there's two areas of talent that we're focused on. Obviously, we're helping every company in the world right now that we're working with, measure and try to understand what their talent needs. But also on the Qualtrics side, I mean, I think that if you look at the talent that we added as we spun out as an independent organization of SAP, we were able to add what I think is the best team in tech. I've been doing this for a while, and we couldn't be more thrilled with the amount of talent that we've added. But look, it's one of the most critical pieces. You bring up a good point, because right now, especially with sending everyone home and then trying to bring people back in some cases, if you do not have a pulse on, first of all, how you're going to recruit and retain, but not only that, how to help folks be safe and productive and feel good, and that's what we're focused on. I mean, we're privy. We get a front row seat to every single organization from a talent standpoint on how they're using Qualtrics to engage, but we're also our biggest fan of our own products, because we're using Qualtrics for everything. And so we like our position. SAP is one of our best partners. They understand our mission. We understand their mission. There's not a day that goes by where I personally don't have tech companies, specifically in the US, saying, hey, how do we have a stronger partnership with SAP for global expansion? And we get the benefit of that world as well. And so we feel very fortunate right now.
Ryan, you mentioned the competitive landscape a few minutes ago, so I wanted to ask about one in particular, and that is Microsoft getting into the employee experience and engagement market. Obviously, they have a large hold on the enterprise market that has hurt some of the other companies, thinking of Slack in particular. How do you think about their arrival to this market? How do you defend your market share, or is the pie just growing? There's enough for everyone.
Yeah, I mean, experience management is a $60 billion market. The TAM, it's grown since last time we were out on the road. But particularly with Microsoft, it'd be an injustice if I answered that question, given that Zig was there for 17 years. So I'll kick it over to him.
Yeah, look, myself and a number of my colleagues who used to work at Microsoft and a number of other very well-respected companies. I mean, look, Microsoft's a partner, just like many other major high-tech companies that are working closely with us, and they're leveraging our platform. We're closely working on how to take advantage of experience management as part of some of the most important business experiences that people run on an everyday basis. And we've got a 10-year lead in this space. We have the deepest, the richest data set that's based on billions of interactions that take place. It's a $60 billion total addressable market. We're helping to innovate. We're enabling an ecosystem that's building around our platform. And that's frankly why a lot of customers are coming in and looking to standardize on Qualtrics and make it a platform that is as critical as what they use with CRM, what they use with HRS systems, and so forth.
Zig, it's challenging for investors to figure out the scenarios under which the giants, the enterprise giants, tend to win versus the situations where more focused players tend to win. And so where Qualtrics is concerned, you've got a lot of frenemies. I'm thinking about, the Adobes, the Salesforces out there that are doing a lot of things, but also trying to focus in on experience. What are the metrics that investors should look to be able to tell the momentum and influence in your business that's different from what they see in theirs?
Well, I think as a company, we're a growth company, and everything that we're doing is focused on the long run. This company, I mean, Ryan can add to this. From day one, 20 years ago, it's been focused on the long run and has been extremely successful in making progress by thinking about where customers want to be able to address the way to leverage experience management as part of the way they end up running their businesses. And, when I look at metrics, I mean, just look at the results. In Q4 and our last year, the number of customers we're bringing on, again, over 2,000 customers this last year. That's more than what any one individual company might have in this space sometimes. And that's what we're bringing on incremental in this last year. I look at the number of customers that are standardizing on our system. The number of $1 million plus customers growing at 72% year over year. Really shows signs of what's happening in this market. And I think it reinforces the fact that this is one of the fastest growing software businesses right now. It's a $60 billion TAM, and we've got about a 10-year lead on it.
Well, look forward to having you back to continue to track that progress. Zig Serafin and Ryan Smith.
Thank you.
Thanks for having us on.
Meanwhile, we are keeping an eye on GameStop. It is up more than 30% this morning, looking for its sixth straight session in the green after having doubled over the last 5 days. $483 was the peak hit in late January. After today's gains, it is now the biggest stock in the Russell 2000 index. We're back in just a minute. Stay with us.
NASDAQ trying for another day of gains, but some Chinese tech stocks kind of sitting out this rebound. The KWEB ETF's down more than 2%. Some notable declines in components like GSX, Baidu, and NetEase. That ETF, by the way, down more than 15% in 4 weeks. Dow's up almost 400, though. Squawk Alley continues in a minute.
and cash. You'll also learn about routine portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
Stephanie Lewicki here with your TD Ameritrade Network Market Update. Let's look at the stories making headlines this hour. Shares of General Electric are down almost 6% after announcing that its board of directors will recommend shareholders approve a 1-for-8 reverse stock split, given the industrial conglomerate's significant transformation over the past several years. GE also provided 2021 financial guidance, which was a bit downbeat on profit, but in line with revenue, and confirmed a $30 billion deal with AerCap Holding. A week after reporting a massive crude oil inventory build of over 21 million barrels, the EIA reported another surprise build. The authority reported an inventory build of 13.8 million barrels for the week to March 5th. In gasoline, the EIA reported an inventory decline of 11.9 million barrels, which compared with a decline of 13.6 million barrels estimated for the previous week. In distillate fuels, the authority estimated an inventory draw of 5.5 million barrels for the week to March 5th. This compared with a decline of 9.7 million barrels for the previous week. And the Bank of Canada left its key overnight interest rate unchanged at 0.25% as expected, and said it would maintain its current policy of quantitative easing. The central bank reiterated that it would leave rates unchanged until economic slack is absorbed, currently expected at some point in 2023. The bank also recommitted to buying Canadian government bonds worth at least $3.1 billion a week as part of those efforts, though it indicated it could pair such purchases once the recovery regains its footing. This has been your TD Ameritrade Network Market Update. Now back to Fast Market with Alex Coffey and Kevin Hank.
Thank you, Stephanie. I'm Alex Coffey. He's Kevin Hanks. This is Fast Market. Kev, we got about 5 minutes here to the end of the show, but crude oil having kind of a volatile morning. You can see the ups and downs in the crude oil future since the early morning hours here in Chicago. 63.57 is where it sits right now, down 44 cents, about 2/3%, near its lows, at least since the mid-morning here. So we'll watch that. Crude oil, we've talked about its strength as of late. Fading a little bit the last few days. But let's talk some JD.com. This name has had an incredible move over the last year. Looking at 137% upside since the beginning of 2020. And really until the last couple of weeks where you saw some of these, high growth names fall out of favor, it hadn't really been tested much at all to the downside.
Yeah, this is a name that it's kind of an interesting discussion, right? Because what's going on in China with some of these online finance companies is getting a little dicey. And so, you saw the Ant IPO get canceled. You saw JD kind of postpone or cancel possibly their IPO of what, in Shanghai. So there's a lot of things going on with this name, but that's a different trading story. What we're trading here is earnings before the open on Thursday. And, Alex, this is a tricky one because we haven't had a lot of success this quarter, this earnings season with iron condors. But if you think that a $5 move, $5.20 move, which is basically 6%, 7% in JD is too much or too little, you should probably, either look at the iron condor or not. Now, we're a little tormented by this because I don't have big confidence in this, even though I like the prices and I like the expected move. So I've got the 94.98 call vertical. I've got the 84.80 put vertical. So a little bit tighter on the call side, which should give us a little bit of a short delta here because we're $5 wide, but you have to do, we're only doing $4 wide. You know why, Alex? Because I can't do $2 wide because there's no 82 put to trade. So it's 84.80 on the put side, 94.98 on the call side. We're going back to the well on an iron condor just because based on the expected move, that's the fundamentally sound trade to make with an earnings play. But my confidence level is a little shaken after the last couple of weeks, Alex.
And so, Kevin, with the $4 wide spread, let's say that you're someone who would look at the $2 wide spread and they would maybe do two contracts. That would be their position size. If you're now doing a $4 wide spread, if you wanted to keep it consistent, just do one contract. And of course, that would sort of neutralize and keep things in terms of that same notional risk that you're typically taking on the trade. We talk about 5 lots quite often. So maybe in this case, we would look at 2 or 3. But let's walk through the risk here. $1.20, well, that's the max profit. So if we fill it at $1.20, we could keep that if it stays between 84 and 94. Break evens would be 82.80 and 95.20 on the upside. Risk on this trade, you take the $4 wide, net out that $1.20, leaving us with $2.80 in risk for every one of these spreads that we would do. So, Kevin, we're just casting a net over JD.com here, and what we're going to do is set our slices to break even so we can illustrate this on our chart. What I'm going to do is set the slice to our chart, and we'll get an idea of the price action over the last year and where this would kind of add up. And so I can see, Kevin, looking at this, you know, why you're hesitant for this strategy, but at the same time, it's a pretty big net being cast over, and it's one that's basically just leaning into the volatility that's elevated here into the earnings event.
Yeah, exactly right. And this is one, you know, like I said, this is one that we're trading the earnings event. And this may be the one, if you get an inside move, inside these strikes, take it off pretty quickly and take your profit and move on to the next one. We'll see what their earnings come out with. Like you said, Alex, we've cast a pretty wide, navigational beacons on this one, staying in between 94 and 84, a little on the short delta side, but safe in terms of making a nice wide range for JD to trade in, Alex.
And you look at the chart here with our lines that represent our break evens, you're capturing some technical points that are probably to some extent significant. You look at kind of the prior highs around the beginning of the year, some busy areas here on the upside, and then on the downside, a pretty busy area of prior resistance, potentially going to act as potential support here going forward if you do see a bit of a sell-off. But it's an earnings event. Anything can happen, and we'll find out when they report between now and tomorrow morning's show, and we'll adjust this as necessary for that. Kev, about a minute left here. Thoughts on this morning's action? You got equities, again, strong, but this time led by the Russell as opposed to the NASDAQ that we saw yesterday. Crude oil, fairly quiet morning after some early volatility. Now as we go on, gold unchanged, the bond market essentially unchanged. Seems like the action today is, again, more rotation within equities.
Yeah, quiet bonds, Alex. Quiet bonds favor stocks here as that spike up to 1.5. The investing community starting to get comfortable with a 1.5 10-year yield, Alex.
And we'll see if it hangs out there, works its way lower, continues its ascent towards 2%. We'll save that conversation for another show. Kevin, we're out of time. Make sure you check out Kevin later on this afternoon on Midday Trade. He'll cover a couple more names and look at example trades on those ones. And then, of course, stick around for your first trade with Scott Connor. That's coming up next here on the TD Ameritrade Network. This has been Fast Market. Thanks for tuning in, and we'll see you tomorrow.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now. Welcome to Your First Trade. I'm Scott Connor, a 30-year veteran trader, and on our show, we'll be taking a look at a couple different things. We have an example trade that we'll be looking up under the symbol CLDR, Cloudera. Now, they have earnings after the close, so we'll be looking at an example trade on that. Also, we'll be joined by Ken Rose to talk about testing options for the effect of time and price. It'll be an interesting segment looking at how options prices change for that. And finally, Pat Maloney will join us, and we're going to talk about an important chart drawing tool called Fibonacci retracement. So we have a lot to cover. Let's start off by looking at the four major indices right now, see where they are, and they are holding gains right now. The S&P 500 is up about 0.75%, or about 30 points, and that puts the S&P at 39.05. The NASDAQ up about almost 0.4% of a gain of about 48 points. That puts the NASDAQ at 12,843. The Dow Jones up 1.25%. That's a gain of about 397 points. That puts the Dow at 32,230. And the Russell, strongest of the four indices, up 2.12%. That's a gain of almost 48 points. That puts the Russell at 2292. Now, the VIX or fear index, which we have seen move all over, but particularly today is showing some weakness. It's coming down. It's down to 22.5. We haven't been in the 22 range in quite a while. That's down 1.53, which is a loss of about 6.3%. So at least so far today, it looks like we're seeing some fear and uncertainty come out of the market. Now, let's dig a little bit deeper and go into the Market Watch tab, take a look at the quotes and see how the different sectors are doing today. And the first thing you'll notice is that it's green across the board. So we're seeing a pretty good breadth, if you will, across the board, and all sectors are up on the day. Where are the leaders? Well, let's start with financials, up 1.6%, materials up 1.58%, energy up almost 1.4%, industrials up 1.08%, and healthcare up 1.06%. So those are the five leading sectors showing strength today. Let's drop down to the bottom and see where even though the sectors that are up, not quite as strong. Communication services up about 0.5%, as is consumer discretionary. Utilities up about 0.4%. And finally, IT, which had a big day yesterday, up about 0.25%. All right, so all the indices, sectors are up. Now let's go to the Visualize sub-tab, take a quick look at how that lays out on a snapshot of the market. And we're looking at the S&P 500 here.
And you can see most of that green is concentrated over here on the right side of the chart. So I think what we're noticing here is that when the left side of the chart is green, that's when we're seeing the IT, information technology, communication services stock lead the way, just like we saw yesterday. Today, it's a little bit of the reverse. That green is shifted back to the right side, where we can see energy showing some green, materials, industrials, financials, as we mentioned, showing some strength, and healthcare as well, all showing relative strength here today. On the left side, though, we see a couple names like Apple down about 0.6% on the day, Alphabet down just a tad, Facebook down, also down just slightly on the day, as is Amazon. Amazon actually virtually unchanged at this point. So it looks as though the IT stock's really not participating in the rally as much today. All right, we'll take a quick look at what happened internationally coming into the opening of the U.S. Markets. And to do that, let's take a quick look at Germany. It closed up about 0.6%. France was up over 1%, 1.1%. The UK down slightly, just about 0.1%. Hong Kong up about 0.5%. And the Dow Jones Shanghai showing a small gain, up about 0.1%. So setting the table, if you will, for the U.S. markets, it looked like we had some relative strength, but calm markets, I have to say, overall. Well, let's quick look at what the indices are doing. Markets holding their gains. So let's talk a little bit about what's behind the market, what's impacting the four major indices. And to do that, we're joined by Your First Trade contributor, Sean Cruz. Sean, welcome back to Your First Trade. Good to have you here. And yesterday, big move to the upside, kind of what I heard referred already to turnaround Tuesday for the tech stocks yesterday. And we definitely saw the NASDAQ disproportionately gaining over the other indices. Is today kind of the test is just to see if the tech stocks or that tech sectors can hold their gains, Sean?
Yeah, I think so. And I think really, we've talked about this, Scott, it ties back to what's going on with yields. And are we going to see some sort of a moderation, if nothing else, even just stability in yields? Having them maybe level out and even trend sideways would have been good enough, I think, to allow for some sort of a modest rally. But yields actually pulling back yesterday helped, and seeing the yields remain low today, I think, is another thing that it is sort of making investors feel a little bit more comfortable coming into those high growth names that were pretty reactive to what was going on with a little bit of a volatility in the yield market, especially for looking at the 10-year Treasury. I do think looking at some measures of volatility, we like to look at the VIX, and that's the S&P 500 Fear Uncertainty Index, but there's also VOLQ, symbol VOLQ, which is basically like the VIX, but it's for the NASDAQ 100, and it sort of gives you a feeling of how much uncertainty there is, really just focused in those tech-driven names. Because if you look at the VIX, you're also getting energy, financials, healthcare, a lot of utilities. You're getting a lot of, a more broad-based sector look. Whereas if you're looking at VOLQ, you kind of get a finger on the pulse of how much uncertainty there is sort of in that tech-focused sector. And right now it's pulling back. It's down to about 28. 24 is a level that you want to keep an eye on for VOLQ, because that could actually be something that maybe leads to more of a sense that investors are feeling pretty good about going back into some of those tech names in a more meaningful way. So definitely going to be something to watch here moving forward, is more stability out of rates. And if that leads to a better sense, a better faith in investors of going back into some of those high growth names.
Got it, Sean. Well, we had not too much economic data yesterday, but today we have several numbers. Why don't we kick it off and look at some of those? One of the first ones that come out was the mortgage applications. And this number actually looked okay in terms of purchasing, but maybe not so much on the refi side. Sean, what was your takeaway here?
Yeah, so it was interesting. So the purchase applications were actually up 7.2% from the previous week, 2% versus the year prior. But mortgage rates themselves ticked up slightly, and you're starting to see refinancings fall off. And I think it makes sense that as you get just even small incremental increases in that benchmark mortgage rate, the 30-year mortgage, you're just going to see a lot of people just completely have no interest in going out there and refinancing. And my theory is that there's just a lot of people who, if they were going to refinance, they probably already did when you had mortgage rates at incredibly low levels. So I think there's just the pool of investors that are going to go out there and be incentivized to refinance is probably so small, especially if you're getting incremental moves higher in mortgage rates. Now, if you see mortgage rates move lower, then you might see some people who maybe say refinanced when rates were sitting right at about 3.2%. And if mortgage rates go back to 3.1%, then maybe they're going to be incentivized. But if you refinance at 3.2 and now mortgage rates are up at 3.26%, you're just not going to want to refinance to a higher rate. So I think that's what's really driving that. But it does show that even at these elevated mortgage rates, there's still a lot of demand for housing. I think they probably benefited from a little bit of a snapback if there were any sort of limitations on people wanting to get out there and go look at new homes, be it related to COVID or the weather-related effects we had last month. You might see just more people coming back out and getting out there looking at homes and then making purchase decisions.
Got it, Sean. All right. Well, there was another number came out today. I think that has kind of been on the radar for many market observers, Sean, and that was anything having to do with inflation and prices. And we saw that today. The CPI, Consumer Price Index, came out. And I did notice when this number came out before the market opened, about an hour before the market opened, there was definitely a jump in the futures, the indice futures. But it looks like those numbers came in kind of tame, Sean. I think, does this sort of put a damper on the inflation fears?
Yeah, I think it does. And if you want to maybe to look back in the energy space, there was still some hefty inflation. You're looking at gasoline was up 6.4%. Looking at crude oil, that also moved higher. So there's a lot of upward pressure in that energy sector, in that energy reading. But that was also there last month. So the question was, what allowed it to maybe back off a little bit? And it was in that core reading where you take out food, you take out energy prices. And it just for perspective, last time we got this reading, apparel was up 2.2%. That was actually down 0.7% this time. Looking at transportation services, still ebbed lower, so that was moving down as well. So you didn't see some of those pockets of upward pressure in the core reading, and that really, I think, gave investors a little bit of faith that maybe we're not going to get some runaway inflation, at least right now, out of the gate, and that is also then spiraling over into that yield picture, because when yields move higher, in a very basic back of the envelope type of a calculation, you look at growth expectations and inflation expectations. So if growth expectations are moving higher, that can push interest rates up. If inflation expectations are moving higher, that can also push interest rates up. But seeing this inflation rate remain tame and not coming in hotter than expected, I think that is another thing that, one, led to yields moving lower once again here, but also that bled over into those yield-sensitive sectors that have been volatile because of what's been going on in this move in yields. And that's why you're sort of seeing a little bit of a confirmation of that move out yesterday. Now, the one thing we definitely want to keep an eye on today that's going to be coming out is looking at some of those bond auctions, because that was another really big item, and I think it's another item that people are going to be looking at. We have the 10-year note coming out here in a little bit. So I would say keep an eye on markets here for the next hour or two, because when that 10-year auction goes off, typically no one really pays too much attention to that, but I think that could have implications for the market now.
Got it, Sean. All right, well, we'll keep our eyes on prices. I know that the market's very sensitive to any talk about inflation and employment for sure, but inflation. We're going to get another number on Friday, the final for the PPI, the Producer Price Index, so we'll watch that one as well. Sean, let's just touch on one other thing that happened today is that the EIA came out with the petroleum status. In other words, this gives us an idea of what the storage numbers are right now. And last week, there was a build of 21.6 million, and this time there was a build of 13.8 million. Those are pretty significant builds in the oil or the crude oil supply. And I did see oil drop just a little bit, Sean. Looks like it's about 63.5 right now. Anything to take away from this reading?
Yeah, it was a surprise build, and their expectation, the consensus, was for around 800,000. So you're expecting 800,000, you come in at 13 million, 13.8 million. So you almost overshot that by 13 million barrels. I think it makes sense. You're going to see a little bit of pressure. I think a big part of that comes in the refining space, and there was maybe a lot of refineries that were being shut down or now being brought back online because you see, if you get the refineries shutting down, then oil kind of has nowhere to go. It almost creates a backlog. So, the energy producers pull the oil out of the ground, then they ship it to the refineries turn it into gasoline, polyurethane, whatever it might be, any sort of crude oil related products. You didn't see that. And I thought one thing that was interesting to me, gasoline stocks, which is also part of this report, actually dropped 11.8 million. There was the expectation for about a 3 million drop, but there was a significant drop in the inventories of gasoline. And I think that sort of confirms that theory that the oil was getting pulled out of the ground and just sitting there. If it was getting pulled out of the ground, going to the refineries, turned into gas, you would probably see the gasoline stocks maybe not dropping as much, but you had some pretty strong weather-related effects still going on. I think that it led to demand for a lot of those refined oil products. But you didn't get that replaced because the refineries weren't firing on all cylinders. So I do think it's going to be interesting to see if that sort of corrects itself, if we start to get refineries back up and running and you get a lot of this backlog pushed through. But keep in mind, refineries, they have capacity constraints, so they can only refine so much oil at a time. So it might take a little bit for this to smooth itself out, but it'll be interesting to see what happens with this report in the weeks to come.
All right, thanks, Sean. Well, certainly weather makes sense in terms of why we're seeing, a build of crude oil, but depleting supplies of gasoline. So we'll continue to watch that. Sean, we just got a minute left, but let's touch on a couple stocks that are on the move today that you have your eyes on. One of those being Boeing, symbol BA, and the other one, Honeywell, HON. Sean, what do you see in these two names?
Yeah, at first blush, I thought maybe the Boeing news was somehow related to what was going on with the GE aircraft financing unit sale to AerCap, but actually Boeing came out and actually announced the first net increase in orders that we've had for quite a while. And I think that was really giving investors and analysts a little bit of faith that maybe Boeing is going to start to emerge from everything that was going on with the 737 MAX. Then you had the pandemic where all these airlines were having to cancel orders because they just didn't need the jets. I think it looks like that might be starting to come out into the clear here a little bit. I don't think we're completely out of the woods just yet, but I think this is significant progress. You're seeing Boeing move higher as a result. And then Honeywell moving into a little bit further into their fire safety communications business with an acquisition. They did say they don't expect it to have a material impact on financials this year, but I do think you're seeing it move a little bit higher because people do like seeing them go into this space because it's a high growth space. And if you're going out there and getting into fire protection, sometimes that might actually even come with government mandates. So it could be an interesting space for Honeywell to go into where it's high growth, higher margin because it's a little bit more on the software side of things. So it'll scale a lot better. Seeing Honeywell move higher as a result as well. So some good news for some of these industrial companies today.
Got it, Sean. And Honeywell actually moving quite a bit above its level that it was a year ago, but Boeing just about almost exactly where it was 1 year ago, but still quite a bit lower than its highs. All right, well, thanks again, Sean. We look forward to you joining us again on your first trade to help break down the markets and bring our attention to stocks on the move. All right, well, coming up next, we'll be joined by Ken Rose, and we're going to talk about testing options for the effect that time and price has on option values, how prices change in those two parameters, and what it might mean for options and option strategies. So stay with us. We'll show you that tool in just 2 minutes.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo Webcast Series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today. Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
Welcome back to Your First Trade. I'm Scott Connor. Now let's do another quick check on the four major indices. They seem to be holding their gains. Right now, the S&P 500 up about 0.75% or about 29 points. NASDAQ up just over 0.25%. That's a gain of about 36 points. Dow Jones up 1.25%. That's a gain of about 395 points. And the Russell over 2% to the upside, 2.17%, a gain of 48, almost 49 points. VIX holding in the mid-22s, 22.55 right now. All right, well, let's turn our attention back to the Thinkorswim platform. And as I mentioned, we're going to be leveraging a dynamic function on the Thinkorswim trading platform that displays a calculation of how an option strategy or an individual option might perform in the future. Now, you'll learn how this tool leverages the Greeks to stress test a strategy against the effects of two very important parameters, and that's time and price. Now, join me to break down how Thinkorswim platform can help stress test an option, so to speak, is Your First Trade contributor, Ken Rose. Ken, welcome back to Your First Trade. Good to have you here. And we're talking about something I think probably some of the most important, at least for me. I always enjoy using this tool on the Thinkorswim platform because it gives you that sort of that insight as to how an option might behave, depending on how these parameters might change. So let's just start off from maybe the very beginning, Ken, for our viewers who might not be familiar with this tool, because we keep talking about forward testing or stress testing, but maybe we should define what we mean by that term stress testing, Ken.
Certainly, Scott. Stress testing is a method of subjecting an option strategy to the principal variables that affect option pricing. Everything from an individual option to the most complex strategy can be tested. Some also refer to this process as forward testing, Scott.
Well, that makes sense, because we're looking forward into the future to see how changes in some of these parameters you just talked about, particularly time and price, how that's going to change an option's value, whether that's an individual or, like you said, a more complex strategy. So we're looking at time and price. Are these the only parameters that really the options traders focus on, Ken?
Well, Scott, on Your First Trade, before choosing a strategy, we always look at time, price, and also volatility. Each of these variables do have a unique effect on an option strategy's price or value and can be measured by the Greeks. Today, Scott, we'll primarily focus on time and price.
Well, you're absolutely right, Ken. We talk about Your First Trade checklist, if you will, of parameters that we sort of have to think about, and always time and price. But yeah, you're right. Volatility is one of them. I heard you mention volatility as well. All right, well, let's talk about how this tool on the Thinkorswim platform, as I mentioned, I love using it. I think it's a great tool. But how do other options traders benefit or find value in this feature, Ken?
Well, Scott, a great functionality here that is provided to options traders. This forward testing tool on the Thinkorswim platform allows traders to create a scenario or even scenarios and essentially peer into the future to see how a particular option strategy would theoretically behave under different scenarios, Scott.
Got it. All right. So a key word there is also theoretical. Obviously, it's built off a model that's part of the Thinkorswim platform. But then again, you as the user get to change those parameters to see how something might play out. So maybe what we'll do here, Ken, is give our viewers an example of how this can work on the Thinkorswim platform, and maybe start off keeping it simple, like just an individual option, Ken.
Sure, you bet, Scott. For an example, perhaps we could use Facebook as our stock. And of course, start as we always do with looking at time and price. For time, why don't we use 3 weeks? And for price, why don't we take a bullish stance and assume that Facebook goes up during that time? Now, we can choose an out-of-the-money call, for example, and we can subject it to different scenarios to see how it might play out.
Got it. All right. So let's go into the Thinkorswim platform. I've got the trade tab open. I put in the symbol Facebook, Ken. And let's see, you said about 3 weeks. So I'm looking at options that expire in 22 days. That should fit the bill. Now, let's look at a call. And again, with calls on the left side. And you said an out-of-the-money call, because right now Facebook is right around 265. So tell you what, Ken, I'll look at how about the 270 call? That's a little bit out of the money. And it looks like its fair value right now is about $6.65. And again, I'm looking in the column that says theoretical price. And that's showing me theoretically what that price is right now, the value. And of course, it just looks at the bid and the ask and kind of takes that midpoint to give us the theoretical value. So got it. So if we use this as our demo, then we'll go ahead and play out some different scenarios. Now, what's important, I just want to set this up for everybody, Ken, is that this tool is right up here, the Theo Price tool. And you can see it shows 3 things: a date, shows a stock price, and it shows volatility. You can see those 3 parameters that we were just talking about. And again, we'll be focusing on the price and the date, the stock price and the date principally here. But again, you can see volatility as well. But the only way to get this Theo Price tool up here is to make sure you have theoretical price in one of your columns. And if you change the column header to theoretical price, this tool automatically pops up. So if you're not seeing it on your Thinkorswim platform, change one of the column headers to Theo Price, because that's what we're going to be using. We're going to see how that Theo Price changes when we change these parameters. Now, how do you do that? Well, click on the Theo Price tool, and here's the box that opens up that allows you to change the date, change the stock price, and finally, change the volatility levels to see how that theoretical price will change. So, Ken, maybe we'll start off with testing for that one of those 2 variables we're talking about here, time. How do you want to take this, Ken?
Right, Scott. So when we're looking at the Greek time, we're talking about theta. We can kind of look at theta. It starts with the T. T starts with time as well. Theta is basically giving us a measurement for each 24-hour period that calculates the expected loss or erosion of an option's value. Holding the other parameters equal, we can forward test the cumulative effect of time on an option at any point between now and expiration, Scott.
Got it. So that key word you used there was erosion of value. So calls, puts, whatever option it is losing value because as time progresses, that option's running out of time for the stock to move to its strike price, right? In the case of our call, the stock needs to move $5 for that option to be in the money, right? Well, as time goes on, there's less and less time available for the stock to make that move. So the value of that option decays over time. So very important. Let's go back now to the Thinkorswim platform and see how the forward testing tool, the Theo Price tool, can help us get an idea of how theta works. So what I'll do then is let's keep that same option we're looking at, the 270 call, which has a theoretical value of $6.68 right now. And we're looking at today's date, and that's the value. Let's call it $6.70. Now, let's go up to the Theo Price tool, and Ken, we're just going to change the date. Now, I like clicking on the calendar here, Ken, because then it gives us where we are today, which is the 10th. You can see that's the highlighted box here. And I'm just going to move out. How about one?
Holy cow, folks. Sorry about that. I was in a meeting and was watching my other screen over here just get annihilated. Jesus, we're seeing a little bit of a bloodbath here in the meme stocks here lately. You'll see one thing, I was sorting these orders here coming in by size, and look at this just massive spike right here of volume. Someone put in an order for 172,000 shares to be sold at $290. Quick math, that is $8 million worth of shares being sold right here at $291. That is absolutely insane. You'll see a lot of people are buying back in right afterwards, but holy cow, a $50 million drop right there at 11:27 a.m. It says Central Time, so 12:27. Someone's having a surprise when they get back from lunch over there in New York because Jesus. And so that is likely because starting here, I don't know, 10, 15, 20 minutes ago, every one of these stocks just started crashing and going down a pretty significant amount. KOSS was up 40, now it's down to 28 that quickly. So, just an incredible turn of events there. And I think that's created a huge emotional swing in all of these. You see that a little bit of a bump and now it's going back down again. So GameStop back up to 241. Very quickly is moving in the green today here in a couple of seconds probably. It's right where it started yesterday. AMC quickly in the red after what was looking like an incredible day of it getting over 12. KOSS again up to 40, now it's down to 27. Express was near 5.5, now it's at 438. So we went from a fantastic day in these stocks to looking like an absolute so that absolutely sucks, guys. Oh my God. So if you were paying close enough attention, I did have a sell order that cost $49.99. I dipped it down to $39.99 just to get it off the books, and it took. So that was only 10 shares. Wasn't a lot, but I figured I'd get a little bit out of my costs because I think these are all on a bubble. I did not expect the bubble first this fast. Did not expect that at all. So yeah, look at AMC at 12.2 at 11:18 a.m. 12 minutes ago, and now it's down to 10. So man, what a massive swing. 20-ish% swing. 12 minutes. Absolutely incredible. It looks like GameStop is stopped. GameStop appears to be probably must have been a circuit breaker on the downside. Calls at 0.72 over 248 and hasn't had a trade in 2 weeks. So I wasn't paying close enough attention to see that, but that's like what looks like what happened there. It actually looks like KOSS probably has that as well. It has moved in a little bit. AMC, it had a huge drop, but I guess it didn't hit the circuit breaker. It's a little surprising. It started to go back up. So is Express. Maybe we hit that. I have no idea what happened that created such a large amount of sales because even before that 172, there had been some massive other sales because that volume spike happened right there, but you'll see that there are volume spikes right before that big sale. So it looks like the big sale actually came after this big. So this drop happened, hit the circuit breaker, and then this drop happened with the 372,000 shares. So, man, what an interesting turn of events. But here's the good news. Right before the circuit breaker, there's all these buy orders in there. So it seems like a lot of retail investors that are buying this dip. A lot of people still believing in GameStop. 1, 2, 5 shares, maybe 700 people. But most of these are small investors, which means they're probably small retail investors trying to get 248. Hopefully, it'll be good for them and it'll ride back up just like what AMC and Express. So hopefully, once it comes off the circuit breaker pause, it'll run back up. This could be just one of them wild afternoons where it's a circuit breaker up and then it's a circuit breaker down, back and forth, back and forth. We'll see. Now, if it's still on a pause, it could miss this run up if AMC and Express are turning back in bed, which they are. So that you could miss this run up right here on GameStop and KOSS. So that's unfortunate. Hopefully these red sticks will turn green. Man, what an interesting trend. Look at all of them. All of these that I'm watching here, just even naked group volume spike. Actually, volume spiked as it was up, and then it just also went down. Not as big of a dramatic turn to some of those others, but still a decent turn. Man, um, what an event here last 20 minutes. Not a good one, but quite the event. Let's go over here. See if Ameritrade News is just talking gibberish and stuff. This is actually what's going on right now.
The middle of March.
Yeah, so, I came on and I was worried that the 10-year was going to go back to normal, but I was thrilled the world was going to go back to normal, right? We talked about the correlation between interest rates, the most powerful market in the world, and growth equities, which are long duration assets. Those multiples mathematically go down, right? And so if you look at those multiples, right, we're 16 or 17% off the peak multiples for growth equities, but we're still 11% above the highs of 2019. So if you ask me, we're somewhere in the middle in terms of the correction, for growth companies. I think some of them have already fully corrected, right? You take something like Zoom, it's already trading at pre-COVID multiples, but there are other companies that we think have have further to go. For us, our portfolio and our exposures, we added a bunch of hedges and protection over the course of the last couple of months. We've been taking those off over the course of the last 2 weeks and adding to the positions we love at what we think are more fair and sustainable prices.
Well, the takeaway of that is going to be we're in the middle of the correction. So we'll take a quick break. We'll come back. We'll talk more about that with Brad Gerstner, Altimeter. I know the gang has some questions for you too. We'll do it next.
Well, bloodbath looks like it's continuing. Came off the circuit breaker and now GameStop down to 216. It is now officially in the red for the day, down 12%. KOSS keeps crashing as well. Still positive for the day, 43, 45%, but way off from its high. AMC also now in the red. Express in the red too. Man, what a turn of events! And this is the roller coaster you have to have the stomach for if you are investing in these stocks. They are just non-fundamental stocks. They are simply gambling. And so huge wins and huge losses can come doing that. So absolutely know what you're getting into if you're investing. And this is a good example. I mean, these people that bought at 348 thinking they were going to the moon to 500 today, and then they just lost $130 per share in a matter of a few minutes. So that is the risk you're taking. I'm not saying that this is going to last forever or keep crashing down. It might turn back up. I do hope it does, but that's the risk, guys. You got to know what you're getting into when you're investing in these types of non-fundamental stocks. And look like CNBC is at a commercial break. We'll leave it here though, because I think their commentary is better than TD Ameritrade's, although we just have a little bit of silence during the commercial breaks.
All right, we're still awaiting Roblox. The first trade there, the reference price of $45 on the direct listing indicated a range now 64 to 66. We'll keep our eyes posted there, and we'll certainly keep them posted on GameStop. Check this out. So shares were halted. They reopened, fell off a cliff, and got halted again for volatility. We're back with Brad Gerstner now. Brad, this feels like it's bordering on the insane at this point, right? I mean, this is not how this is supposed to work, is it? You've been around this game a long time.
Yes. I have, and I'm concerned, right? Altimeter's not in the business of investing in or bringing public, speculative companies or companies where there's a bunch of risk, right? And I'm all for the democratization of markets. I love the fact, I grew up, putting myself through college, trading a really small amount of money my grandfather had left me after my dad went bankrupt. Like, I love zero commissions. I love the fact that we have information share on the internet, but I really am concerned that, there's too much promotion. There's too much speculation. There's too much treating stocks as lottery tickets for companies that are far from proven. And so again, I'm not trying to talk anybody down from having a good time, but people should be risking capital they're not afraid to lose. And I would just say, for one, at Altimeter, that's not, that's never been a way that we've tried to make money. We try to keep it really simple. Invest behind the world's most iconic founders and entrepreneurs, those who are, building companies that really are changing the world, and just stay out of the way. We don't trade very much. We buy and we hold for the long term.
Yeah. Steve Weiss, you have a question for Brad Gerstner?
I do. So, like, you may have missed Roblox a while ago. I missed you when I first met you. We were looking at investing in your fund in 2014. Huge miss. But I have another opportunity, which is in one of your SPACs, AGC, which I owned, moved up quite a bit. And when SPACs just became ubiquitous, I sold it. When are you going to make an acquisition so that I can bet on you again? Because I do want to partner with you. And that's a great way to do it.
Holy cow, folks. Look at what GameStop just came off the circuit breaker at one and hit a low 172. Jesus. Popped right back up to 198 with a bunch of tons of buy orders at 198. But man, it literally went from 216 to 172 and instantly. Jeez. So I think, did it hit the circuit breaker up already? God damn it. This is the problem. This is the only problem I have with this, is when it's off the circuit breaker for 30 seconds. I appreciate what the circuit breakers do. They're necessary, but I think they should have a open limit of at least like 5 minutes before another circuit breaker hits, because now it hit the circuit breaker on the outside within 11:41:05. And let's see when it opened. There we go. 35. So it opened at 40:44, closed at 41:05. It was open for 21 seconds. 21 seconds before it got halted again. I just don't think that's enough to react. And it may be volatility, but I think this almost spurs a pent-up volatility again. Because now it might come off. Next thing you know, it's up at 240. It might be down at 20. We don't really know. And it's crazy. And KOSS back down to 26. It might give back everything it gained. It was up over 100%. Might give everything up. AMC not halted. It's still going, but it is going down. I mean, a little bit green here, but not really seeing it. Let's see. Jeez, GameStop, man. I mean, I'm not buying back into GameStop right now. I'm going to see where this goes, where it settles. Again, I've said if it dips back down below 100, I might buy back in. If it dips back down below 50, then I definitely buy back in. I've got this buy right here at 50. Uh, but, geez, what a bloodbath it very quickly. Cut, the stock was cut in half in a matter of 30 minutes.
To watch that very closely too. John, Jerry, there's our SPAC post deal. We have a couple of indices here, post deal and then the SPAC 50. You can see the SPAC post deal is up a bit today. The SPAC 50 is not. John Najarian's got unusual activity coming up. I know he has a question for you as well, Brad. We're going to take a quick break. We'll come back more with Altimeter's Brad Gerstner after this quick break. We're back. Unusual activity. John Najarian, what do you have for us?
All right, Scott, I've got two for you quickly. XLE, this is one that I added to today, Scott. They were buying the April double nickel. That's 55 calls. Big numbers, Scott. 32,000. That's 3.2 million share equivalent. I had to add to my position. Stock was about 52 and change when I did. So I bought a lower strike, sold the upper strike 1-to-1. Second one, Scott, take a look at DraftKings. I think Pete might have talked about it a couple days ago, but wow, between social and the heat seeker, we've seen just a ton of interest in this one. I rolled up to the 67 or 68 calls today. They were buying those in big numbers, about 12,000 of those, Scott. So DraftKings, is this the time it finally breaks through to the upside? We'll see. I'm in those, and I'll probably be in those just a couple days because this is a Friday expiration.
All right, good stuff. You also have a question for Brad about another stock that
I did.
Was one of the most hot stocks of 2020, certainly towards the end of the year. I think a lot of our viewers may have been in there as well.
Exactly. And they just reported, some blowout revenue numbers and so forth. It's Snowflake that I'm asking you about, Brad. Love the company, love the cloud and what they're doing there. Is this company one, since it's so big in your portfolio, of all the ones you looked at in the cloud space, is this the one that we should really focus on?
John, great question. Nothing makes me sleep easier at night. The most significant, biggest trends in the entire software sector, run by, legendary and fantastic human beings and managers. The company is on, as you saw, an absolute tear. I mean, I always ask the, basic question, just like, how much do the customers love the product, right? And the numbers to look at in their earnings report are 168%, DNR, and over 200% what they call RPO. And that's the backlog. That's the new orders. That's customers coming in with multi-year or multi-million-dollar contracts. I think they released a number, over 12 customers now doing over $5 million a year. This is becoming the default for the entire enterprise sector, where they're going to put all of their data, process all of their data, and the roadmap and the pipeline for that company has me as excited as the last 6 or 7 years we've been investors. So I look forward to the next 5 years ahead. I said when I came on the day it IPO'd, right, like anything's possible in the short run, and we saw it a huge run up, huge enthusiasm. We didn't do anything, during that huge run up, and we're not doing anything today. It's the largest position we have in the portfolio. We've never been more excited about the company. And so when I come on here a year from now, you're going to ask me if it's a large position. I'm going to tell you it's a large position.
And even, frankly, Brad, when we said, when you were talking about that, you were quite honest about that company itself. When it went public, I can't remember what it was, at 200 times sales or whatever it was. You sort of knew how stretched that space was. Of course, you liked the company and you said as much, but you were honest in how you assessed where that company and space were in a market that at that time was just super red hot. As you said, it was 429. It came down to 230. I just want to throw it out there in an environment where everybody gets, blamed for talking their book. Not that you're not talking about the stocks that you like or your book some respects too, but you were quite honest with our viewers about what you thought was even possible for a stock that was a high flyer that you loved that could come back down to earth in some respects if the market itself corrected like we've witnessed some of these high flying stocks do. I just wanted to throw that.
Thanks for saying that, Scott. I mean, listen, I come on here and I try to do my best. I try to be honest about what we're doing, and I try to be honest with the folks viewing at home, as like it may or may not work for them, but I'm going to shoot them straight about what we're up to. And when I think about, this company, again, bet on iconic, and important trends, bet on great managers who are going to tell you the truth and who are going to deliver, right? And this company is at this vibrant intersection of both of those. But the truth of the matter is, what I was worried about when I came on then is what we just started talking about, a bit ago, which is I thought the 10-year would normalize because I'm an optimist. I believe the world would normalize. And so if you believe that, then it's just mathematical. It's mathematical that dollars will rotate back into the treasury market, that long duration assets and their multiples will compress. And like I said, we've seen that. I think at that time, Zoom was probably over 500. Peloton was probably 200. There, a lot of these stocks are down 40 or 50% from those highs. And, those were Red Bull induced highs, right? With a bunch of marginal trades going on. There wasn't real institutional demand there. And I said as much when I'm on, but I also want to be equally clear. I couldn't be more thrilled about this being the lead horse in our portfolio at $230 a share for years and years to come.
Yeah, there probably was some Tito's in that Red Bull too. That's what kind of market we had. All right, we'll take a quick break. Yeah. We'll come back. Actually, we're not going to take a quick break. We're going to go right to our futures outlook. I'm sorry. Treasury yields stabilizing after today's tame inflation report. Jeff Kilberg has our trade. Hey, Jeff, what do you got for us?
Hey, Judge, no break yet, pal.
No.
What I actually have in the next 10 minutes, we have a 10-year Treasury note auction. So I'm a big believer, as well as Tepper, that we're going to see 10-year yields come back down, dip back under 1.5%. But what's interesting, when you look at the appetite globally, there's $18 trillion still in negative yields. Therefore, I think we're going to have a strong demand today. In this auction tomorrow, we have a 30-year auction representing about $24 billion. So the trade to potentially profit off this, Judge, is I want to be a buyer of the June contract. That's the futures contract and allows us to participate to the upside here. Being a buyer at 132.05, looking for a one full handle move up to 133.05, but being mindful in the event we do see yields stubbornly stay above 1.5%, and we stopped out at 131.21. I'm risking $500, Judge, to make $1,000.
All right, thanks for the trade. We'll take a quick break. More with Brad Gerstner next. Also, final trades.
Sweet roller coaster, son of a gun. You know, I'm like the other dude, Matt, that, you know, you walk away from the computer and the chair manages things and things just turn right back around. And yeah, what happened to my chart here? Something weird on the zoom scale here, but look at this. It sure enough did what I was hoping it would do, actually, and just bottom out and turn back. I'm surprised, actually. I thought when it was going to come off this circuit breaker, it was going to crash some more, but it's not. Look at that. Then it goes up from 172. I mean, it stopped at 191, something like that, and it just flies right back up to 262. But look at this volume. Ching Gao. KOSS back up, AMC back up, Naked back up, Express back up. Man, that is crazy. So we might see.
We're told Roblox getting closer. There it is. 64 to 66 is the range. $45 was the reference price. So we will hopefully get a trade in that before we hand it over to the exchange. GameStop, got to check that one too, because we showed you it opened, it fell off a cliff, then it reopened, and now it was halted again, this time to the upside. Now it's up 6 1/3%. We're back. It's ridiculous. Back with, I know, it is laughable. I don't know what else you can do. That's the appropriate reaction. Joe Terranova, you have a question about another stock for Brad Gerstner.
I do, Scott. Brad, Pinduoduo, it's a name that a lot of the viewers are in. I know you have a large position. I'm in there as well.
So they're saying Roblox is open for trading at like 65, something like that. So it's interesting that it's going to open at trading at 65 compared to so many of the IPOs that launched over the past few months that nearly doubled instantly. We saw that with DoorDash, AI, Planeteer, Palantir, Bumble, and then Roblox, which I think was the most anticipated. Maybe Coinbase is the next biggest anticipated. Is only getting a 50% bump, so very, very interesting. Let me go here. So I put in a limit order at Roblox. I'm going to see what I can do with that limit order. Yeah, I was saying 45. They just said 60, or this is 65. I'm going to change my buy order to 60, but I'm only going to buy 5. if it happens. See what happens. With enough money to take a chance on it. It might open well over 60 and just fly. And then throw it in there, see what happens. I hope he's right about that pullback.
Morning, in some text to CNBC that he thought that was temporary. I would agree with that. I think over the medium term,
so I think over time, yes, the 10-year Treasury rate will go much higher. Today it's down 1.516. That's the lowest it's been in quite a while. Let's see, it's been since March 4th. So,
thing, Joe, you?
Oh, Scott, you know it's hard to say no to my daughter. You know her well, so I'm probably going to have to buy some Roblox because she wants me.
Okay, you'll probably do it for that reason. Steve Weiss, I don't think is touching this either. Let's do final trades. Maybe we'll get a trade in it, the first one in the last minute that we have on the air. We'll see what happens. Brenda, why don't you give us a quick final trade?
Sure. CVS, lowering healthcare costs. It's done well this year. Still trading at only 9 times earnings.
as I was saying about Roblox too, I mean, don't expect it to be a smart long-term investment, especially at the IPO price. But it could give you a short-term swing. I'm just trying to get in and maybe flip it same day. It gets in at the right price and get out at the right price. And then I think just like a lot of these others, honeymoon surge for the next day, and then it's going to trail down for the next few weeks before it finally comes back. That's what should do that. I'm going to change this box.
I'm just gonna get a shower. Like an hour and and he has a sandwich. I just put it in a bag because I didn't want to get stale and then there's some pork outside. So, that's where no, wait.
Wapner just mentioned it at the end of the last hour here. This idea that
Meme stocks, KOSS. Come on, those are the four I have on the screen. It's like they're watching my screen. GameStop, KOSS, AMC Express, bam, 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 bam. Darlings. That's a darling way to
you're talking about $172.06 or thereabouts. That's how much the range has been. Multiple trading halts. Again, checking out those intraday action for GameStop. It just goes to show you many of these things are not for the faint of heart. GameStop very much in play today after a number of trading halts. Melissa, we'll keep an eye on this. I'll send things back over to you.
All right, Dom, thank you. This week, tech slid into correction territory, then rebounded just a day later, pushing the NASDAQ to its best gains of the year. Have we seen the bottom, or could another rate-induced sell-off be on the way? Joining us now, Sherry Paul, Senior Portfolio Manager at Morgan Stanley Private Wealth Management, and Robert Teeter, Head of the Investment Policy and Strategy Group at Silvercrest Asset Management. Good to have you both. Sherry, I will start with you. You see the 10-year yield. You're targeting 1.7%. What we've seen in terms of the rotation has really been fueled, supercharged by the climb in rates we've seen. If rates do stabilize at 1.7, do we still continue to see as fierce a rotation as we've witnessed in the past few weeks?
Well, I think it's a great question. Thank you for having me. I think right now investors are feeling somewhat of what I would call change fatigue, whether that sits in their lifestyle and with the pandemic. But I think there's another big change moment coming, and that is the digitizing of the U.S. economy. So to answer your question within technology, I think instead of looking at either or, that clients should be really integrating their portfolios to reflect both of these themes. And the way that we're talking about it to clients is to think about idea laddering in a portfolio, thinking about a portfolio maturation around what those idea maturities might look like in a portfolio. And if you think about it in that way, then technology continues to hold a really important place in portfolios, regardless of the reflationary trade, which would be more of a short-term idea maturation. As vaccines roll out and the economy reopens, the reflation trade is now underway. But these longer-term themes manifesting need to be importantly integrated in a portfolio, because we've got seismic shifts happening, and now technology, frankly, is the underpinning of the majority of the sectors in the U.S. economy. So instead of thinking about should we own tech, I think we want to encourage investors to think about which sectors are now benefiting from the underlying infrastructure change within technology that's being delivered into those sectors. Financial services would be a perfect example of that in terms of cost saving. You mentioned earlier, digitizing transactions, and that's certainly something that's going to help banks save a lot of money.
Right.
So those themes are definitely going to continue forward.
Sherry, Robert, hold on. We've got the results of the much anticipated 10-year auction, so we want to go to Rick Santelli for that. Rick.
Yes, I'll tell you what, everybody is anticipating this auction, primarily because yesterday's 3-year short maturity, we're really thinking about that 7-year that was horrible a couple weeks ago. Well, 38 billion 10-year notes yielded 1.523. The one issued market was trading 151.5, but yields been dropping all morning. I gave this one a C minus, Charlie minus, and I think I was being very generous. Let's go through it, shall we? 10 auction average bid to cover 2.42, a little bit light here at 2.38. 56.8 was indirects. That is the lightest since November 20. 10 auction averages, you see there, 61%. Okay, maybe the one bright spot, maybe the most important bright spot, direct bidders, that might include maybe the Japanese, 17.8. A couple and a half points above the 15% 10 auction average, and 25.4 go to primary dealers. That number's a bit too high. So none of the metrics are really spectacular. I could have gone a D plus here, but I do cut some slack that the overall market was sliding in yield, rising in prices. The equities remained firm. And of course, long maturities are what it's all about at this point, especially considering this morning might be the last bus stop of the low CPI inflation data for this cycle. Melissa?
The last bus stop. That's a nice way of putting it. Rick, thank you. Rick Santelli. We want to resume our market conversation, bring back in Sherry Paul and Robert Teeter. Robert, I'll go to you. How are you viewing technology now, especially with yields where they are? And have you seen this pullback as a buying opportunity, or are you taking the longer term view on this?
Yeah, well, this rotation's been pretty powerful towards the cyclical side. We think it could continue a bit longer here as investors are really pulling forward some of the earnings they're expecting off the strong economy. But I think you have to be careful to not get too carried away with that. You know, as COVID starts to wane, investors are going to start asking what's next. And at that point, I think it's important to have a balance between the organic growth that you get from technology, as well as some of the COVID cyclicality that you're getting from the cyclicals here.
So why do you think that everything is selling off wholesale? I mean, it's not just the high value names. We've highlighted the chips. We've highlighted software names as groups that have been hit the hardest, the Zooms, the Pelotons, et cetera. But at the same time, you've got an Apple, which is leading declines as well, which is basically flat over the past 6 months. Microsoft, almost the same story. Netflix, the same story, Robert. So there's this wholesale selling of tech without any sort of discrimination between the ones that might have that organic growth and might actually be a beneficiary of reopening as well as exhibiting the organic growth that you're talking about.
Right. Well, I think there's two reasons behind that. One is, and Rick was touching on it with the importance of rates here, as rates have climbed a little bit higher, that challenges valuations and particularly challenges the higher valuation stocks. But I think the other issue is just, again, a natural rebalancing. You know, these stocks have performed quite well. It's important to keep them in line in terms of sizing. And again, it's important to have some balance, as the real focus here is this massive economic growth that we're seeing and the massive increase in earnings that we're expecting to see. And so that's allowed investors to rotate a bit, and that's put a little pressure on the tech stocks. But we think that's healthy and natural.
Yeah, Sherry, where do you stand on how far along this rotation is in terms of the valuations of the cyclicals now, and whether or not they are actually pricing in the growth that we are going to see for the remainder of the year?
Yeah, I think that things are pretty well priced in, but I do think that things could actually be better than any of us could ever dream of at this point. We've got, $5 trillion sitting in money market funds. We've got a stimulus package that's on the verge of passing. We've got potentially, another bill coming in terms of infrastructure spending. And we've got a really successful now accelerated vaccine rollout. And so with the 10-year Treasury now coming in at 1.5, Morgan Stanley thinks we end the year at 1.7, the reflation trade could actually accelerate in ways that people aren't accepting. Now, that said, I also want to go back again to that also means that these longer trend themes in terms of digitizing the U.S. economy also should play an important role in portfolios. And that is going to span, from biotechnology to genomics to space exploration to how we pay for things. That this is a debate that had been going on in the U.S. economy for years. Corporate America trying to convince the consumer that they could consume this economy remotely, and that debate is frankly over. The adaptation, the adopting of the usability of the technologies is now here to stay. So we should not forget to be very forward-thinking about the investing opportunities for clients, particularly around things like blockchain, cybersecurity, biotechnology.
It's interesting, Robert, how quickly consensus changes, because Sherry had just said that, she thinks that the recovery is going to be much stronger than anybody had anticipated. That used to be contrarian, and now it feels almost like it's becoming the consensus view. So at this point, Robert, does that concern you that maybe everybody is baking in an extremely strong recovery?
It's a great observation, and it's certainly something to start to be a bit concerned about. We think it has a bit more room to go. But once COVID starts to wane, we think investors really focus on what's next and what's coming next. And there you have to have some of those longer term structural headwinds. So there are some cyclical areas like industrials that have maybe a changing policy mix that is favorable to them. But again, looking ahead, really careful to keep that balance between organic growth and cyclical growth.
All right. Good to see you both. Thank you so much for your analysis, Sherry Paul and Robert Teeter. We appreciate it. All right, we are still awaiting the first trade of online gaming platform Roblox. The NYSE set a reference price of $45 a share last night, though it is indicating around 70 right now. It appears as its patience is about to pay off. Roblox delayed its scheduled IPO in December after watching the market get too frothy, taking the direct listing route instead. For more, let's bring in Doug Clinton, managing partner at Loop Ventures. Good to see you, Doug. What are you anticipating for this in terms of where it looks like it's going to go at, which is, 65, let's say, per unit, and what it's pricing at this point, given we're coming out of the pandemic and we're going to enter tougher comps?
Well, I think the price to me says that consensus, as you talked about in the last segment, is that they're going to have very strong growth and continued growth coming out of the pandemic tailwind that they had, where they were up over 100% year over year for bookings and revenue. If you look at the company's projections for $2 billion in bookings this year, that's about 10% year over year growth. So it is a difficult comp, but it seems like they are maintaining the users that came onto the platform during the pandemic and are continuing to spend a lot of time on the platform. I'm a little surprised how high the price is, given this is a direct listing. Normally, we don't see big moves like this out of the gate for a direct listing, but I think people are very excited that they're finally able to invest in Roblox.
Yeah, especially as every single share is eligible to be sold, from early investors to insiders, et cetera. How should we look at that growth then, Doug? Since it did see astronomical growth because of the pandemic, but in its latest forecast, for instance, for DAUs, growth is expected to be 59 to 68% year on year. But for the second quarter, that growth is supposed to be 3 to 9% year on year. And that gets to that heart of tougher comps. So do you still price it as a high growth company, even though we're not seeing those metrics bear out?
I think you really have to think about the next 3 to 5 years and what that growth picture looks like. And if you move beyond these tough comps, I think you're going to see a company that's probably growing something more in the strong double digits year over year. I think they could sustain, let's say something like 20 to 30% annual revenue or bookings growth over the next several years. And I think that is probably a better indication than what we're seeing right now off that tough comp from last year.
And what, in your view, is the most important metric? There was a study out from Sensor Tower that lifetime player spending across App Store and Google Play was $2.5 billion, with about half of that coming just last year. So is it revenue per user, or revenue per user over the lifetime of the player? Is it DAUs? I mean, what to you is the most important metric?
I think it's two things. I look very closely at bookings. I mean, that's just an indication of how much people are just spending on the platform, buying Robux, which is the virtual currency that fuels the economy in the game. And the other thing I look at is the amount of time spent. I think if we continue to see time spent be stable and even continue to grow some, that's a good tailwind that provides users a reason to keep spending money on that currency in the game.
And this is one that's been mentioned a lot on the Reddit chat boards, Doug. I know you've pointed that out to our producers. Is that a good thing or a bad thing for a company just hitting the public market?
It's certainly a good thing in the near term in terms of absolute stock price. I think anytime Reddit gets a hold of something, you have to probably be a little bit cautious. If you're looking at it as a long-term investor, that's always how we think about investing at Loop. And so when you see, like we talked about earlier, a move of 50% in a direct listing on day one, it gives us a little bit of pause about what the near term could bring. But I still think you've got a company that has great growth prospects. They have a very stable user base, and they really own that preteen demo. And so I do think it's a great company to keep an eye on for long-term investing, even if the near term here is a little bit choppier because of that excitement.
All right, Doug, great to speak with you. Thank you. Doug Clinton of Loop. Coming up, Adidas reporting sales growth, predicting a strong 2021 recovery and reinstating its dividend. But that's not all. It's also got a great brand new partnership with Peloton. We'll hear from the CEO next. Plus, to swipe or not to swipe, the adoption of contactless payments kicked into high gear amid the pandemic. Will the trend and the huge rally we've seen in those stocks continue? The exchange is back in 2.
This is The Exchange on CNBC.
is higher after the sportswear giant said it expects a strong rebound in sales this year. Sarah Eisen spoke with the company's CEO just a short time ago. She joins us now with more. Hi, Sarah.
Hi, Melissa. Adidas today setting out a number of ambitious goals for the next 5 years after coming off of its worst year, during which sales tumbled and operating profits slid more than 70%. Now the company is rolling out what it's calling Own the Game strategy. It projects 8 to 10% sales growth per year over the next 5 years by doubling its e-commerce sales and its direct-to-consumer business by 2025. CEO Kasper Rorsted saying this year he expects double-digit growth fueled by market share gains in the U.S., in China, and in Europe, and a product pipeline that he says has been in the works for months. Also, the new stimulus money just passed in the U.S. should help.
When stimulus goes into the market, it goes to what we call affordable luxury. We are in those categories, and people will tend to spend around our product area. So we're very happy with that happening. Of course, what's much more important is that you get the vaccine done, you get to a sustainable environment where people can start working again, and that's going to be the real kicker for the environment. So the stimulus is good. The much more important one is the vaccine, and that will help us drive growth for the next years to come.
Rorsted went on to criticize Europe for a disappointing and slow rollout of its vaccine, says they haven't been doing a good job aside from the UK, but he says it doesn't change Adidas's plans. The company also announcing today and teasing really a new partnership with Peloton. They've also hired some new creative stars like Jerry Lorenzo, who was previously at Nike, to build some excitement around a new basketball line at Adidas, which Rorsted said will be marked by lifestyle and not just by the athletics. You can watch the full interview with Kasper Rorsted. Melissa, we talk everything from the future of retail to, of course, his partnership with Kanye West and the Yeezy line, and whether he's considered putting him on the board, as Kanye has demanded. At 3 p.m., closing bell. We've got a lot more on that.
Oh, that's quite a tease. I do have a question, Sarah, about Adidas's tough year last year. Why was it that it fared so poorly when the likes of a Nike and a Lululemon were able to capitalize on the trends of the pandemic, people staying at home, wanting comfy clothes, et cetera, et cetera. And now he thinks coming out of the pandemic, that's going to be its sweet spot.
It's a really good question, and it's something that investors have to ask themselves. Adidas lost share in the U.S. footwear category, according to NPD Group. They lost about 90 basis points of share, down to 9.5% market share. So while we did see a lot of enthusiasm for athleisure, and you saw that in growth of Nike, Lululemon, even their tough competitor Puma over in Europe managed to outgrow Adidas. What Rorsted is saying is that they're taking this opportunity to refocus. They're getting rid of Reebok, for instance. They're sort of consolidating when it comes to their strategy around sports, getting rid of more extraneous categories like a field hockey and just really focusing on basketball and running and lifestyle performance, focusing on 3 core geographies, North America, China, Europe. That's what the strategy conversation is about. But really, you and I know it comes down to who has the it sneakers. And really what we've seen there is that Yeezy and Kanye West continue to do well and continue to sell out right away, and that's helped. But the rest of the line just hasn't captured the imagination and the enthusiasm, like, for instance, what we've seen out of Nike and out of some of the competitors, and that is something that Adidas is hoping to change. And he said they've been working 18 months on this new product pipeline, hired some new designers, and are ready to gear up and outgrow the category for this year. But now they have to execute and perform, because they are making some big promises, which is why the stock is up.
Yeah. Sarah, thank you. See you on Closing Bell today. Sarah Eisen. Coming up, the pandemic changed retail in a big way. The evolution that should have taken years was condensed into just a few months. We'll take a look at the new face of the sector ahead. Plus, the market strategist who called the pullback says investors should buy the dip in the FANG stocks. We'll tell you why. Welcome back to the exchange. The market's now higher across the board with the Dow hitting a record in today's session. It is up 455 points or 1.4%. The NASDAQ roller coaster ride here intraday. It had been up more than 1% today. It is now up by 0.2%. As far as sectors right now, 10 of 11 sectors are in the green today, with financials and materials in the lead. No surprise, technology is in the red. And we're watching shares of General Electric. They are lower on news that struck a $30 billion deal to combine its aircraft leasing unit with Ireland's AerCap Holdings. CEO Larry Culp telling CNBC's David Faber that the proceeds will be used to pay down debt. GE is also announcing a 1-for-8 reverse stock split. The stock is down almost 5%. And take a look at Buzz. That's the ETF tracking social media mentions of stocks. That's up just over 1%. Actually, it's up now 0.8%. It's been underperforming the S&P and NASDAQ since its launch just last Thursday. Chewy, Shopify, and Zynga, some of the worst performers since it launched. Now let's get to Rahel Solomon for a CNBC News update. Rahel.
Hi, Melissa. Hello, everyone. U.S. and Chinese officials have set their first high-level in-person meeting. They will hold a two-day summit next week in Alaska. Secretary of State Anthony Blinken will lead the American delegation. The UN Security Council has agreed on a statement condemning violence against Myanmar coup protesters and also urging military restraint. References to the coup itself were dropped due to opposition from China, Russia, India, and Vietnam. The Senate has confirmed Marcia Fudge as the next Secretary of Housing and Urban Development. Fudge says that her first priority is protecting the millions of people who've fallen behind on rent and mortgages during the pandemic. And this is pretty cute. This cute baby gorilla now has a name, Tilla. Zookeepers celebrated her naming with a buffet of vegetables, fruit, and rice. Tilla was chosen from more than 17,000 suggestions that were submitted. Alyssa, I'll send it back to you. They got all of those suggestions in just 1 week time, so lots of public anticipation for that naming.
Lots of enthusiasts out there. Rahel, thank you. Rahel Solomon. Well, BTIG's Julian Emanuel warned in mid-February that the jump in yields would set off a stock market correction, and he was right. Julian now believes that some of the big-cap tech growth stocks, like the FANG names, have been beaten up enough. He sees a coming period of stability in rates and says in a week or two, equity investors are going to, quote, get back into equity investing and stop worrying about every tick in the bond markets. He adds that the public is very engaged in the market, and a lot of the stocks that have fallen double-digit earnings growth, they have them, and they're going to be secular growers. You can read much more about this call and the glass half full situation he sees at CNBC/Pro. Coming up, shares of PayPal and Square have soared in the past year as contactless payment took over amid the pandemic, but don't count the credit card names out. MasterCard is sitting near an all-time high. So what will be the better bet? We'll discuss that. And as we head to break, March is Women's History Month, and we're spotlighting some of our CNBC contributors. Here's Metropolitan Capital CEO Karen Feinerman on her childhood hero.
The historical figure that most comes to mind for me is Billie Jean King. And I was a very, very young tennis player when she was near the height of her fame with the Battle of the Sexes match. And I was a tomboy and I loved playing sports and I always wanted to play on the boys team. And when Billie Jean King was playing Bobby Riggs, I have never rooted so hard for any person or any team as I did that day. And I didn't really realize until later all that she had done for women's equality and all the sacrifices that she made.
to the watch list. I'm Nicole Petalides, coming to you live from a very sunny New York City. Thanks for being here with us. 2.5 hours left in the trading session. Let's check out the major averages. The Dow hits another high. The Russell's doing great today. Here we are. The Dow Jones Industrial Average up 468 points. That's a gain of 1.5%. The NASDAQ 100, though, as tech lags, is holding on to and going back and forth between positive territory here, is now up about 0.1%. The S&P 500 up 0.8%, and the Russell 2000 up 1.9% as we speak. So how are investors really feeling about the current market taking on risk? Caleb Silverknowes, Editor-in-Chief, Investopedia. Caleb, great to have you on. Your Investopedia Reader Survey for the month of March has some very interesting data. I know that you compiled this, so why don't you let us know what the readers are telling you?
Good to be with you, Nicole, and good to see you in New York City again. Well, they are more bullish than they've been all year. And as you know, because I've been visiting with you every time we run this survey, they've been bullish the entire time. Maybe they slipped a little bit in April, last April, when things got really scary, and then around the elections a little bit. But right now, their bullishness is at an all-time high. More bulls than at a Garth Brooks concert right now, Nicole, because they feel like this stimulus plus low interest rates and relatively tame inflation, as we learned again this morning, is a recipe for higher gains. So they're leaning into stocks, and they think that they're going to return, by and large, single to double-digit returns in 2021. A very bullish crowd that has remained bullish this entire episode, a year in, and they think we're on to more gains. So again, very optimistic.
It's amazing because I see where they're coming from, and I definitely have that sense. And how much of this is a lagging indicator? Because we did have sort of a blip, right, where last week, right, it was a different story a little bit. Do we wait for that in the next reading, or do you think that people are still feeling pretty bullish overall? And I would understand why.
No, we closed the survey last night, so this is as fresh as can be. This I started Thursday and Friday of last week. Right, because interest rates were spiking, and because we had the Labor Department, the jobs report, I wanted to sort of bring in people. Also, we had the one-year anniversary. So a year later, where do we stand now that we know all of these things? Knowing all these things, and this is an active investor group, Nicole, as you know. These are about 1.5 million daily readers of our newsletters who've been actively managing their own portfolios for years. These are not 18-year-olds. These are 20 to 75-year-olds right in the middle there, and they're very active and very engaged. And they do feel like, even though they've been taking on some cryptocurrency and they feel like that could be a little bit of a bubble, stocks are the place to be, stocks and ETFs, and they think that they're going to be gains. About 70% are expecting gains of anywhere from 5 to 15%.
All right, guys, looks like Roblox is live. 65. Let's see, what did it launched right at 66? We're at 65. 60. Let's see what happens. Not seeing it's just spike. Like we have seen with some of these others that go IPO. It's just insanity. Either people are not expecting it or something. I'm not sure, quite honestly. And I'm surprised that we're not seeing it spike up to 70 or 80 in the cool off. Looks like it just wants to chill there at 65, 66. Very, very interesting. But again, we're only a couple minutes in, 4 minutes in. Looking at some info over here, looks like most of these need to run back to a respectable level today. AMC dip here. Yeah, that mid lunchtime crave of volume there on all of these was just bananas in the 12 o'clock hour. I mean, it's like it's inching up, right? It's inching up 68. Maybe some people are waking up to this one. I don't know. I'm gonna keep an eye on it. I feel skeptical about whether change my mind up to 68 or 67, something like that, just to get in, and then hope that it goes up to 75, something like that. it's not a whole lot happening. 5 minutes in, it's very just got some guys in there. Let's put it on one big screen so we can see what the trades are looking at. BLX. There's the GameStop over here. So it's the important one. Look at that chart when you zoom out. This little doodad down here just kind of takes me off. Yeah, nothing, no crazy big stocks or big trades here in the stocks. 641 size equal to 1K. So a handful, what, 14? Sell at 14. Buy at 16,000. Just buy at 18,000, then we're at 10,000. So there's 38,000. So we're starting to see some traction from some larger investors getting in. So that's why we're seeing a little bit more here, getting up to 69. So it's gone from 65 to 69 at a high peak, barely there at 7, back down. But first 10 minutes, not much kind of action. I'm surprised. It's probably was anticipated IPO in a while, a month or two. So surprised we're not seeing more action from those people that are just waiting for IPOs to
3 days and get a pretty good finger on the pulse of what they're feeling. They got multiple choices there, and they got multiple choices across a lot of these answers in terms of how much do they see the S&P gaining in this year, where the biggest bubbles are, how much they're leaning into their portfolios. Again, a very active and smart individual investor base that have been doing a lot of educational work with us for years, and they're very bullish. And I think, as you know, when everyone's feeling bullish, something may be wrong, and that might be a time to get a little bit cautious. But we're seeing this sentiment across almost every survey you see right now as investors are all in. Like I said, it's like a rodeo out there with the bulls.
And look on there, I see commodities is near the bottom, right? And emerging markets is near the bottom. And commodities have had quite the run of late, but this is the newest, freshest information. So people are still willing to put some money in that area. I like the people who say they don't think there's any bubbles at all. Right? Those are the true bulls out there. And the bullishness can be a contrarian indicator, to your point. Can we talk about some names that you're following very closely? Are these some reopening trades? Are these names you like, or some of these hotels and others?
Sure. So I like looking at stocks making all-time highs. I do it every day. And I also look at stocks making all-time lows. Well, lately it's been more stocks making all-time highs. And of course, it's the stocks you probably think about in a recovery sector. But I wanted to look at the sort of the offbeat, a little bit of an offbeat travel stock. So we went traveling. We hit the road with Winnebago, which I think, and I'm not recommending these, I'm just fascinated by how well they're doing. We thought Winnebago might not do as well when the recovery trade happened because we're going to start flying again. Absolutely not. The stock hit an all-time high yesterday, hitting on all cylinders. It's been hitting all-time highs since last summer. As you remember, I was on the show talking about it then, and that's fascinating to us. We're also looking at Marriott Vacations, not Marriott, the hotel chain that everybody's aware of, but Marriott Vacations, which is the timeshare, hitting all-time highs as well. Had a very, very difficult 2020, as you can imagine, but the anticipation of folks locking in their timeshares for the next couple of years has that stock at an all-time high. We also looked at Wyndham Resorts. Again, this is the La Quintas and some of the other properties. Wyndham Resorts, not the first place you think of when you think about the big hotel chains, but huge and doing very well, hitting all-time highs in anticipation of strong bookings. Horrible 2020. Things started to get better a few months ago. Now they're seeing their booking rates resume back to 2019 levels. And last but not least, Bally Resorts. The resort stocks, the gaming stocks have been absolutely blisteringly hot. Bally's has a lot of physical casinos, I think in 7 states, 11 casinos, but they also just got the NBA online gambling license to do that. So these are stocks not exactly what you think of when you think of the recovery trade, but just around the surface of it. And they're doing extremely well right now, and prospects look pretty good.
Exciting. And Winnebago, new high there. That's showing us some real trends, no doubt. Caleb, just a quick thought. What terms are people looking up lately? So remember when they were looking up foreclosures and forget it. What are they looking up now?
Well, Market anxiety, investor anxiety has reduced a lot, as you can imagine, because we're screaming higher to higher highs here, even though we have those rising treasury yields. But today they're looking up why stocks get halted for trading, as we saw with GameStop, got halted a couple of times. They're also looking up reverse split. So they're looking up practical stuff within the market. And a lot of these day trading memes have brought a lot of new visitors to our site, and they're looking up things for the first time. Short selling, short squeeze, margin call, the things you would expect new traders to want to learn as they get their hands dirty in this market.
Reverse split as they're looking at GE today. Wow, good stuff. As always, Caleb Silver bringing us the very latest on some investor trends. Very useful. Thank you so much, Caleb Silver, Editor-in-Chief, Investopedia. Well, a quick note. Well, we had CFO Mike Guthrie. Roblox was going to join us earlier in the show. We talked about it, but an exciting thing happened over at the New York Stock Exchange. It did open $64.50 a share. It was priced at $45. So you can see how it's trading this moment. You can certainly see the up arrow. And we're planning to have him later on in the day, market on close, with Oliver Rennick. We'll take a look, speak with Mike Guthrie. This is all about online gaming and Roblox and all the young folks. 50% of the people who play this are actually under the age of 13 years old. So Oliver will do a great job with that later in the day, so keep it here. RBLX is the ticker symbol to watch for the rest of the day there on that. And still ahead here on the watch list, we will bring in our panel to discuss expectations for Oracle earnings, which come out post-market today. We'll see how the company is revamping its cloud business. Next here on the watch list.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
If you have questions about retirement planning, then you don't want to miss Investor Education Day hosted by TD Ameritrade. It's a full day of free insights from TD Ameritrade education coaches and experts who can tell you all about honing your retirement strategies. And the best part, it's all online. So technically, you can enjoy the webcast from the comfort of your retirement pants, also known as sweatpants. Register for Investor Education Day at tdameritrade.com/education day.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate tdameritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today. Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
I'm Maria Schrader. Here are a few stocks moving this hour. Deutsche Bank raised Uber's price target to $82 from $78 and maintained a buy rating. The analyst says he came away with stronger conviction in the near and medium term after meetings with CFO Nelson Chai. He calls Uber a clear recovery play throughout 2021 and a long-term winner, continuing to drive share gains. Uber is up about 4%. Daiwa upgraded Hewlett-Packard Enterprise to outperform from neutral and raised its price target to $17 from $12. The analyst says enterprise demand is stabilizing and bouncing back and sees a light at the end of the tunnel. He expects pent-up demand to kick in and says the company's restructuring effort is showing results. Shares are up about 1.5%. Dick's Sporting Goods is seeing several notes from analysts today. Baird raised its price target to $75 from $64, saying plans to accelerate capital expenditures should drive continued market share gains. Citi says shares are trading at a reasonable valuation, and it ended fiscal 2020 on a high note. Barclays raised the company's price target to $86 from $80, saying post-earnings weakness is an attractive buying opportunity. Shares are down over 1% today. This has been your TD Ameritrade Network Market Update. Now back to the watch list with Nicole Pedalides.
Maria Schrader, thank you very much. We're watching Oracle. Oracle reports its latest earnings after the bell today. And our own panel is checking it out. Experts here, John Freeman, Vice President, Equity Research at CFRA. Norman Anderson, Chairman, CEO, CGLA Infrastructure. Thank you both for being here with me today. John, I'll start with you as we look at the expectations for Oracle, a lot of transition to cloud and focus there. Do you think we're going to walk away feeling great as investors or more worries about growth? What do you think people might be saying? Because sometimes Oracle can be a hit or miss.
Yeah, a lot of what Oracle does on a quarter-to-quarter basis, has a lot to do with, how they want to present the results, frankly. They've got such a large installed base of maintenance contracts and so forth. And so there's a lot of things they can do. But at the end of the day, their legacy business, which is mostly maintenance right now on legacy software from the client server era, which is probably, 35% of revenue, 40% of revenue, that's going away, right? And the licenses, which are another 8, 9, 10% of revenue, those are going away. And before those, really start to, accelerate, and before cloud becomes more than 50% of revenue, it's hard, right, for them to actually grow. And we calculate cloud, because they mix it with the maintenance at about, so pure cloud is probably around, was about 28% for 2020 and about 35% we think for 2021, for fiscal 2021.
Well, John, I'm going to get to you, Norman, in a second, but I just wanted to clarify. So the cloud is mixed in to the maintenance number, and then you said that maintenance is maybe 40% of revenue, and if it's up to about 35% of that, then maybe it won't be as bad as we think.
Well, no, so cloud I estimate around 34, 35, right? And then you also have a hardware business, the license business, professional service business. The hardware and license and professional services probably won't, are probably close to flat. Maybe they grow a little bit, but the licenses are certainly declining. Right. And I don't think it's good. I mean, you just do the math. It doesn't look like Oracle's going to grow until about 2023. Yeah. And we're not that far from consensus either. I think our difference is primarily what multiple you'd like to put on that. And I think there's a fair amount of risk that Oracle really loses its strategic place among large enterprises, in this transition, losing it to the likes of Salesforce.com and Workday and a lot of other cloud-based companies, ServiceNow, right, that are doing so well.
Yeah, it's trading at $72, and you have a $52.
It looks like we're seeing a little bit of traction there in Roblox. Very slow ramp up compared to some of these other IPOs, but it did slowly stair step all the way up to 74, just below 75 at the most, and just slowly ramp down to it. We'll see. I mean, if it goes up from 60, 65 to 100, I have that low at 60. It actually hit a low of 60.5. so close. Oh well, these things happen. But it might get up to 75, but I honestly expected it to go from 60, 65 and spike up to 75 or 80 within the first 2 or 3 weeks. And it just didn't happen. So I don't know if it's a good thing because this is more of a sustainable one curve or bad thing. It's going to go a cliff tomorrow. So we will see. It's interesting stuff. I'm just interested to watch. The other stocks down here, I mean, they're slowly making a comeback after the huge dip earlier, like an hour and a half ago. So we're getting there.
Take advantage of that and be the, let's call it the organizer of our industrial brain going forward.
I want you to just expand on that, Norman, because I think you're hitting a point that's really important about growth going forward, and that is as we look more digitally at infrastructure and the digitization and things that are more autonomous. What would be some examples where, and the fact that you like the leadership and what they're doing and that they're on point, that really shows some optimism.
I have a lot of optimism. I'll mention my book just because it's, when I started writing the book, it's called Vision, Our Strategic Infrastructure Roadmap Forward. I looked at the infrastructure space much like anybody else, but when you ask, what are we talking about? What if you were to put 5G posts every 1,000 yards along our entire interstate highway system to facilitate trucking autonomy? We're looking at a highway in Ohio, autonomy, high voltage electricity going down the middle of the highway, digitization of the whole of the highway, plus both ends of the highway. You can do the same thing between Reno and Las Vegas, where I was last year, a highway called the Technology Highway, where all of a sudden you go from concrete and steel and metal to brains and 100 billion.
All right, guys, I'm going to take a little break. Maybe go get some lunch or something here. Maybe come back closer to 2 o'clock for anyone who is still watching. I will leave the stream available. So last time I went away from my computer for a little while, we came out of this dip and went way up. So maybe it's the chair. Well, for me, it's not so much the chair. It's the we'll do Jim Carrey. All right, Jim Carrey. When Jim Carrey is in charge, the stock market goes up. So I'm going to leave him in charge for a while. Peace.
Desk, which has long been, a leader in CAD/CAM, basically 3D design software for the architecture and construction industry. And they are now getting into things like digital twins, where you can maintain, a bridge or a building or whatever in digital form and simulate it over time so that you can figure out, it needs, replacing the roof or, or the windows.
Do you have a buy? Do you have a buy rating on Autodesk?
I have a strong buy rating on Autodesk, actually. But the thing that Oracle should do, and Oracle is in this. I mean, the problem is that it's a $39 billion revenue, lump that you can do really well, and they can do great things in these vertical industries, and they do. But it's hard to move the needle. I think what Oracle should do so that it gets out of this problem of a conflict of interest between its platform and its apps. I think the company should spin off its application or spin off its database, however you want to put it, business. I think it makes most sense to spin off the application side and then have the platform and database and infrastructure cloud business also. That would create value. I think that would make a lot of sense. Right. But anyway, that's
just quickly. Do you have any strong buys or buys on anything else sort of in this area?
Oh, yeah. PTC is another one that I have a strong buy on because of this visualization trend. Yeah, PTC and Autodesk are the main ones in that space. Oh, and Ansys is another one on the simulation side.
And Norman, I know that you actually talked about Autodesk earlier in a conversation with our team. Tell me your final thought here, quickly.
Well, I think what's interesting is you've got companies like Autodesk and Trimble, as well as Oracle, digitizing the infrastructure space, as John suggested, and going way beyond that to coming up with creative ways to drive autonomy and drive really an end-to-end matrix for logistics matrix to drive the reindustrialization of the U.S. economy.
All right. Thank you both, John and Norman. Great conversation, gentlemen. We really appreciate it. And a good preview there of Oracle. John Freeman, Vice President, Equity Research, CFRA, and Norman Anderson, Chairman, CEO, CGLA Infrastructure. Thank you both. TD Ameritrade Network continues. Kevin Hanks is standing by to do some trading. What are you trading on the show today on Midday Trade?
Hello, Nicole. Component supplier stocks is what we're trading today. And that is companies that are suppliers to Apple in the iPhone 12. That is Qualcomm and Skyworks. We're going to be looking at both. They're both down along with Apple. We're going to be looking at both. We're going to trade both today on Midday Trade, Nicole.
It's always good to get on the inside of these phones, right? And then we know where the demand really is or is not. Thank you, Kevin Hanks. And thank you, friends, for joining me here on the watch list, as you do every day at 1 p.m. Eastern Time. I thank you for that. And tune in 5 p.m. Eastern Time, Market Overtime. We'll focus on what you need to know for your long-term portfolio. I'm Nicole Petalides. Have a great, safe afternoon. Thanks for watching, and I'll see you later.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
It's 1 o'clock in Chicago. Good afternoon, everyone, and welcome to Midday Trade. I'm your host, Kevin Hinks. I'll be taking you through the next half hour today. We're going to do something interesting today. We've got Apple on the downside again. So let's look at the components that make up Apple, because these stocks, as you know, are down in unison with Apple as they usually are. We'll look at Qualcomm and we'll look at Skyworks today. Both put components into iPhones. So Alex Coffey, my co-host from Fast Market, will stop by. He'll look at the risk-off assets. Then we'll trade Qualcomm in the first segment of the show. Then Jenny Horn, Ken Rose will stop by the show, and we'll look at Skyworks during the second half of our show. So we're trading Qualcomm today, 5G and iPhone component supplier, and Skyworks as well. All right, now, before we bring in Alex Coffey, let's look at the four major indices and see where they sit at 1 o'clock Chicago time. The S&P 500 up 0.7%, 26.5 points to 3901, hanging right at that 3,900 level. The NASDAQ 100 down 0.33% now, 41 points to 12,754. The Dow Jones Industrial Average up 1.4%, 455 points to 32,288. And the Russell 2000 up 1.7%, 38.5 points to 2283 and some change. All right, now let's bring in my co-host from Fast Market, Mr. Alex Coffey of the show. He's going to take us through some of the risk-off assets and see what they're doing today. Welcome to the show, Alex. What do you got for us today in the risk-off assets? Kind of interesting day evolving here. We're kind of losing our bid on the NASDAQ, though.
Yeah, and as things unfold, you're seeing some interesting action here in the risk-off space. The 10-year yield right now is actually pretty close to the lows of the session at 1.516. That's in about 3 basis points. The low of the day, right around 151 even. So interesting to see the bond rally continue to put pressure on yields. Volatility, though, with a couple days in a row of up markets, you're seeing some pressure on volatility. 2286, we approach that 20 level that served as a floor really for the last year now, Kevin. The gold market catching a bit of a bid after a pretty big move yesterday. 1721.40 is up $4.50. That's about 0.25%, and near the highs of the session for gold. The dollar index, 91.90 right now, is down about 6 cents. So pretty quiet day for the dollar, but a little bit of weakness probably helping the gold market out a bit. And crude oil, 64.41, completely turned around now. Kevin is now up 40 cents. So crude oil, some interesting morning action as it's been all over the board. Kind of a roller coaster session for crude, even though the range itself has been somewhat muted.
Yeah, but it's been up, then down, then up again. So within 1%, 0.75 to 1%, it's had a nice little trading range today in crude oil for sure. On inventories day, always a lot of volatility. But you're right, no big price moves, just up, down, and then back up. All right, Alex Coffey, always a pleasure to have you on the show, taking us through some of the risk-off assets. Have a great day, sir. All right, now, so the theme for today's show is supply components for iPhones, or component supplier stocks for iPhones. And the first one we're looking at is Qualcomm. Now, if you looked at Qualcomm, it had a horrible month of February, down 12.9% after putting out good results, putting out strong guidance, and the numbers were incredibly well in Qualcomm, and the stock has gone straight down since then. Now, the last 52 weeks, it's been up 83%. So you can chalk some of this up to profit taking, but the numbers that Qualcomm are putting up are spectacular. However, if you look at Apple stock, this is a supplier to Apple stock, right? In 5G, in wireless communication, this is what is a supplier to Apple. So as Apple stock has trailed off, some of the rumors that happen every single quarter in Apple, where they talk about suppliers are seeing less orders and things like that, and then they almost never, we don't really say never in this business, but almost never come true. But there's always that rumor mid-quarter about, orders to suppliers are down by 20%, and then they come out and it just never seems to come to its fruition. And that is always, again, I shouldn't say always, I should probably say many times there. Compliance is going to love me for saying that. Many times it is a buy when these rumors, unsubstantiated rumors, come out on supply chains and things like that. It happens, if you notice, every couple months in Apple and some of its suppliers, like Qualcomm, like Skyworks, that we're looking at today. So really interesting story, but that's a tradable event that you have to be on board for. Now, let's go to the board here, look at the Analyze tab, and look at the trade we have because of where Qualcomm is. and it bounced right off. Look at that. It bounced 2 days ago. It bounced right off its 200-day moving average, about $124. And now it's up around 128, but down on the day today, along with Apple. Any day that Apple's going to be down or soft, you're going to see similar trade in Qualcomm. Now, you can say that Apple's being extended on the downside. You can say that, why not just buy Apple? Well, yes, absolutely. You could just buy Apple, or you could buy the components of Apple. And as a hedge or as some way to broaden out your exposure to Apple, if you already have a bunch of Apple, really interesting way to do it. So let's take a look at what we have in Apple. And I have 2 trades for you now. And if you look, I have a diagonal. And by the way, they just had earnings come out, as you can see right around here. So that would be the 3rd of February. So count out 3 months, 3, 4, 5, right? It'd be the early February, about the end of April. It looks like there is their next earnings release. So the end of April. So we're going to stay ahead of that, and we'll go to the Analyze tab and we'll look. Now, for the moderate bullish play, it's the calendar spread, right? Which only $1.50 gets you an April expiration and then next week's March expiration. So still a chance to chip away at that net debit. But those net debits, that sale of that March 140 call, not a very big premium you're getting. You're not paying a big premium for the April 140, but you're not getting a big premium for the March of next week 140. So make sure you understand it's just a smaller number and you're a little bit out of the money, but you've got some time. If Qualcomm were to recover, this is a nice winner that you can have because you're targeting the 40 stock. It's very low capital outlay, only about $1.50. Now, the other trade that we're looking at is a little more aggressive with the delta. Look at 5 lot is about 66 deltas, right? So now look at a 5 lot of the diagonal, about 190 deltas. That's the April 16th, same, the 125 though, and then next week's 135. So this is the more aggressive delta-wise, bigger premium, but both directional plays to the upside. One's targeting 135 in the next week. One's targeting 140 between now and April expiration. So 2 different ways to look at a kind of a passively bullish play in Qualcomm or in more aggressive play in terms of the diagonal in Qualcomm. And remember, what's the difference between a calendar spread and a diagonal spread? Very important. The calendar spread, if you notice, same strike price. Diagonal spread, there's an embedded vertical call spread within this diagonal, right? That's why you're long the 125, short the 135. That gives you that upward look and then a flattening here. So not necessarily the peak like a calendar spread would be. If the calendar spread, you are targeting 140. If not this expiration, then you're extending duration on that. Remember, you've got a couple. If you look at March 19th to April 16th, you've got 1 expiration, 2 expiration, 3 expiration before you're into that actual, expiration where your longs are. So both these, or this Qualcomm ahead of the earnings report coming out at the end of April. So this is, like I said, I gave you 2 choices here, a passive trade or a more aggressive trade based on your opinion on what Qualcomm can do. All right, so we're going to throw some of those in, create duplicate order, and confirm and send. Then there we go. We're along the diagonal in Qualcomm now, not the calendar spread. All right, let's take a quick break. Come back in 2 minutes with Jenny Horn and Ken Rose and look at the other component supplier for Apple, and that is Skyworks. Take a quick 2-minute break. Come back with more Midday Trade in 2 minutes. See you then, everybody.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
If you have questions about retirement planning, then you don't want to miss Investor Education Day hosted by TD Ameritrade. It's a full day of free insights from TD Ameritrade education coaches and experts who can tell you all about honing your retirement strategies. And the best part, it's all online. So technically, you can enjoy the webcast from the comfort of your retirement pants, also known as sweatpants. Register for Investor Education Day at tdameritrade.com/education day.
Welcome back to Midday Trade, everybody. Kevin Hinks back here for the second half of our show. We've got the markets about the same where they were. They got the S&P up 32, NASDAQ climbing towards unchanged, actually, down less than 0.1%. The Dow up 1.5%, and the Russell now approaching up 2%, up 1.9% on the day. All right, now let's bring in a contributor across the TD Ameritrade Network, Miss Jenny Horn, to the show. She's going to do a little presentation on another one of the component suppliers for Apple, and that is Skyworks. We're giving you different ways to trade Apple without actually trading Apple, and that is some of its suppliers. Jenny Horn, what do you have for us today in Skyworks, young lady?
Skyworks is the radio frequency provider for iPhones, to my understanding, Kevin. And actually, we talked about this name because there was this fear that Apple has sort of cutting out the middleman with Intel, Qualcomm, that maybe Skyworks would be next. But that hasn't happened yet. You know, we're in the first quarter of 2021. That has not happened yet. Although the stock is down over 3% today and down about $30 off its all-time highs. So, you know, a little bit lower than people would perhaps like, but they actually had a really interesting report come out from Goldman Sachs last Friday. They downgraded the stock to buy from neutral with a $185 price target, which that price target actually implies about $18 higher than it's trading right now. So not the worst thing, but they said, which this was sort of the worst part of the report, that Skyworks has limited upside potential. And I did say they remain constructive on the company long term, but they have a lot of concerns in the radio frequency market, specifically in Huawei and export restrictions. And Huawei is actually makes up about 12% of their total revenue. So that was, of course, a headwind for the stock. But, you know, I would like to say that the Apple makes up 56% of their total revenue, Kevin. So if you've followed along with the iPhone 12 sales, you know that they've been successful because of that. I mean, at the end of the fiscal year, they actually ended the year with Apple making up more of their revenue than they had anticipated originally. And based off Apple's 2020, you know that was obviously successful for Skyworks. They really will, I believe, continue to benefit as a beneficiary. The more iPhones Apple sells, the better Skyworks does. They sort of, you know, work on the same team here. And currently, the iPhone 12 is Apple's best-selling iPhone, the best seller of all of the 5G phones. So I would say that, you know, if you believe that the iPhone 12 should carry this name into 2021, that you'd believe in Skyworks, despite the fact that it is still trading a little bit below all-time highs and falling slightly on the day.
Yeah, I mean, this stock is eerily similar in its comparison to Apple, right? You said 56% of their revenue comes from Apple. Now, their stock follows or mirrors or looks like Apple in many different ways, but they're a semiconductor stock, and that sector of the economy is going through some difficult times right now in terms of they're out of product. So that could have something small to do with these problems. But, I think these are pretty good problems to have when the demand for your products are so big that, there's shortages across the sector in these semiconductor stocks. So I think this is much like Qualcomm that we just covered, Jenny, a stock that is just correcting because it's run like a lot of tech stocks have further than, you see the correction going on in Apple. You're seeing it in the suppliers to Apple as well. But, you're going to start seeing a lot of notes come out on some of these names and Apple and its suppliers as well. So should get pretty interesting. All right, Jenny Horn, always a pleasure to have you on the show. Thank you so much for coming and spending your Wednesday with us. All right, now let's move over from the fundamentals to the technicals and look at Skyworks. For that, we bring in live from Salt Lake City, Utah, Mr. Ken Rose to the show. He's going to take a look at Skyworks. Ken, tell us it's safe, or give us a level where we feel like it's okay to buy the dip here in Skyworks.
Well, Kevin, I would say looking at the chart, perhaps the most significant support level, which would be the level that we'd be looking at right now, would be at about $156. This was the upper part of a sideways channel this stock has been in, going all the way from back to July, all the way through December. We have hits its resistance level back in September, as well as October, as well as December, and recently support. So as far as movement to the downside, I'd be looking at 156 as a very significant support level. However, the current support level is a little bit higher than that at about $164. That was resistance level primarily during the month of January. It also represents a 50% retracement level, which isn't a Fibonacci level, but still an emotionally important level. Now, moving up from here, if we were to go to the upside, our next area of resistance would be at the 181 area, which is a 78.6 Fibonacci retracement level as well. Of course, if we continue to move up there, then we'll be back up at the peak that we had back on January 16th. Another interesting aspect of this stock is to see what volume's been doing. If you note down and look at the volume oscillator has been moving dramatically to the downside. This stock got a bounce in early February and started to make a move to the upside, but that move was occurring on decreasing volume. That's an indication of what technicians call distribution. Institutional investors could actually start lagging out of the stock while retail investors continue to push it to the upside. Not too unusual to see after that peak for the stock to rather dramatically move to the downside, but we still do have a significant support level there at about $156, and I think would be a key price point with regards to investors possibly looking at a level where it may be technically a little bit more justified to re-enter the stock if we were to come down and bounce off that level and start moving to the upside.
Ken, is there any significance to the price action going on right now where Skyworks seems to be straddling, going back and forth above and below its 50-day moving average? It seems to be pretty busy right around that level, which currently sits on my computer. It sits about $171. What do you say? Is there any significance there? What should our viewers take from that price action?
Well, Kevin, of course, the 50-period moving average is a significant emotional technical indicator, meaning that when there's a large number of investors that follow that, when the price comes down and hits that, a lot of investors will look at that and say, hey, historically, this has been a solid indication of support or resistance depending on where the price of stock is at. It's not too unusual to see the stock kind of going down there and drumming above and below. It's interesting going back down the volume oscillator. As we've been moving sideways along that 50-period moving average, the volume has taken a little bit of a tick to the upside. That same level somewhat correlates to the resistance that we had, again, going back to January, not too far below that, about 164. So I think that is significant between that 164 and that 170 area with regards to that 50-period moving average. It'd be interesting to see if that holds up or possibly we break down and go down below that point.
Yeah, there seems to be a heavyweight battle going on back and forth on top and below that 50-day moving average as it moves, but pretty significant correction in Skyworks that we're looking at here, Ken. That's why we're covering it today as Apple consolidates at lower levels, and so do some of its components, frankly. All right, Ken Rose, always a pleasure to have you on the show, sir. Thank you very much for stopping by on a Wednesday. Have a great day. All right, now, I have a trade put up in Skyworks, which is it's the 180, so it's $13 above where it is now. And so if you look for $13, it's right around that March 26th. Well, I've got the April expiration, which is about $18. That'll take you to 177, 185. So inside that, right, we're going 1 week out, which is 10, 1 week, and then 37 days out, which is 18. In the middle of that, about 13, 14, and that's where I get my 180. Kind of looking at some of the averages from my long, look at the averages from my short. It looks like the long here is April 1st, so only 22 days. So I'm sorry, I'm right on it. Pretty close to 180 there, about 182. So I'm giving myself relatively short. Why? Because some of these names have pretty significant premiums if you wanted to do something, let's say, in a diagonal. Now, I did both for you in Qualcomm. I think Skyworks is one. And what I like about these calendar spreads is that very, very low, reasonable, small account can buy the dip in Skyworks and trade them like this. So if you look at a 5-lot here costs you about $750. So under $1,000, right around $750 to trade 5 calendar spreads that give you, if you're correct, here's the problem. You have to be correct in terms of the movement towards 180. You don't need it to get all the way to 180, but you need it definitely to get into the 170 area safely in there. So you need, obviously the direction that you're choosing on this name, you need movement in that direction for it to be correct and thus profitable. So what happens when that starts moving into this cone right here? The theta numbers will pick up. You're making money directionally. You got to be careful about implied volatility coming out, right? You're long 30 Vega, so you would lose $30 every point that implied volatility goes down. You're ahead of next quarter's earnings. That's one good thing. So implied volatility has already come out after earnings, but make sure we're watching overall implied volatility. But directionally, a 5-lot, less than $750 for a capital outlay, pretty fair amount of profit if you are right and the stock were to move towards 180. So obviously there's the more aggressive play of the diagonal spread. There's the less aggressive play in terms of capital outlay and risk in terms of the 180 calendar spread. Remember, the difference between the calendar and the diagonal is that embedded vertical long call spread, right? Your both strikes are the same. That's indicative of a calendar spread. One strike being different, either long deltas or short deltas. Remember, a diagonal can be a short delta diagonal as well. But so all these things make up, think of it as a embedded vertical spread, either long or short, in the calendar spread is what turns it into a diagonal. All right, we're going to send 5 of these, create duplicate order, and go. We are now long 5 calendar spreads in Skyworks. Now, we're going to bring in Ben Lichtenstein in a minute. Let's go take a look and see what the market's doing right before. Now, the NASDAQ back down 0.25%, the S&P up 0.75%, the Dow Jones Industrial Average still up 1.5%, and the Russell up 1.8%. So just a slight back off from where we were when we came back on the air. Things are working their way through. Remember, we've got jobless claims and JOLTS tomorrow. We've got PPI on Friday, more inflation data coming out on Friday. You got a 10-year yield rotating 1.50. So the 10-year yield backing off here. Stocks should probably like that, as quiet bond market is giving stocks a little bit of an ease as it comes into the end of the day. So it'll be interesting to watch. All right, now that's our show for today, everyone. Ben Lichtenstein is live from our studios in Chicago, Illinois. He's coming up next with Midday Movers with Ben Lichtenstein. What do you got for us today, Ben?
Hey, Kevin, you just mentioned how stocks are benefiting from rates, which are inching lower a bit here right now. Definitely the Dow is. They're also exhibiting some enthusiasm after the House passed the Biden almost $2 trillion stimulus package. And, well, I heard the president's going to sign it by Friday to avoid some of those deadlines that expire this weekend. I'm also going to take a look not only at those all-time highs in the Dow, but we'll also take a look at DraftKings higher today after comments at Investor Day's event. And, well, we'll take a look here. In addition to that, we've got Toll Brothers on our radar. They're actually lower today. On the move higher today as well. They announced they've increased their dividend by 54%. Kevin, we'll also take a look at, a couple names that the chart master, Mr. Ben Watson, has his eye on. We're talking Eli Lilly. We've got Sonos. We've got Taiwan Semiconductor. And Kevin Street joins us to tell us what's going on with Twitter and that situation that's playing out with Russia. And GE's in the news here today as well. So a lot of individual stocks on the move today that we'll be taking a look at. Some futures as well. Kevin, lots coming your way here on Midday Movers here on the TD Ameritrade Network.
Yeah, Ben, it's very interesting, the activity. They tried to put as positive of a spin as they could on GE today. But remember one thing, if a stock split is bullish, a reversed stock split is bearish, period. Don't overthink it. But they have a lot of good news. They're paying down debt, but make no mistake, that is not positive for GE stock. All right, that's our show for today, everyone. Ben Lichtenstein is coming up next with Midday Movers with Ben Lichtenstein, and then Oliver Rinnick will be up after that with Market on Close. For all of us here at the TD Ameritrade Network, have a great day. We'll see you tomorrow with another edition of Fast Market and Midday Trade. See you tomorrow, everybody.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Feel that? That's the beat of global markets, the rhythm of the world. But to us, it's the pace of tomorrow. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
Good afternoon, ladies and gentlemen. Welcome to Midday Movies with Lichtenstein, the show that packs 60 minutes of stocks, bonds, ETFs, and futures into a 30-minute time slot. The show that brings your double dose of energy for you here on the TD Ameritrade Network. Let's kick things off with the Dow Jones Industrial Average to new all-time highs, ladies and gentlemen. The Senate has passed the almost $2 trillion stimulus package. The president said he'll sign it Friday, by Friday, I should say, to avoid some of the deadlines that occur this weekend. And here you can see the bid activity. Large caps are leading the way to the upside, ladies and gentlemen. You also got the Russell joining in with the Dow to the upside. We're talking up 1 3/4%. And then, well, take a look at the SPX here. While positive on the day by 0.75%, I want to point out, not as enthusiastic as small caps, as large caps, and, well, similar situation playing out here with tech. While only down by about 0.2% here right now, you can see not really showing the same enthusiasm that the other majors have been. Ladies and gentlemen, energies are selling off from earlier gains and lower on the day. We had a, well, build in inventories. Let's begin with the EIA first and foremost here, ladies and gentlemen. Then we'll take a look at the WTI. You can see the build here much larger than expected. You can see here, ladies and gentlemen, again, well, 13 million barrels, almost 14 million barrels. And you can see here, guys, again, well above the 800,000 they were looking for. Gasoline saw a draw. Distillate saw a draw. Now, I actually said that energies were lower on the day, but it does look like they've worked their way back into positive territory as of recent, back and through this $64.50 level. Not a lot of directional conviction one way or the other on the day, but take a look at some of the selling we've seen. Here I've got the 5-minute time frame for you. I've got the WTI on the left, the Brent on the right. You can see off that, well, almost 68 level on the WTI. We're talking highs from Sunday night. You can see the move lower to, well, just above the 63 level. Brent on the right from 71 down to 66.50. All right, ladies and gentlemen, today for treasuries, the focus is the 10-year auction. Let's begin there. Today they auctioned off $38 billion worth of, and, well, somewhat disappointing. There you can see, ladies and gentlemen, at 1.125% with the bid to cover at 2.38 and yield awarded at 1.523. Take a look because, well, reaction in the treasury was somewhat limited. They haven't bid throughout the week here, coming off those lows from Sunday night. You can see the move up. I've got the bonds on the left on the 5-minute time frame, the 10-year on the right, and the move, as mentioned, off those lows from earlier this week. Now, I want to move away from the futures here because this is really what's attracting a lot of attention here, ladies and gentlemen. Rates have been coming off, and, well, those recent spike highs that we saw attracted some attention, to say the least. The 30-year on the left, TYX up to 2.35, the TNX up to 1.6. But, yeah, as you can see, we've come off those upper levels a bit. Now, we've got some economic data headed our way this week that could move markets still. Today we were talking about CPI. Tomorrow it's going to be jobless jolts and, well, PPI, Producer Price Index, on Friday. We also have the consumer sentiment. So a couple numbers to keep an eye on that have potential to move indices. Let's move away from the futures on over into a couple stocks on the move. First, ladies and gentlemen, one to the upside, DraftKings, ticker symbol DKNG. Let's get right into the charts. First, the daily. I want you to see the net change and the recent range. They are currently up on the day by 12 3/4%, and they've kind of been chopping it up below the 72 level, up above 55, we'll call it. You could probably include that spike low we saw on the 23rd down to the 52.60 level, but nonetheless here, ladies and gentlemen, definitely working their way towards the upper extreme of that range. Today on the intraday time frame, you can see all the way up to 70.44. In fact, they just posted that high as we got the show started here. They received multiple price target increases after comments at their Investor Day presentation where they told analysts legalization trends continue to be positive. As a result, long-term financial targets are on the rise. Long-term net revenue targeted to now $5.4 billion, up from $3.7, and its EBITDA goal to $1.7 billion. That's right, from a prior estimate of $1.28. Now, I do want to point out here, ladies and gentlemen, that Rosenblatt, Credit Suisse, and Macquarie, to name a few, raised their price targets on the stock. Loftiest, which I saw, was Credit Suisse. They raised it to 85 from 84. Now, don't forget Jefferies. They said they see continued strength and proliferation of digital gaming and the positive context. They have a price target on the stock for $75. Ladies and gentlemen, I've got my eye on a big mover to the downside as well. Well, in this case, a stock that's got some breaking news this afternoon. We're talking Quidel, ticker symbol QDEL, the manufacturer of diagnostic healthcare products. And, well, they have a quick view home antigen test for COVID. Let's get right into the charts here, ladies and gentlemen. I want you to see the daily time frame first and the net change here. You can see down 16%. Take a look at the slide that they have seen off that February high. We're talking end of January, beginning of February highs up around that 250, 260 level. Current currently trading $130.35, ladies and gentlemen. Let's take a look at the intraday time frame so you can see the move lower here, the sharp move lower, I should say, down to 128.45. They said they see demand for testing in February and March has softened significantly. The comments, and that's a good thing, the comments were at a Barclays healthcare conference where Quidel said that demand for testing was down 30% to 40% quarter to date versus fourth quarter. Quidel sees revenue at least $450 million for the quarter, and they say $450 million is the low end of the range of what the company thinks is possible for the quarter. Quidel not expecting any of the larger orders seen in the fourth quarter, and they see quarterly revenue of at least, as mentioned, 450, with consensus well above that, talking around 755. Now, Quidel says fiscal year revenue of roughly $2.5 billion, consensus also for well above that. Now, they gapped lower last month and sold off after posting huge revenue and EPS spikes, but fell short of analyst expectations after the news, I should say, and they did sell off. Now, keep an eye here, ladies and gentlemen, because if this selling continues into tomorrow, certainly something to watch here. Now, today to levels that they haven't seen since April of last year. Again, as I mentioned, just recently down to 128.45. All right, that's a look at a couple stocks I've got on my radar that I think you should have your eye on. Let's bring in our first guest, Mr. Kevin Streets, joining us. He's a contributor here across the TD Ameritrade network. Kevin, welcome. I saw Twitter lower today after Russia had slowed Twitter's speed until they removed some of their banned content. What's the latest?
Yeah, that is correct. They actually did throttle their speeds there. This is actually just an escalation on the crackdowns for some of the internet freedoms ongoing in Russia right now. This also follows suit from a previous warning from the regulator regarding, just concerns early this month that if they didn't remove certain banned forms of content, that they could, face upwards of 100,000 plus in fines. This could eventually lead to possible suspension of the platform overall if they continue with non-compliance. Looking historically back, they were fined about $54,000 in 2020. They also got fined $41,000 in 2019 for failing to keep servers that actually held Russians' personal data outside of Russia.
Yeah, basically they're saying that while Twitter's used by Kremlin critics, certainly something to keep an eye on. Ticker symbol TWTR. If we could just pull up the chart here right now, we're talking down on the day by 3.5%, 3.6% here. A nice slide here, though, as you can see off those highs. They spiked up to 80.75, Kevin, and up only 2 days after posting that high. We're talking back at the end of February on the 25th. Let's move on here. There's also some news with GE, a reverse stock split. Kevin was just talking about how, well, if a stock split basically is very bearish, let's talk about how, well, it looks like they got downgraded as a result of by S&P Global ratings.
Yeah, that definitely makes a lot of sense with them having ongoing talks of the reverse stock split. I believe they're thinking about it to be an 1 to 8 reverse split, which is posing a bit of concerns here because typically reverse stock splits are going to be reserved for either stocks that have concerns over continuing to be accepted with mutual funds or even possibly going through delisting notifications. So that is bringing a bit of concern there. They also did issue some other news that wasn't actually well accepted either, with issuing fiscal year 2021 earnings per share guidance below the estimates. They actually came out and stated they see earnings about 15 cents to 25 cents on the year versus estimates of 26 cents. Even though the industrial cash flow is coming in at about 2.5 to 4.5 billion, which they do harp a lot on that with their actual $30 billion confirmed deal with AirCat.
All right, down, if lower today, I should say, down for 5 days in a row here now. They recently traded up to 1442 this week. They've come off a bit. They're down by about 5.25% here right now. We've got a couple companies reporting quarterly results today that you've got your eye on. Let's talk AMC in terms of their earnings preview. If we could just take a look here, because earnings per share for AMC expected to come in. I noticed they're looking for a loss, and this is going to be, and they also have revenue. They're looking for a loss here of $2.80, I should say, and this is on revenue of $144.27 million. What are you looking for in terms of these results here today, Kevin?
Yeah, I think a lot of folks are going to be looking for feedback within the overall trajectory of what AMC actually is planning to do with the company, because a lot of the earnings figures don't necessarily have really positive outlooks here. I mean, from a quarter-over-quarter perspective, the negative $2.80 earnings is about a $2.90 appreciation from the recent quarter. Outside of that, from every other metric, from a year-over-year perspective, even following suit from previous earnings, all those figures are down. Previous earnings per share actually fell 26 cents more negative, even though we're seeing guesstimates of appreciation now, and the earnings per share year over year fell as well too. The revenues, that's estimating a follow-up of 90% down year over year, which was the same results, around about same results in the last quarter, even though it was revenues of 119 million. So I think a lot of folks are going to be looking to see what AMC is actually going to do. Lightshed Partners analyst Richard Greenfield actually came out and set a sell rating target, or price target, I should say, of literally a penny. And the reason why I said it a penny is because he believes that there's just a substantial disconnect within the overall, theater attendance within the near future, even though that does contradict what Wedbush analyst Michael Patrick came out and did. He actually doubled his price target from $2.50 to $5 and reiterated a neutral rating. And, he did also issue a statement as well that said it was, tough to get positive in this environment, just with a lot of the rising, optimism and speculation with AMC at this time right now.
Yeah, they've been struggling to say the least here. Now, another name here, GE, also AMC, a very similar situation here. Twitter, obviously. Again, I'm actually getting a little bit bummed out, all these negative stocks. Let's move on to this one that's got a little bit more positive energy here today. Oracle ahead of earnings. EPS expected to come in at $1.11 on revenue of $10.06 billion. Now, they are lower today, much like the other three that we just took a look at here. But as you can see, they posted a new high today. And, well, if they could squeak out a positive close here today, we'll be talking about 4 days up in a row. They ripped up and through the $70 level today to as high as $73.62. As mentioned, they're down by about 0.4% here. But what should we be looking for in terms of quarterly results here, Kevin?
Yeah, like you stated, I mean, it is important to note that they did actually issue some highs here. They are coming off, consecutive upward days here. So from a technical standpoint, that could be just a little bit of short-term profit taking because although they're down, they're only down about 0.5% right now, and they're still holding up 12% year to date. Like you said, there is a lot of, positive feedback here. I believe their iTick Interactive Asia Group, ticker, ICLK, actually came out and stated that they're going to be working with Oracle. And a lot of the reason why they're working with Oracle is to actually expand a software a service tailored, which will help a lot of companies actually get connections with consumers in China. They actually didn't issue the financial terms of that, but that is something that's potentially in talks and in the works right now. If we take a look at the fundamental, numbers here coming up before earnings, the estimates is $1.11, which that's projecting increases quarter over quarter, year over year. It's about a 5% roundabout increase quarter over quarter and 14% increase year over year, which is still following positive numbers, which we got from last quarter's earnings, because last quarter's earnings were $1.06. And they also came in quarter over quarter higher and year over year higher as well with previous earnings as well too. The revenues are also looking to, appreciate here as well. They're guesstimating about 10.06 billion, which is about 2.5 or 2.6% over year, which is still a bit of an uptick coming from the previous revenues, which were about 9.8 billion and only about 1.9% up year over year. So there are appreciating figures within the fundamental spectrum as well too.
Certainly, this is a stock that spiked down to around the $40 level back around the pandemic lows that we saw March of last year, and well, it's almost doubled since. We'll keep an eye on this to see if they can add to some of these gains they've seen over the last few days in reaction to quarterly results. Kevin, that was a great breakdown in terms of what's playing out in terms of a couple individual companies that are in the news and two that are reporting quarterly results that investors should keep an eye on. Mr. Kevin Streets joining us here this afternoon. Thanks to you, Kevin. Let's move on here, ladies and gentlemen, into, well, a quick break, and then my chart of the day up next here, ladies and gentlemen. After this short break here, we're going to take a look here, guys, at, well, more stocks, more. We're talking companies that are on the move here, ladies and gentlemen. We're talking Toll Brothers after this short break, ticker symbol TOL, and, well, investors, or I should say analyst kind comments related to. We'll be back here, ladies and gentlemen, with more of the Midday Movers here on the TD Ameritrade Network. Stick around.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
If you have questions about retirement planning, then you don't want to miss Investor Education Day hosted by TD Ameritrade. It's a full day of free insights from TD Ameritrade education coaches and experts who can tell you all about honing your retirement strategies. And the best part, it's all online. So technically, you can enjoy the webcast from the comfort of your retirement pants, also known as sweatpants. Register for Investor Education Day at tdameritrade.com/education day.
Here with your TD Ameritrade Network Market Update. Let's look at the stories making headlines this hour. House Democrats passed a $1.9 trillion coronavirus relief package, and President Joe Biden hopes to sign the bill on Friday. The package includes up to $1,400 stimulus checks for some Americans, extends pandemic unemployment benefits, and will send billions of dollars in aid to states and municipalities. The bill passed the House by 220 to 211 margin without a Republican vote. North American rail traffic rose 9.2% last week amid strong intermodal volume in the U.S. and Canada, data from the AAR showed. Carload volume slipped 0.3% for the week ended March 6th on 12 reporting U.S., Canadian, and Mexican railroads, while intermodal traffic rose 19.3%, the trade group said. The AAR said U.S. rail traffic rose 11.4% last week, powered by a 21.5% jump in the volume of intermodal containers and trailers. Carloads rose 1.1%. U.S. rail traffic is up 1.7% for the first 9 weeks of the year. And Honeywell International said Wednesday it has signed an agreement to acquire a majority stake in Fitflex, a provider of building safety solutions, for an undisclosed amount. The company said the acquisition will expand its portfolio of in-building connectivity and communications offerings. However, it also said it doesn't expect the transaction to affect its financial outlook. The deal remains subject to customary deal closing conditions, according to the statement. Shares of Honeywell are up 31% in the last year. This has been your TD Ameritrade Network Market Update. Now back to Midday Movers with Ben Lichtenstein.
Thank you, Stephanie Lewicki, and welcome back to Midday Moves at Lichtenstein here on the TD Ameritrade Network. It's time for my chart of the day. That's Toll Brothers, ticker symbol TOL. Let's get right into the move up on the daily time frame so you can see the net change and the breakout of range. We're currently up on the day by 4.75%. You can also see the well-defined trend environment to the upside as well. We're talking bottom left corner to top right corner, and as well, Toll Brothers has managed to shrug off some of those higher rate concerns that we've been talking about the last couple weeks. Take a look at the weekly time frame. You can see that, well, this move up here, ladies and gentlemen, through that $57 level back to levels we haven't seen since August of 2005. And, well, today, ladies and gentlemen, all the way up to $57.84. Now, ladies and gentlemen, at the end of February, I'm not sure if you remember, but the company reported better than expected first quarter sales results here. And, well, they've been on the move higher since. The move up comes in reaction to the company today, ladies and gentlemen, announcing a 54% increase to the quarterly cash dividend as of April 23rd. Shareholders as of, well, the 9th will receive, we're talking, looks like, I'm sorry, that's it's up from 11 cents a share, and I think it's to 17 cents. That's what it is. They said that this is a reflection of the health of our business and its strong cash generation. Last week, if you remember, they got a price target increase from Argus to 62 from 56. They have them with a buy rating. Now, the chairman and chief executive officer, that's Douglas Yearley Jr., said that they're committed to a profitable and sustainable growth and remain extremely focused on capital efficiency and return on equity. Now, the increase, he said, in their dividend demonstrates the commitment to delivering returns to their stockholders. Ladies and gentlemen, keep an eye on Toll Brothers, currently trading up on the day by almost 5% and, well, just 20 cents shy of the high of the day. Let's bring in the chart master, ladies and gentlemen. Let's bring in Mr. Ben Watson. He's joining us this afternoon for a look at a few few stocks he's got his eye on and thinks we should as well. Ben, welcome. I see Eli Lilly caught your eye, and well, I can see why. Ticker symbol LLY announced new data from a phase 3 study showing a cocktail of two of the company's drugs significantly reduced COVID-19 related hospitalizations and deaths of patients with, well, high-risk patients that have been diagnosed with COVID-19. Basically, more progress on the vaccine front. How are investors responding to the news?
Well, I'll tell you what, they've been taking this in stride with the price movement, Ben, because we saw this big rally on the stock off of this inverted head and shoulders recently. But I think really what's happening now is we're starting to see everything squeeze back together. So an expansion pattern down there at the bottom into the last couple of earnings announcements. And then we now see that once that pressure was released to the upside, now kind of squeezing back down. And I think this is similar to what we see, you know, whenever we see a breakout, oftentimes there's a little bit of dissipation of that upward movement. But price now holding this kind of center line, if you will, right around the 205 mark on this symmetrical triangle, but looking like it's trying to break out. As a matter of fact, as we've been talking here just in the last 10 minutes or so, starting to see this move more towards that diagonal downtrend line at the top of that triangle. If it does break out, I think you've got a nice clean break there at the 213 previous high that this can run to. On the other side, if it moves down, you've got a stopping point right around the 199 level and then down into 196. But notice what's also happening with RSI. RSI still downtrending slightly as price is moving sideways, although it is trying to break this downtrend line as well. And I think if we get a close near the top of this candle, you may see that RSI start to break this downtrend a little bit.
Okay, let's move on. Another stock you've got your eye on today, Sonos. They received a couple price target increases. I saw D.A. Davidson to 49 from 45. I know it's Goldman and, well, I saw Goldman up to 40 from 37. Now, this comes after the company announced a new portable speaker, the Sonos Roam, and after providing a business update at a virtual investors event and impressing analysts.
Yeah, absolutely. And I'll tell you what else has been impressing investors over this last long-term time frame has been the consistency of this trend. Some nice little stair-step moves to the upside. In fact, we see that little bit of a gap up on the earnings announcement, but now really been kind of moving in this sideways channel, if you will, in between the 3440 support, the resistance up around 4160. Price target's a little bit outside of that range. But I think what we're starting to see now is this little rally, the bounce up off that 3440, this second time gaining some traction. As a matter of fact, just like Lilly, starting to see some upward movement here in just the last few minutes. The breakout of this little range could continue it up to 4160 and beyond. Otherwise, you see it back down on that support level. But I like the way that the RSI is solidly bouncing up from right around the mid-range area, right around that 50% level, to a slightly higher high at the moment, suggesting that investors are now stepping ahead of this.
Yeah, a little bit of a different depiction in terms of what's playing out there as far as Eli Lilly and that declining RSI, but both in a very similar pattern here where we've got that well-defined upper lower extreme, we've got a bit of a range, and the way I like to think of where price is right now in terms of with SONO and also with LLY, I mean, this is price being accepted at these highs. I mean, there's zero rejection as of yet in terms of these upper levels.
Yeah, absolutely. If this were down testing that support in the 34 range, I'd be a little bit more worried about this being perhaps something like a double top or, you know, starting to build into a descending triangle, but it's not. Buyers are stepping in, pushing it up. That doesn't mean that that level of support is impermeable at 34.40, but it just means it's not being tested now.
Noted. And it's really well defined also for us to keep an eye on. Once we do get that breakout, we'll watch for energy, directional conviction one way or the other, or lack thereof. Let's talk about how, speaking of breaking down below some support here now, we've got TSM actually in a little bit of a different scenario. They had established that range that we were just talking about in terms of Lilly and Sonos, but it does look like they're taking out the lower extreme of it right now. I'd imagine it's a bit concerning for investors. Wednesday, they said, well, February net revenue increased to $106.53 billion new Taiwan dollars. That's roughly $3.76 billion US dollars. That's up from new Taiwan dollars of $93.39 billion a year ago. They said revenue in January stood at new Taiwan dollars $126.75 billion.
Yeah, absolutely. And I think this is a nice follow-on to what we were just talking about with Sonos, because you're right, breaking down through that level of support as opposed to moving up to try that previous resistance area, and it broke the support at 121.5. We get these little bit of bearish churning candles down here into the 114 range. And what's interesting to me is that this is pulling back a little bit on these revenue numbers, given the fact that we've got what seems to be, at least reporting from other companies, a shortage in the primary products that these companies manufacture, especially Taiwan Semiconductor, with having a lot of those automaker contracts, for instance. But the potential is for this bounce up off of this 114 to take price back up to that 121.5. If not, I think you got to look at that little bit of a support level down there around 108. The RSI has been downtrending consistent with price, but notice what's happening here on the bottom of that RSI. It's making very slightly higher lows as price really flattens out here. Not yet a bullish divergence, but it's getting there. It's really, really close, and I think if it breaks that diagonal trend line, we might start to see that happening here if we get a bounce off this support, Ben.
Talk to me, Ben, because what's most interesting when I look at this chart is that extreme divergence there. We're talking about in the beginning of the year, it looks like we're trading up into that just shy of 140 as the RSI was maxing out there. But that second attempt there back in the, in middle of February to March, it looks like, and that run up that they saw up to the 142.20 level, middle of February, I mean, that RSI didn't want to participate to the upside. Now we're seeing a huge slide to the downside. There's energy in this move, I think that says.
Absolutely, and you notice the color of the candles as this was moving higher into that last high, that most previous high, mostly red, a couple of green days in that range, and a couple of little gaps, a reluctant, maybe coasting higher type of uptrend. Investors that were paying attention to that divergence were probably looking at this and saying, when is it going to break that support level?
Yeah, if lower today, and it looks like they're going to, they're down about 1.33% right now. We're talking something like 8 days in a row to the downside, and it looks like only up 2, 3, maybe 4 days off that high that we saw up at 142 on the 16th of February. Ben, that's a great breakdown in terms of a few names that are on the move that you've got your eye on and think we should as well. We'll continue to watch Eli Lilly, Sonos, and Taiwan Semiconductor. Ladies and gentlemen, Ben Watson's the chart master here talking technicals. Let's check in with Oliver Rennick. He's getting things ready for this afternoon show. Oliver, what's headed our way on MOC?
To see if this market picks a direction for the NASDAQ, as we started off real strong, then kind of fizzled out, but bonds seem to have cleared the way if we're going to run. So we got an hour and we'll see how we close things up. We're going to be looking at some good charts from Jeff Kleintop here at the top of the show. We will be discussing the potential for an inflationary impact on the market. Even though today was pretty calm, everything went as planned. Of course, folks are still waiting to see what those numbers will look like once our year-over-year comparables get a little bit more prone to big beats. Dan Ives is on the show as well. He's going to give us the latest bull case for Apple.
All right, new all-time highs, Dow Jones Industrial Average. NASDAQ continues to teeter around, positive to unchanged territory. It's holding on to some slight gains right now. Indices, ladies and gentlemen, are a major focal point for many, in addition to rates as we head into the late-day close. Oliver Rennick, ladies and gentlemen, headed your way next with Market on Close. That's it for me here this afternoon. I'll be back tomorrow morning. We'll be talking futures at 8 a.m. Eastern here on the TD Ameritrade Network. Stick around, still lots to come. Make it a great trading day. I'll see you tomorrow morning.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity? We should probably harvest that.
Feel that? That's the beat of global markets, the rhythm of the world. But to us, it's the pace of tomorrow. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity? We should probably harvest that.
many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash.
All right, let's see what we got. Let's see what Jim Carrey did while we were gone, by the way. Carrey, he is our stock picker. Well, I mean, he hasn't done too bad, right? GameStop's still trying to recover over here. Went down, went back up. KOSS making another, it's good, back up in the 30s. It's a little below 60% off. Express looking okay. Still think it should to 5 sustain report. AMC just kind of trucking along also, hasn't done much. Roblox, still not tons of volume in my opinion, but it's steady. Yeah. So we'll continue to see how things shake out at the end. It looks like the stimulus bill actually completely passed. So it will be very interesting to see what changes happen. I want to say, while I was out, I was checking on some things, and I believe we saw the Treasury rate up again. Hold that up for real quick. Phone. Yeah, it did. Down to 1.514. Bottomed out at 1.56. Not letting go. So I think that is a slight signal of a benefit of the stimulus package. We're also still seeing things like cryptocurrency going up. Bitcoin and Ethereum still flying. Dogecoin still down and has been down. Still stayed up 5 cents, between 5 to 6 cents. So let's see how the day finishes out. One more hour. We are in the power hour, and looks like NASDAQ might want to turn up the field and make a late day run. Fantastic. Looks like the Dow's still at another record today, so that's awesome. Let's see what we do.
That is perhaps being established. Now, bonds, a little bit more interesting here today, as we did see some strength around the CPI. Obviously, nothing new there, nothing really alarming, and nothing unexpected. Economists have their hands around the at least trajectory for prices right now, though again, the overall expectation is that the numbers are going to start to pick up once we get easier comps on a year-over-year basis. But all this has generally been pretty understood by the bond market, so we're watching to see if there's any weakness that creeps in, to see how much the short covering is helping the bond market stay intact here. There's a lot of stories around how folks shorted bonds and were positioning for higher yields. Still kind of an interesting concept in my mind, given folks across all kinds of investor types are just loading up on bonds for ever before this year. So, okay, but anyway, right now it's continuing to find some stability, and now we test to see, is there really a potential for the market to reverse and have prices go up and yields go back down? Let's watch to see how we close the session. Bitcoin's having a nice day. We just ticked off a new record high for a moment there and then slipped back down, but Bitcoin looks like it very much wants to continue to break and find new highs. When it does, it's usually quite an event. So watch and wait for the fireworks. But again, as I've said before in the past, let's wait until we really get it for real. On the intraday, yes, this will be a new high for BTC at about 57,810. And then we'll test to see if that is for real, if it's a real breakout. A lot of things we have to rely right now just on this kind of technical price action, which we generally do here on the show. But right now there's also just kind of a gap in terms of news flow for a lot of things. The stimulus finally got done. We got that auction for the bond market. We understand CPI and inflation at the moment. Data-wise, there's not a ton, but the Fed is next week. So we have a little bit of a lull. Now, in my mind, that seems like it opens up the door for this market to tell us which direction is in the path of least resistance. Today, investors kind of defaulted back towards value and reopening plays. VYM, the Vanguard High Dividend Yields ETF, just made a high. Kind of looks like the Dow a little bit, making highs as everything else continues to chop around. Very, very different investing experience right now, depending on where you are. The market is really, really torn asunder, where some things are well off the highs, in particular expensive growth companies like Tesla, where other things like banks, the KRE Regional Banking ETF, continues to just churn out new recovery highs, up another 2% today, even while yields are coming down. So the overall shift in terms of momentum for the equity market and its rotation seems very much intact. Now, how much that will depend and work with yields is a story we don't quite know yet. Take Gap, for example, right? Gap breaking out again. It doesn't seem like there's anything that get in the way of the Gap narrative right now. It's been one of the best performers since the vaccine news came out, and looking at overall a return back towards normal. So that story is certainly compelling, and a return towards normal could help continue to bring on the prospect of inflation and expectations, which could keep the yield in the 10-year climbing. But those two necessarily don't have to go together. Let's say that we reopen, but we don't get runaway crazy inflation. Then the question is, well, how will yields respond to that? Yesterday, we heard a really important case from Mark Dow at Behavioral Macro, who was explaining that just because we've seen equity volatility to the downside where yields have gone higher, doesn't mean it necessarily has to last. Today, what we see is yields going lower and bonds firming, but we're still just having a lot of trouble following through on the momentum from yesterday. Momentum ETF is one of the worst performers. It's still okay. It's in a positive direction. But the big fade in the NASDAQ is probably not exactly what we wanted to see after yesterday's huge rally that some were calling a bear market rally. Well, one, we're not in a bear market for the NASDAQ. It's the worst performing index, but we're still just in correction territory. Still, that powerful move right at the open after CPI, and then just nothing behind it. Tesla, basically the same story. As we talked about Tesla yesterday, it seemed like it would be a great opportunity for the believers to really find this dip buying opportunity and push it back up to some impressive levels. But instead today, there's just not a lot of follow through for Tesla. Obviously, you never want to make too much of a single day, but one could tell a narrative of Tesla that shows folks saw stock that was way oversold, saw an opportunity for a bounce, but didn't want any more of it after that. So we'll see how we finish up here. We got an hour left. Let's go to Nicole. She's got a few other stock movers on her mind this afternoon, and some of the other major themes here, Nicole, as we've been looking at a market processing, basically quiet, unalarming inflation numbers, but they're also very excited about reopening too. So what's at the top of your list today?
I think the fact that we're managing to hold on to some great green on the screen, but the question is, what are the winners and for the long term? Because people love to invest in tech as they have over the last 10 years, climbing the wall of worry, the hated rally. But as we talked to the editor-in-chief of Investopedia, he said people's favorite names still remain Amazon and Apple and the triple Qs, and that the Investopedia, which actually closed its survey last night, because I said maybe your stuff is, a little backward looking, and he said, no, we just finished our survey as of last night, showed incredible bullishness. And so with that, we are finding that people are feeling optimistic going forward. It's just there's this barbell approach because it's not just tech anymore and value and the rotation that we've seen. So we've seen new highs, the Dow's at new highs again, the Russell's leading the way. It's an exciting time, and you have tepid inflation at best, right? We don't see soaring inflation, and interest rates at least are remaining low. Yeah.
Hey, Nicole. Today. Loved on the macros we've been talking about, but we got to talk a little GameStop too. I mean, it was like today everybody got ready to think about bonds and think about inflation. Suddenly GameStop roared back, stole the show, and the 2% move we see now does nothing to really portray what this experience was today watching this. What in the world?
Yeah, and you and I talked about it, right? We talked about Ryan Cohen coming in and some optimism around that. But I said to you at that time, I said, boy, this is this frenzy again, right? I mean, it's just too frenzied to not be the frenzy. And it's not only GameStop, but also AMC and BlackBerry and KOSS and Nokia. So these are the names that have had violent big moves. The GameStop story is an interesting one because it moved up and it was set to have the highest record close ever, only to then see it plunge. And by the way, it kept hitting the circuit breakers over and over again, so everybody would have to wait to get back in to try and make the trades. But it was higher, then it plunged, then it headed back higher again. And here's a look at it right now at 251. You can see it there, but it was, which really. The highs were over, 340. So it's pretty volatile and has these big violent moves. So it's not for the faint of heart, and it goes right back into that trend that we've been seeing for these names. I mean, we did have big news. We said Ryan Cohen from Chewy was coming in to help the transition to e-commerce and online sales and get away from the physical stores a little bit and using influencers and things like that, social media. But this is not that.
Yeah, clearly.
This is the Wall Street bets and the group and all that.
Right, yeah, there is just crazy stuff happening. I mean, just 350 at the highs, 180 at the 175 at the lows. I mean, you just can't really make up that this happened again. It's pretty nuts, and definitely a heads up to just, again, be careful, whatever that means. For those that have had a lot riding on the line on some of these stocks, just when you think you're gonna, go back towards where we were, the rug got pulled out immediately today, and there was no headlines around this, around trading or limitations, any stuff like that. This is just a straight up rally and then a crash. Nicole, let's shift gears though, but not too far. Post earnings, another big pop today, but fitting into a broader kind of recovery theme is the Express stock. I mean, this one also got squeezed really hard as well. We're talking about the retailer, the apparel retailer. And then today, though, another big move higher.
Yeah, and I was looking at some of the other retailers, and so the retail group overall is mixed today. So for Express here, with the move higher after its quarterly numbers, it had a smaller than expected loss, and that's sort of outweighing what they saw in the sales miss. So look at this move, 25% higher. So to your point, what a move it was. And there is this thought that they're going to be growing digital and moving to $1 billion in that area in 2024, but it's just a tough time. I mean, they're working on the Express Insider loyalty program and trying to move more to some online ideas and things like that. But it just is a tough time for these groups, and that's why they had a sales miss, and they will grow in e-commerce. But if you look at a long-term chart, which popped up unexpectedly, I didn't even expect to see it, but in 2016, it was $21.
Wow.
And today, it's up 25% and in the $4 range. So anybody who's held this stock for any length of time, they are particularly unhappy. They may like the move today, but it's got a long way to go. And as I said, they're going to be working on trying to do more in the e-commerce and digital world, but at least for now, is the good move today.
It's like there's a theme of businesses that were under threat long before COVID, managed to skate by and stay afloat and solvent during COVID, and now there's like this whole recovery thing getting priced into them, whether it's GameStop, Express. I mean, just terrible stocks for a long time before this crisis, and then now this huge kind of springboard out possibly as they can finally make some changes. So we'll see if they actually do that. And if these companies have learned from.
And if people don't return to the office or they're not going out as much, they're just not going to need this type of wear.
Right.
It's not athleisure. It's not sports. It's a little more of to go out wear or go to work. Yeah.
This is club wear.
Editor
just
pants.
It's club wear. Okay. Not technically, I guess you wear it to work. All right. Appreciate it, Nicole. Thanks for the update here. We'll see you at the closing bell. Right now, let's bring in Chris Wallace. He's the CEO and Chief Investment Officer at Von Nelson Investment Management. Chris, there's crazy stuff happening in the market again in some of these smaller companies that are kind of teetering in a COVID or post-COVID world. Investors are bidding them up like crazy, but there's also a broader theme here that's a little bit easier to get our head around, and it's just growth overall and what's happening with yields moving higher and causing this rotation in the market. So what are you looking at to see if we're going to continue doing that, or if we should still kind of stick with the themes that were not just COVID winners, but pre-COVID too, tech growth and all those things?
Yeah, no, I think, Oliver, as we've talked about in the past, growth is starting to broaden out, and we're seeing that. That's why we're seeing leadership out of early cyclicals like small cap regional banks. And there's nothing that says that's going to stop in the near term. Certainly with volatility picking up in NASDAQ and in the broader larger cap indices, that's going to present some choppy conditions. And there's no question that in certain instances, stocks have gotten well ahead of the near-term fundamentals. And so a consolidation's in order. But when you look at the underlying fundamentals of the economy, we're still accelerating. As much as we've done from a recovery standpoint on the industrial side, we still haven't put a dent in the inventory issue. So that's going to be with us for at least the first half of this year, if not into the second half. Then we're going to get the incremental stimulus that we just are passing today that kicks off, and we'll start putting additional money in households' hands starting in July through the end of the year with the fully refundable child tax credit. So I'm still pretty positive. I think we're still set up for a nice cyclical recovery. I just think what we've seen, you look at a company like Children's Place or Dick's Sporting Goods, where you're getting strong earnings and very little price movement. So a lot's been priced in. We may have to digest this, but I'm not too concerned right now. As it relates to the NASDAQ, I think we need volatility to come in. If volatility can come in, the NASDAQ can, I don't know if it'll resume leadership, but it will at least resume its uptrend. But until that happens, I think, we're still going to be selling prior winners to buy the new winners.
Chris, as far as bonds go, as a way to kind of wedge this difference in the market between those that are secular growers and work in a low growth economy and those that like to see higher rates and reflation. I see in your notes that you describe it as interest rates having difficulty moving materially higher or remaining elevated. Do we need to rethink these ways of presenting bonds now that we've had some pretty wild sessions of yield spikes without a whole lot of, we haven't had any inflationary data. Powell's just standing by exactly what he's told us the whole time, and it seems like bonds have gotten away from us a few moments in terms of market expectations. We're already 30 bips above where analysts had their year-end expectations in January.
Yeah, so I don't have any real issue with where the 10-year is today, but we're already starting to hear people call for much higher 10 years, 100 basis points higher, 200 basis points higher, and starting to price in that the short end's really going to move higher, which is going to benefit the banks. And, I really am skeptical of that. When you look at the amount of debt we've put on the economy, just 100 basis point increase across the board refinancing for both public and private, you're talking about $880 billion of incremental interest expense, about 4% of GDP. It's just not going to happen. We're already seeing the impact in the housing sector from the move we've already had. So I think people are going to have to learn to temper their expectations, both from rate increases and from a fundamental improvement, especially on the banks. The banks, while they certainly will benefit with a modestly steeper curve, until you actually raise short rates, they're really not going to be able to reprice their loan book higher. In fact, it's going to reprice lower. So I'm not bearish on banks, but I just think people need to take all of this move with a grain of salt. I think the price action and the volatility related to it in the market has a much greater impact on investor psyche than on the actual fundamentals of the businesses, both for the underperformers as well as for the winners in the last month or so.
If we take basically the trajectory on a very conservative trend for the 10-year, just drawing a line from the lows since August, not even thinking about the momentum it picked up from the start of the year this year in 2021. That line basically gets us to about 1.9% at the end of the year, Chris, if things just kind of continue from the slow, steady pace from August to December. The analyst expectations, according to Bloomberg, economists that are surveyed say we're going to be at 1.65. Are there going to be problems for the market? And if we kind of go through a hypothetical and say, okay, we do get 1.9% at the end of the year, what does the stock market look like to you if that's where the 10-year yield is?
Yeah, it doesn't scare me if it's for the right reasons. So if we get back to 2%, which isn't out of the question, and it's because of real underlying strength, and we can kind of play out what that looks like. As I've said, we've had a strong recovery, and we still have significant issues in multiple supply chains, and we're going to start to see some improvement in employment on the services side, and we're getting checks out the door now. And if we then pass a stimulus, a real infrastructure stimulus in the third quarter of this year, we already have real global inflationary pressures. There's no question about it. And for us to get inflation moving back up to 2% and a little bit higher and sustain that's not out of the question, especially if we see strength beginning out of Europe as they reopen, continued strength out of other parts in EM as we've seen a lift in commodity prices, which is very beneficial because that may resume the downtrend in the dollar. We can't forget, we've run in a 16% deficit to GDP. And we're basically funding it by printing money. The rest of the world isn't doing that. So I can see us get to a 10-year, and in that environment, it'll be very bullish. It'll continue the value rotation. Eventually, tech will catch up. I find it kind of humorous when we see the semiconductors selling off and the value rally while there's meetings at the White House about the shortage in semiconductors and the importance of IP and rebuilding capacity in the U.S. So, the cyclical areas of tech will catch up. But there's no question people were sitting in Apple and Microsoft and Google and Facebook and Amazon. And those were great winners, and those are funds to invest in a new crop of winners, even if it's shorter term.
Okay, I like the point on semiconductors, putting that on our radar as well. Down again today, despite the point here that you'd think if the economy were picking up and doing well, the semis have always been a part of that, as well as support coming from the government for those supply chain concerns. Chris, really like the details here and the specificity with what you described, what you like. So thanks for coming on.
You bet. Thank you, Oliver.
Chris Wallace is the CEO and Chief Investment Officer at Von Nelson Investment Management. We got Jeffrey Kleintaum coming up next, joining us from Charles Schwab. And also, this is fun, we're going to have the Chief Financial Officer of Roblox joining us this afternoon, too. Stick around.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it.
If you have questions about retirement planning, then you don't want to miss Investor Education Day hosted by TD Ameritrade. It's a full day of free insights from TD Ameritrade education coaches and experts who can tell you all about honing your retirement strategies.
Well, it looks like we are coming in the last 30 minutes of the day. Looks like Roblox has hit some roadblocks. Bad joke, I know. But that slow stair step up to 75, and then it just slowly drifts down. I know it's 69, just over 69. So overall, still a positive day, but not the best last couple of hours for Roblox after its initial trades. But they are probably still pleased with the day. AMC, KOSS, Express, and GameStop all up and just kind of holding steady. Looks like AMC has lost a little bit of steam here last few months. It's still holding 10. It's down on the day. GameStop is slightly up on the day after a wild trade earlier this week. Same with KOSS. 61%. Wild dips there for a little while earlier today. So look at this. Surged up over 100% and then instantly went from 40 down to 23. Got better for a few minutes and then it's kind of gone up and down. So right now it's 29. What a day. What a day for these guys. The overall market, I think, is mostly focused on the stimulus package that has passed. Overall, still up. I mean, the Dow Jones and most of those consumer stocks are looking okay because of the stimulus package. Gold is actually up, which is interesting. Not sure if that's related to the stimulus package or not. The let's see, Treasury yield. It's ticked up slightly here in the last hour or so, but nothing significant. Still down. Significant. It continues to trend down. I think it'll help stocks significantly. Refinancing the mortgage business a little back on track. It hasn't been as hot over the past month or two. And this hike in interest rates is not helping that. Anyway, let's switch back over to talking about the dollar and interest rate yield. I'm going to switch back over to CNBC. I think CNBC has better coverage late in the afternoon. Of course, we have to deal with this, the commercial breaks. So if that happens, just hang tight and they'll come back on in a minute.
About 30 minutes left to go in today's session. Let's check in on some individual market movers for you. Morgan Stanley upgrading Sunrun to overweight from equal weight today. The firm citing growing consumer interest in the solar industry and says it could benefit from upcoming clean energy legislation. That stock up almost 3.5%. United Natural Foods also jumping after posting an earnings beat. The company benefiting from lower promotions and expects to finish the fiscal year near the top end of its guidance range. That stock up 18%. And a quick check for you on the meme stocks like GameStop, which was sharply higher, all the way negative, now higher again by 5%. KOSS up 66%. Express, these stocks continue to soar. AMC is going to report results after the bell. And Wilfred, I don't know if we want to call Roblox a meme stock. It went public today. It's soaring 55%. It does get attention on some of these Reddit boards. Has some sort of overlap a little bit with the investors and the users.
But I could picture that having done that without the Reddit craze, as you say, because it's
for sure. That's why I sort of couched it. Yeah.
But definitely having a good day. GameStop has been all over the place and currently, as you say, up 3%. Broader markets up about 0.75% for the S&P. Time for a CNBC News Update. Rahel Solomon has it for us. Hey, Rahel.
Hello, Wilf. Hi, everyone. An Iowa jury has acquitted a newspaper reporter who was pepper sprayed and arrested while covering racial injustice protests. Critics of the case called an attack on press freedoms. The Senate has confirmed Merrick Garland to be U.S. Attorney General. Republicans, you might remember, had snubbed his nomination for the Supreme Court, but many praise Garland as the right person to lead the Justice Department now. In California, it was the busiest February ever for the Port of Long Beach. The surge in shipping was driven by a 50% jump in imports that more than offset a 5% drop in exports. The number of empty containers moving through the port rose by 70%. And staying in California, California now getting some much-needed rain, but apparently too much for some areas. In an area hit by wildfires last year, take a look at this. Cars clearly no match for the mudslide as they were pushed aside there. Storm warnings do remain in effect in many parts of the state. Guys, I'll send it back to you.
Rahel Solomon, Rahel, thank you very much. We have just 30 minutes left of trading. Take a look at the Dow. It's the winner today on Wall Street, up more than 500 points, tracking for its best week in the last 5 and trading near session highs, up 1.6%. If you look at what is contributing the most to the Dow's rally, it's some of these cyclical reopening plays like a Boeing, for instance, having the biggest impact. Goldman Sachs also contributing a lot. The financials have been doing well. Honeywell's up there, McDonald's, Home Depot, all adding to the Dow's gains. Most Dow stocks are higher right now. United Health, Microsoft, Apple, and Intel are the exceptions. Technology under a little pressure. Nasdaq's still higher, but tech is definitely underperforming today. It's basically a reverse from what we saw yesterday. The airline industry pushing back against the CDC's new guidelines that vaccinated people should still be avoiding travel. We'll talk to the CEO of Hawaiian Airlines next. Plus, March is Women's History Month, and we are spotlighting some of our CNBC contributors. Here's RBC's Global Head of Commodity Strategy, Halima Croft, on the women that inspired her.
For me growing up, I was really inspired by these fearless female leaders who were the first women to lead their countries. You know, whether it be an Indira Gandhi in India, a Benazir Bhutto in Pakistan, a Golda Meir in Israel. These were the women who led their countries in challenging times. They were not perfect leaders by any means, but they really were fearless. They had spines of steel, and they were incredible inspirations for me growing up.
Off session highs here. Dow's up 480 as we go into the close. NASDAQ's back to the flat line. It's been a year since the pandemic shutdown began. And as the vaccine continues its rollout, many are planning their vacations. Yet the CDC continues to advise Americans against travel, telling them to avoid it completely unless absolutely necessary, even for those that are vaccinated, garnering some pushback from the airline industry. Joining us now is Peter Ingram, Hawaiian Holdings CEO. Welcome back to the show, Peter. Good to have you.
Great to be with you today.
While I'm sure you were disappointed to see that the CDC is still recommending against travel, even for vaccinated people, do Americans care? Are they following those recommendations? What do you see in the bookings?
Well, over the last several weeks, we have seen bookings begin to improve and show some momentum week to week. So we've been encouraged by that. I think with regards to the CDC's recent guidance for people with vaccinations, one of the things they did indicate is that those they're going to continue to update and refresh those recommendations and be guided by the science and the data. And I think there's a compelling story to tell about the safety of air travel, that the message that we've been putting out for a while, that it is a very safe form of transportation. And we look forward to the continued evolution of those guidelines.
Hawaii is sort of an interesting case study, Peter, because it's so dependent on tourism. And you did that strict quarantine rule at first. And now I think you have to show a negative test before traveling to avoid the quarantine. Are you guys moving towards some form of having to require a vaccine passport, proof of vaccine to enter the state?
Since September, we've had what is referred to as Safe Travels Hawaii program, which requires proof of a negative COVID-19 test in the 3 days prior to travel to avoid the quarantine. And that has allowed us to begin to see some recovery in economic activity here, and certainly been helpful for our business after some very, very quiet, very quiet second and third quarter in 2020. The state's guidelines, I think, are also going to continue to evolve. I imagine that the state, and they have indicated this, that they are going to continue to look at the CDC recommendations with regards to whether a vaccine, proof of vaccine is sufficient to avoid the testing. And certainly, we look forward to anything that makes it that much easier for people to be able to access the Hawaii vacation. We know there's a tremendous amount of pent-up demand. A lot of people are testing right now. So we're eager to keep building on that momentum.
Peter, I note that you recently guided that you could be back to 80 to 100% of North American capacity 2019 levels this summer, which is surprisingly high. I guess, though, not the same as saying 80 to 100% of passenger levels or even revenue. What's the gap there between capacity and revenue relative to 2019 levels?
Yeah, I know when we had our fourth quarter earnings call, some people were surprised by that indication about our schedule. But candidly, we've just updated our schedule for April and through the majority of May, and our North America to Hawaii schedule is already going to be back in the high 80s% of our 2019 levels. So we are bringing back capacity. We are seeing good demand. We're still running somewhat lower load factors than we have historically, and typically, we're in the high 80s or low 90s on load factor before the pandemic. We are eager to get back to those levels. The pricing environment continues to reflect an environment where supply is a little bit ahead of demand. But we think as more people get vaccinated and are looking forward to getting back to some of the activities that they've missed out on for a full year now, that travel to Hawaii is going to be one of the ones that people really want to take advantage of.
Peter, your industry is getting more payroll support, again, in the new stimulus package. What's that going to mean for you and your workforce and your ability to hold on to them and have to avoid layoffs?
Well, we're very encouraged to see that bill get passed through both houses now, and I'm sure the president is going to be signing it very shortly if he hasn't already. What it means for us.
Hey, Peter,
is
I'm so sorry. I have to interrupt you because we do have to take our audience to Washington. President Biden meeting with the CEO of Johnson & Johnson, Alex Gorksy, who has just begun speaking. Merck CEO is there as well. Let's listen in the White House.
It's time to defeat a common enemy. Today, we're at war with COVID-19. And public-private partnerships like the historic one that we're celebrating today, well, they're a major reason that last week I was privileged enough to witness some of the very first residents in our home state of New Jersey receiving doses of our vaccines just 13 months after we started the development process. And when one of the residents at this senior apartment was asked how she felt after she was given the shot, she looked at me and replied, "Safe." I couldn't be more proud. In our new collaboration with Merck, it's going to allow us to even be more ambitious in our goals of keeping as many people around the world as safe as we possibly can with our effective one-dose vaccine. So I'm proud, extremely proud, to count Ken Frazier as an active partner as we bring our companies together in new ways on behalf of humanity. We share one common goal above all things, and that is advancing public health. So please join me in welcoming Ken Frazier.
Mr. President, I want to begin by thanking you for the steady, practical, and resolute leadership you and your administration have provided, putting people before politics and fostering an environment in which private sector manufacturing and scientific capabilities can work in healthy partnership with government to create a force multiplier in a battle we simply must win. I'm also pleased to be here alongside my friend and colleague, Alex Gorksy, to talk about our historic collaboration. The COVID-19 pandemic has affected all areas of our global community. It has created profound challenges and hardships, especially for our most vulnerable and disadvantaged people and communities. It has also shone a light on the resilience of our first responders, scientists, healthcare workers, and those providing essential community services, the real heroes of this challenging moment. At Merck, we're proud to contribute to the global response to the pandemic. Through this collaboration with our colleagues at Johnson & Johnson and the Biden administration, we will work together to enable more timely delivery of much-needed medicines and vaccines for the pandemic. Now, some observers may view this corporate partnership as the coming together of rivals. But in these extraordinary times, we are colleagues, not competitors. The funding made available by the Biden administration will enable us to adapt our manufacturing facilities for the production of COVID-19 vaccines and medicines, including Johnson & Johnson's vaccine. With the support of the Biden administration, and specifically the DPA, we will expedite the modification of our equipment. Again, I want to thank President Biden, Alex Gorksy, and his colleagues at Johnson & Johnson for their remarkable scientific achievements, and my colleagues within Merck for helping to facilitate this important partnership. And now, it is my distinct honor to introduce the man who has brought the full weight of the federal government to bear in fighting this virus, President Joe Biden.
Thank you, man. Thanks.
I want to thank you both for those words.
You know, you and I knew one another when I wasn't president, you weren't a chairman. Right. We'd ride back and forth on Amtrak. He lived in Philadelphia. I was commuting to Wilmington. It's good to see you both here. And thank both of you for your kind words. I want to thank scientists and researchers at Johnson & Johnson for the literal heroic effort that began when COVID-19 first spread and led to the safe and effective vaccine that are now being co-produced. Today, we're seeing two health companies, competitors, each with over 130 years of experience, coming together to help write a more hopeful chapter in our battle against COVID-19. I just had an opportunity to meet with both of these CEOs and with their senior operating officers and to hear about the work they're doing together to produce a vaccine substitute and accelerate what they call to take it to full finish. You know, what's clear is this is historic, nearly unprecedented collaboration. During World War II, one of the country's slogans was, "We are all in this together." We are all in this together. And the companies took that slogan to heart. For example, one automaker didn't have the capacity to build enough Jeeps, a competitor stepped in to help. Competing airline makers teamed up and they produced parts for each other and gave the American pilots, as a consequence of that, control of the skies. Today, we're seeing the same type of collaboration when it comes to getting this virus under control. I said we had to treat this like a war. So I want to thank the two companies for showing how we can come together and defeat this virus by putting patriotism and public health first. And I mean that literally, putting patriotism and public health first. Your companies have been working closely with a man you've both privately in the way over bragged about, Jeff Zients. Jeff is in the front row here. I want to thank you, Jeff, and the entire COVID team you put together for the coordination of our COVID-19 response, and Dr. David Kessler and his team at the Department of Health and Human Services. You know, when I came into office, we began working with the team of J&J to accelerate and add capacity to their manufacturing and production efforts. And it quickly became clear that Merck, one of the world's leading vaccine manufacturers, was in a position to be the partner we needed in this effort, in this wartime effort. I've not hesitated to use my power under the Defense Production Act to expedite critical materials in vaccine production, such as equipment, machinery, and supplies. And it's not just Johnson & Johnson and Merck. Pfizer, Moderna also work closely with us to help speed up the delivery of millions more doses. The result is that we're now on track to have enough vaccine supply for every American adult by the end of May, months earlier than anyone expected. And today, I'm directing Jeff and my HHS team to produce another 100 million doses and purchase another 100 million doses of the Johnson & Johnson vaccine. I'm doing this because in this wartime efforts, we need maximum flexibility. There's always a chance that we'll encounter unexpected challenges, or there'll be a new need for a vaccine effort, a vaccination effort. A lot can happen, a lot can change, and we need to be prepared. And of course, we need to match the miracle of science and the skill of manufacturing with the massive logistical undertaking of vaccinating over 300 million Americans. Already we have gone from Johnson & Johnson vaccine authorization to shots in the arm in 3 days. I was telling the gentleman we were at a facility yesterday, a veterans outreach, and there were three members of the veterans community getting shots. One was getting of each of the three vaccines, and the guy in the middle, a veteran, was getting his, and I was standing about as far away as I am from you, and standing up, and he was sitting down, and as the nurse put it in his arm, he went, J&J, just one. Well, there's millions of people who are going to feel that way and be proud to be in a position that they're an ability to get the kind of help they need. 7 weeks ago, only 8% of the seniors, those most vulnerable to COVID-19, have received the vaccination. Today, 60% of the people over the age of 65 or older have received at least one shot. And that's because this is the population that represents 80% of the COVID-19 deaths. We've opened support and supported more than 500 community vaccination sites. That's more than, and they're administering hundreds of thousands of shots a day. And for folks who aren't near a pharmacy or mass vaccination center, we're deploying mobile clinics like vans that go into places to meet the folks where they live. We're also supplying vaccines to community health centers to reach those who have been hit the hardest and suffered the most, especially Black, Latino, Native American, and rural communities. And this is important because we know we have more to do to ensure everyone is treated with equity and those most impacted get the care they deserve. On Saturday, we hit a record of 2.9 million vaccinations in one day in America. And beyond the numbers are the stories. The father says he no longer fears for his daughter when she leaves to go to work at the hospital. The children are now able to hug their grandparents. The vaccines bring hope and healing in so many ways. Again, a vaccinated American is the only way to beat the pandemic, get our economy back on track, and for us to get back our lives and our loved ones. You know, that's why the American Rescue Plan was so critical. I want to thank Speaker Pelosi and the House of Representatives today for passing the bill, and I will be signing into law shortly. This bill represents a historic victory for the American people. I look forward to signing it later this week. Everything in the American Rescue Plan addresses a real need, including investments to fund our entire vaccination effort, more vaccines, more vaccinators, and more vaccination sites. Millions more Americans will get tested, including home testing. Schools will soon have the funding and resources to reopen safely, a national imperative. The American Rescue Plan, the partnership between Johnson & Johnson and Merck, proves we can do big things, important things in this country. You know, let me conclude with this. Tomorrow night, I'm going in prime time address the American people and talk about what we've been through as a nation this past year. But more importantly, I'm going to talk about what comes next. I'm going to launch the next phase of the COVID response and explain what we will do as a government and what we will ask of the American people. There is light at the end of this dark tunnel of the past year. But we cannot let our guard down now or assume that victory is inevitable. Together, we're going to get through this pandemic and usher in a healthier and more hopeful future. So there is real reason for hope, folks. There's real reason for hope, I promise you. So may God bless you all. May God protect our troops. And may God ease the pain in the heart of so many who've lost so many people in this pandemic. Thank you, and we're going to do this. We're going to get it done. Thank you.
Mr. President, what do you plan to do with the surplus? What will you do with the surplus?
Mr. President, when will you do a press conference?
The surplus will, if we have a surplus, we're going to share it with the rest of the world. We've already decided we're going to work with the outfit COVAX. We've committed $4 billion to help get the funding for more vaccines around the world. This is not something that can be stopped by a fence, no matter how high you build a fence or a wall. So we're not going to be ultimately safe until the world is safe. And so we're going to start off making sure Americans are taken care of first, but we're then going to try to help the rest of the world. Thank you.
Is there a crisis at the border, sir?
Republicans voted for the plan. Thank you.
President Biden there just addressing the press, taking only one quick question, no follow-up questions. Of course, he followed comments from Alex Gorsky, the J&J CEO, and Ken Frazier, the Merck CEO. The president saying the partnership between those two companies was historic and unprecedented. And Ken Frazier, the Merck CEO, saying, of course, that coming together, many saw of a coming together of rivals, but in these extraordinary times, we're colleagues, not competitors. It allowed that and many other things, 2.9 million people to be vaccinated on Saturday. As the president just updated, it also just said that he would be ordering another 100 million of the J&J vaccine, of course, a vaccine that takes just one dose. The president referring to seeing someone get the vaccine administered earlier today. Let's bring in Meg Terrell to discuss the key takeaways from that, Meg. And of course, as a number of people there said, the historic, nearly unprecedented collaboration between these two companies showing some fruits.
Yeah, a lot of comparisons to World War II. You heard the president make it there between the car companies, the aviation companies, and now the pharmaceutical companies working together here. That question about surplus is really interesting because even already with the doses that they had purchased, we'll have enough for 400 million Americans by the end of July. That's more than we have people in this country. Now they are announcing an additional 100 million dose purchase from Johnson & Johnson. That's enough for 500 million people. So the implication is, and President Biden got at this a little bit, if there are new challenges where we need a new vaccination effort, it sounds like they're getting prepared for potentially needing booster shots or potentially updating these vaccines against variants. And that's leaving out the AstraZeneca vaccine, the Novavax vaccine, all of which will have data over the next few months, guys, from phase 3 trials. So we in the U.S. will have a lot of vaccines later in this year, and we will see whether they will need to use some of those for boosters, whether they will donate those to other countries, which of course need access to vaccines, guys. One last comment on Ken Frazier. You know, he is winding up his time as CEO of Merck. A nice comment there from the president saying they used to ride the Amtrak together before one was president and one was CEO and chairman of a giant pharmaceutical company. You know, he said he's not going into politics, Ken Frazier, but he sure can give a speech, guys. Back to you.
Yeah, he sounds like a politician. He'd be a good one. Meg, thank you. Meg Terrell. We've got just about 5 minutes left in the trading day. We are going straight into the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've also got Josh Brown from Ritholtz Wealth Management here as well. Mike, kick it off for us on the re-rotation. I don't know what you call it. The Dow's up 480 points. The Nasdaq's flat. So tech is underperforming. Information technology and the S&P just went negative. Why did we go back after such a strong rally in the Nasdaq yesterday?
Yeah, I don't know that it's really necessarily a deep underperformance of the Nasdaq. Obviously, we're consolidating a tremendous historic one-day gain yesterday. I do think it's a little bit less of an all or nothing, depending on the style you're doing. It's basically steady as she goes in terms of what the market has been doing, which is positioning to be in place for this economic acceleration. Everybody expects bond yields recede a little bit. Everything kind of settles down, even though we've had pretty choppy intraday volatility. You know, the equal weighted S&P, as I mentioned, is up 4% in a month, as the S&P has done virtually nothing. So, you know, it still seems as if the market is pretty comfortable at these levels, and the headlines pretty much are supportive as we go.
Josh Brown, Apple, Amazon, Microsoft, Facebook all down, you're pointing out, and Tesla as well down more than 1% now, sliding into the close. Just a one-day bounce for the Nasdaq?
I'm not sure, but I think that's not really the key point for investors. I think the key point, Wilf, is the fact that those are all down and the SPX is still at or at highs of the day and above recent highs. And you've got small cap value up 2.5%. You have the home builders ripping again. Materials break out to a fresh high. I'm looking at Boeing record highs. Like, you have enough of the market continuing to break out. And here's a stat that I found interesting. This is the most in totals, the most new highs we've seen on the New York Stock Exchange. You have to go back to the weeks after the 2016 election of Donald Trump to find a moment where this many stocks were making fresh 52-week highs. Fresh 52-week highs being made in almost every sector of the market concurrently has never been bearish. Anyone who tells you so is lying. And if you think about that setup in late 2016, when all of a sudden we had banks and oil companies and materials rallying, cyclicals, 2017 was one of the least volatile years on the books, according to my pal JC Peretz at All Star Charts. So when you look at the big picture, you become less concerned about, did tech rally today or not? Like, it's interesting if it did. It really doesn't matter that much if it didn't. So I think for investors, the takeaway is a lot of things are doing what you want them to do.
90 seconds left in the session. Mike, what are the internals telling us?
Yeah, pretty supportive, pretty strong, as you would expect based on the headline numbers. Actually, the equal-weighted S&P is up 1.1%. Look at the New York Stock Exchange advancers versus decliners. It's been running about 3-to-1 to the positive side for most of the day. That pretty much continues right now. So nothing too much in the way of a blemish right there. Also, so far in the last month or so, actually month to date, dividend growth stocks have very quietly, without anybody paying attention, are up a fair bit. And if you look at the ETF that tracks them, the Dividend Aristocrats ETF, it's up 3.7% in the last 5 trading days. So that sort of shows you people are finding their way to slightly less aggressive areas as well. The volatility index has receded down. We keep talking about that. We have had in the past 10 or 11 days about a 2% intraday range in the S&P. It's hard for the VIX to settle down too much when you have that be the case, but so far down back in the low 20s, which has not really been a problem area for stocks here, Sarah.
Under 30 seconds to go. Looks like we're going to get a record close on the Dow Jones Industrial Average, up 463 points or 1.5%. We hit intraday record highs yesterday and the day before. Didn't get a record close. Looks like we'll get that today. The strength in the S&P 500, it's everywhere except for technology. Energy is the best performing sector right now. Materials, financials, and industrials also near the top of the list. Information technology is lower, though Josh Brown doesn't care about it. The NASDAQ is also lower, just went negative on the session. It was down, it was up as high as more than 1.5%, and then looks like we're gonna close a little bit lower. Small caps are doing well today, higher by 1.8%. Regional banks are higher. A lot of the cyclical groups that are tied to the reopening of the economy and the expected growth we're gonna get from that. Also, Treasury yields a little more stable today.
I have always found it ridiculously comical when they have a giant gavel at the end of the day and they're all popping in the back. What if it's really crappy? They still clap in the back, even if it's a really crappy. So I've always wondered why they do. I'm gonna try to adjust this camera. It's way worse than the stream. Overall, not the worst day ever. What's up the names? Look at this. Well, after hours action, huh? Maybe. Close at 985, quickly back up to 1003. Interested to see what Roblox does. Closed here at 69.75. Great day for KOSS, but could have been better. Look at that. Went to 40 the day before crashing. GameStop, same. Great start. Then a cliff. And then it just kind of crept back up the rest of the day. But like they're saying, record close in the day all in the market. Can't complain. But it was kind of mixed. NASDAQ, as you can see, basically a flat day.
You know, the S&P, you know, it's kind of struggled in this area for a little while. It's had that weight of downside pressure on the growth stocks. And so we continue to be kind of hovering as opposed to really breaking out in terms of the broad indexes. But under the surface, it's telling a pretty comfortable story.
Tiffany, where are you? Growth, value, a little bit of both? How do you position your portfolio right now?
Yeah, definitely. I think that we should not be having conversations about growth versus value. I mean, listen, we're still coming out of this event-driven recession. And, you know, the difference between now and other times is that we have an expiration date. And I think that markets are really trying to figure out when the dust settles, when we do have vaccine and full distribution, what will this new world look like, right? So how will businesses change? How will work change? Really speaking about GDP, yes, we're going to definitely see some growth in GDP because we're coming out of this really exceptionally low growth environment. So with us, we're really focused on positioning portfolios, diversified portfolios, not just with a little bit of, with the core of index passive strategies, but also active management in terms of funds, and then also focused on stock selection in areas where we really have conviction around, like tech adjacent companies, tech enablers, and then also stocks with dividends as well.
Josh, you pointed out the banks, particularly the regionals, on fire. Many have been hitting 52-week highs. Many have also been hitting all-time highs in recent weeks and months, though two that haven't, Citi and Wells Fargo, do they stand out to you as still having more upside than perhaps the others that have all been so strong?
Well, you may have to live a long time to ever see Citi hit an all-time high, but you're at a 52-week high. Wells Fargo too. This is the yield curve steepening, household formation increasing, the housing market being buoyant. Really not a lot in the way of delinquencies the way we would normally see coming out of a recession. Not a lot of charge-offs, not a lot of write-downs. A lot of the reserves a year ago that started to be put in place to guard against a recession. Turns out much of that stuff is going to end up getting dropped to the bottom line in the form of profits when it doesn't get used against losses, which we really just didn't see this wave of losses that customarily you would have to contend with as a bank. So I think that's a really good point. Last thing, I want to return to something Santoli said before the bell, which is important, about dividend growth. Let me explain to you the way this whole thing works. Wholesalers all over America right now, from ETFs, from mutual fund companies, every asset management firm has their wholesalers doing email blasts and doing phone calls to people like me on the buy side to talk about inflation, because that's what our clients are asking us about. And if you want to know why our clients are asking us about that, it's because that's what you guys are talking about on CNBC all day, and that's what the Journal is writing articles about every morning. So what's the answer for inflation in a portfolio? Well, it turns out REITs do a pretty damn good job, way better than gold, but stocks that are increasing their dividends over long stretches of time and into the future are the very best protection that a long-term investor has against inflation. So that is the story being told to financial advisors, family offices, other intermediaries all over America, and that is why you're seeing flows into the dividend growers, many of which are tech, but many of which are not. And I actually think that's going to be an enduring theme throughout 2021. So keep your eye on those dividend growers. I think a lot of money is headed their way.
It's a good explanation. That is, Tiffany, if you do expect inflation. We got a CPI report today that came in line. The core CPI, what matters, actually came in a bit softer. And there's a real debate about how much slack there is still in the economy and whether this new stimulus and the growth that we're going to see is going to ignite some sort of inflation. How are you positioned that way?
Yeah, so I think that we're just really in this interesting time, and so we are positioned. We're trying to just kind of like hedge our bets, if you will, right? So Josh mentioned dividend-paying stocks. That's actually, I mentioned that beforehand. I think that's increasingly important, but really just focused on a balanced portfolio is just the most important thing. And again, focused on the long term. I think we've had a lot of investors, especially in 2020, kind of come in and really focus on these high growth stocks that were doing really well and get really excited about them. Well, now, you're seeing like the real world right now. So while it's really great to continue to pick those stocks, you really have to focus on what your strategy is. Is it short term or long term? For me, and our clients, we're not traders, we're long-term investors.
Bumble results are out. Let's take a pause and go to them with Julia Borston. Julia.
Those Bumble results coming in stronger than expected. Revenue increasing 31% to $165.6 million. The Bumble app revenue in the fourth quarter increased 47%, so growing faster than the Badoo app. Looking at the bottom line results, they're reporting a loss of 1 cent per share. It's unclear how that's comparable to expectations, but the user number also coming in stronger than expected. Users increased 32% to 2.7 million versus expectations of 2.62 million. And then looking ahead at the guidance here, the company's guidance for the first quarter in the range of 163 to 165 million. So that's higher than consensus guidance. Full year guidance also looking stronger than analyst expectations. Revenue in the range of 716 to 726 million. So that's looking ahead there. CEO Whitney Wolfe Herd saying our significant increase in revenue and paying users is a direct result of our team's dedication and agility during a challenging pandemic. Looking ahead, we remain focused on driving scale, investing in our users, and expanding internationally. We will be speaking with Whitney Wolfe Herd tomorrow morning on Squawk Box. Sarah, back over to you.
Looking forward to that, Julia. Thank you. Tiffany, I think you own this stock. What do you make of the results? The stock's now up more than 4% after hours.
Yeah, we're super excited about it, and we really expected good things from Bumble. There's really a lot of room to grow. When you look at Bumble's in 25 markets compared to Tinder, Bumble's about Tinder's number one. Bumble's about is number two. It's in 25 markets compared to 196 with Tinder. 40% of couples meet online. We really think that there is a large room to grow for Bumble. At IPO, they had about 42 million active users, so we're happy to see that's increased. They had profit actually last year. This is when you talk about Whitney and what she's been able to do as a founder, as a woman founder. We also believe this is an ESG component as well. She's doing things the right way. So we're looking kind of going into this about their plan to expand. We're happy to know that they have a plan to expand in different countries. And then also they've got Bumble BFF and Bumble Biz. So lots of different areas that she wants to branch into.
Bumble doing well, up 6% in after-hours trade. Let's get to Oracle's numbers. Josh Lipton has them for us.
So, Wilf, Oracle's reporting Q3 results are here. Earnings per share of $1.16. That's versus expectations of $1.11, and revenue up 3% to $10.09 billion. That's in line with what the street was looking for. Looking to the segments here, cloud services and license support up 5% to $7.3 billion, in line with forecasts. That's cloud revenue and maintenance fees for traditional software in that segment. The other big segment, cloud license and on-premise license, up 4% to $1.3 billion. Forecast called for $1.2 billion. Some capital return here news as well. The board of directors increasing the authorization for share repurchases by $20 billion. They also do raise their dividend. Remember, heading into this print, investors had piled in. This stock was up about 15% over the past month. So the top performer in the S&P tech sector over that time, and it rallied about 80% off that March low. Conference calls at 5 p.m. Eastern, and that's when we'd expect CEO Safra Katz to deliver her guidance. Back to you all.
Josh, thanks for that. Dan Niles was one of his top 5 picks of the year, so we'll discuss it with him coming up in the next block. Mike Santoli, take your pick, Oracle or Bumble. I mean, Bumble quite soon to report after just going public.
Yeah, and it's always a good sign when they don't miss on the first report. It's actually a big red flag when they do. And also, that stock got taken down from its post-IPO highs a fair bit, along with a lot of the other kind of emerging growth, brand new novelty stocks. So it is coming into this report in a more favorable position, perhaps, in terms of the stock reaction and setting up for it. And also, with the revenue guidance, it's like 10 times sales and, kind of break even to profitable. That's not crazy in this market that we're in terms of where some tech companies are trading.
Wrap it up there. Josh Brown, Tiffany McGee, thank you both for being here today. Bumble up 6.5% after hours. Thanks. Up next, tech investor Dan Niles will be here to weigh in on the big moves in technology and the 2 sectors he thinks that could outperform this year. We're back in just 90 seconds on Closing Bell.
All right, guys, I think that's going to about do it. Good time for them to go to a commercial break and get the Bumble results, and then we will peace out for the day. Interesting day for the meme stocks. Up, down, roller coaster, lots of fun. Most of them still ended up positive at the end of the day, except for AMC. AMC did not have the best day. Started well, went up to 12, ended below 10. We'll hopefully get a better run going tomorrow for these guys. So until then, adios.